Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, April 10th. We are here 10 minutes early because we've got CPI. In the midst of all of this volatility, all of this craziness in the global capital equity markets and the bond markets, which are probably the reason we got this 90-day pause, which has led us to rally 10% yesterday, intraday, insane. In the midst of all this, we have CPI. We've got CPI. So adding to the volatility that we've all been experiencing is the consumer price index. We get that once a month. This is going to be really important. This is the kind of core thing the Fed looks at along with PCE when it comes to what is inflation like in America. And in about 9 minutes, we are going to get the projections for what inflation looks like. And we'll see what that means for the trajectory of the market. In terms of the reaction from yesterday, obviously everyone, you can probably see, including myself, I sound a little louder. I probably look a little happier. Well, it's because the markets are up. And it's not just the markets are up and that's why you're happy, even though that's probably a big reason for it. It's that we finally got some prescription to the pain that was the insane level of tariff volatility that, quite frankly, at the bottom of everyone's heart, I believe no one actually thought we would implement the types of tariffs we implemented or that Trump announced on April 2nd. And we didn't. We didn't. Right now, the tariffs on China are pretty intense, and eventually a deal will be negotiated with that over the long term. We'll talk a lot more about that today, what it looks like in terms of China volatility. But the S&P 500 was up 10.5% yesterday, the best day since 2008, because the pause on all other countries was announced for the next 90 days, which I think will be an indefinite pause as they work on deals. We do have some updates on some of the deals that they made this morning. We'll talk a little bit about that in a bit. And a 10% flat tariff on every country except China was announced yesterday, which is why we got this momentum and this rally. Now, in the pre-markets, we're giving a little bit of that back. S&P's down about 2.8%. The Qs are down 2%. Tesla's down 3%. I think pretty much everyone could have expected this, right? Like, yeah, if there's a massive rip, you're going to give back some of those gains. Today's going to be incredibly important to see how much of those gains do we give back, or in the next 7 minutes, do we just get all the gains that we're giving back in the pre-market because CPI ends up being a lot better than expected. But in general, yesterday was an absolutely historic day. And I think everyone is feeling a little bit of relief based on all the volatility we've been experiencing over the past, basically at this point, 8 days. Good morning. Good morning. Thank you, everybody, for being here. Jordan, Samuel, KM, Gene, June, what's up? Good morning. John Smith, Todd Hall, David, thank you for being here. If you guys didn't notice by now, I got it done, dude. I got the manicure. I told you guys I had to get it done. The nails were getting disgusting. Your boy got rich again yesterday. We had to get it done. We had to get it done. So I didn't get the pedicure. I got the manicure. And let me just tell you, it felt great. It felt, knowing you're rich again, you can get your little $30 manicure. It was good. It is what it is. So if we crash today, don't blame the manicure. I didn't get the damn Saratoga water. I didn't get the Saratoga. We're not rich enough for that yet. But if we crash today, hopefully it's not because of the nails. Victor, Sebastian, what's up? What's up? What's up? Thank you, everybody, for being here today. I know everyone feels a little bit better than they felt over the past couple of days. And look, we're supposed to be used to the volatility. We're supposed to be able to have the stomach to deal with it. That's like the price you pay for being able to be up 6 figures in a day, is that you have to be able to be down 6 figures in a day. But no one likes going through it. We all have to go through it, but no one likes dealing with the volatility. And it's just nice to have a little bit of reprieve from some of the volatility. I don't think we're out of the woods at all yet, and we'll talk a lot more about why. But the biggest thing the market wanted was a 10% flat rate. I mean, that's why we went up on April 2nd when that was announced, and the market had priced that in. I mean, before April 2nd, my main take on what would happen on April 2nd is we would bounce because I thought everything was priced in. And remember, we had already fallen from all-time highs pretty strongly. I mean, we fell about 7%. Going into April 2nd, I did not factor in he would announce these crazy tariff rates on every other country. Now that those crazy tariff rates are gone, we're basically back to where we were right before April 2nd, minus some of the gains we're losing in the pre-markets, because the market had priced in 10% across the board. And that's what they got with this 90-day pause. And so now it's up to CPI in the next 5 minutes to kind of see how this all plays out. Headline CPI, the market wants 2.5. Pretty much every bank that I'm showing on the screen, Goldman Sachs, Jefferies, JP Morgan, Morgan Stanley, UBS, Wells Fargo. I mean, pretty much everything is going to come in at 2.5. Now, the previous month was at 2.8. We're at 2.5 right now. So when you go from 2.8 to 2.5, that's actually a pretty nice decline. I think the broader markets are going to be happy about that. If we come in at 2.4, we are going to the moon. I don't think we're going to come in at 2.4. That's pretty aggressive. But oil is down and shelter is down. And oil is significantly down. So energy. So I think energy and shelter should lead the downside impacts on inflation. I think if we come in at 2.6, that's okay. If we come in at 2.5, that's good. We come below 2.5, we're going to the moon, because like the market's really going to think inflation is dying. Now, the problem is tariffs are inflationary, but we're not going to have tariffs across the entire world anymore like we did yesterday before 2 p.m. It's just going to be on China, and eventually we'll get a deal with China. So I think from that perspective, the market should be happy with a good CPI report. On top of that, the other big headline this morning, if you are just joining, is the EU has officially said they are pausing their tariffs for the next 90 days in order to negotiate with the United States. So you're getting some cooperation across the world as we are less than 10% from highs on the S&P 500. Maybe these are going to be the catalysts that are going to be able to help to ultimately get the market to not care that much about tariffs. And yes, we still have 10% across the entire world. I get it. Like that goes without saying. That's what Trump announced yesterday. But again, that was priced in. Now, is that still inflationary? Yes, but the markets are able to deal with that. I mean, a lot of this was rumored before April 2nd. So the markets, that's why I kept saying I think it's priced in, because like the market knew about it. What they didn't know about is we would tax Zimbabwe 45%, right? Or tariff them 45%. And so now that that's gone, I think this 10% stuff is baked in. Everyone understands it. It's estimated inside of the earnings estimates, which are now going to start to become a lot more important because Q2 guidance will actually matter for companies, given that there's not a major tariff overhang. And I think it sets up a relatively bullish scenario. Here's my thing. Like, I think there's still obviously a bear case on the markets this year. It's just yesterday before that Trump 90-day pause announcement, it was almost assumed, I think a lot of you guys said this in the chat as well in the market open, that we were in a bear market. And quite frankly, I agreed with most of you guys outside of the fact that we would get rid of the tariff negotiations. And I think a lot of people basically believed, yeah, if we get some real deals done, we have a chance to save the bull market. If not, we're in a bear market, because you just can't have 40% tariffs across the entire world and expect that things are going to be okay. But now we don't. We don't. And because we don't, there is a real shot, I think, to save this bull market if earnings can deliver, which is what we're getting into basically starting on Friday with the bank earnings. But we also did have earnings today for TSM, if I'm not wrong. Am I wrong on that? No, we didn't. We had TSM monthly numbers come in, though. So we'll look at those numbers in a bit. But we didn't have the actual TSM earnings. I think next week we have, next week on the 17th, Thursday, we have TSM earnings. Okay, cool. So what we have in 2 minutes right now is CPI. Here we go. We got 2 minutes for CPI. Market wants 2.5%. Put in the chat what number you think we're going to get. Put in the chat what number you think we're going to get. I'll go with 2.5. I'm going to be so boring. I want to say 2.6, but I think there's a shot we hit 2.5. I'm not going to be greedy enough to say 2.4, but if we get that, that would be very good. That would be very, very. Someone said 4.5. Okay, that's a little too aggressive. If we had the tariffs in a year from now, it might have been 4.5. But 2.7. Oh, why are you guys being so bearish? You think 2.7? Bro, if it's 2.7, that'll be ugly. That'll be ugly. Let's see. I'm refreshing the website. We should be getting the number very, very soon. I'm going 2.5. We got a lot of other headlines to talk about this morning after CPI to get deeper into analyzing this tariff delay. What is the number? What is the number? Let's see. We should be getting it soon. I don't have it yet. It should be coming in literally any second. What do we got? 2.5? No, hold on. 2. Oh my God, 2.4. Oh my gosh, 2.4. Let's freaking go, baby. I should have said 2.4. 2.4. That's what I'm talking about. Pre-markets are still red, but they are giving up some of their red. You got some green candles on NVIDIA. You got some green candles on Apple. You got some green candles on the QQQ, green candles on Tessie, green candles on the S&P. It was down 3%. Now it's only down 2%. 2.4, baby. Let's freaking go. This is what we needed. We needed this desperately because we need to show that we are going to have a decline in inflation in this country, especially because we're going to get some new inflation with tariffs. So, like, we really needed to show some good numbers, and we got some good numbers. 2.4 S&P 500 right here, 535 in the pre-markets. Now, let's get deeper into the numbers and see how they got to this 2.4. I'm assuming it's shelter and energy. And energy. Consumer price index decreased 0.1% on a seasonally adjusted basis, 2.4% for the year. The index for energy, there you go, fell 2.4% in March. A 6.3% decline in the index for gasoline more than offset the increases in the indices for electricity and natural gas. The food index rose 0.4% in March, and the food at home index increased 0.5%. The index for all items less food and energy rose 0.1% in March. That is pretty much what people thought. Indices that increased were personal care, medical care, education, apparel, new vehicles. The indices for airlines, motor vehicle, used cars, and recreation were the major indices that decreased in March. Used cars, airlines, recreation, and motor vehicle decline. Now, maybe that's a sign of demand declining, which is why these companies have to lower their prices on those core products. Or that could just be a sign of, in general, inflation is coming down, which is what most of us projected, right? That there would be certain areas where we would see it come down, energy being a big one, and that's what we're getting right now. Shelter, the indices for shelter increased 0.2% over the month. Okay, so I thought shelter would go down. That one was up a little bit for the month. Energy came down 2.4%. Natural gas came down 6.3%. That, I believe, is the majority of the reason. Medical care was up a little bit. Personal care was up about 1%. Energy was the majority of the reason for why we got inflation to come down today when it came to headline CPI. 2.4, baby. 2.4. Now, look, we're still red in the pre-markets, so that just goes to show how much of a gain we got yesterday. I think the market's just not ready to give all of that gain back because there obviously are still some uncertainties, but we are reducing some of those pre-market jitters that we're getting right now. And that is mainly because of CPI. Let's get some more coverage on this. 2.4 is the headline. If you're just joining, that is a really, really solid number. We needed a number like that. Also, jobless claims. Today is a Thursday. Initial jobless claims. This is Trading Economics. That's the website that I'm using. That came in at 223. That's about 4,000 more than what was expected. Actually, no, that's exactly what was expected. The expectation was 223,000 people filing for unemployment. We came in at 223,000. So no surprises there, which is very good in the context of the jobless claims. All right, let's get some more coverage here, and then we'll keep going from there.
The under, up 1/10. We're expecting triple that number. Up 1/10. Well, that would equal where we were in June of last year. To find a lower number would be 0 in January of 21. These are definitely low numbers. Now, let's look at year-over-year perspective, shall we? Up 2.4, we're expecting 2.6. 2.4 would equal where we were in SEPA 24. You have to go to Feb of 21 to find a lower number. Now, let's go year-over-year. X food and energy, expecting 3, comes in light, 2.8. That follows 3.1. 2.8 would be lowest since March of 21. These are really low numbers. Now let's look at initial continue.
Even Rick knows they're low numbers. Even Rick, he knows that these CPI numbers are really good. Yes, the pre-markets are red. We're giving up a little bit of the big gain that we got yesterday, but forgets the stock market. Like, we just need inflation to come down, especially for future rate cuts. And this was a really good report to eventually get those June cuts.
Continuing claims, shall we? On the initial claims, we're looking for a number that would be roughly in the 224 camp, comes in at 223, very close to expectations. And if we look at the continuing claims, last month, they reached 1.903 million. And once again, they revised it away. 1,893,000 is last month. And the new number, 1,850,000. 1,850,000. That really is a nice drop. And if we want to comp the last time we were at that level, well, it would be the last week of January when we were under 1.84. So that would be your comp. You could see yields haven't moved under in a dramatic way.
It's not bad. It's not bad. Now, look, CPI did come in low. The 10-year right here at 4.308%. That is low. It's not as low as we want it to be, but still, overall, not a bad number when it comes to when it comes to CPI. Because so many of you are asking what I'm drinking, because apparently everyone is so curious, it's water. It's not coffee. It's water with ice. I don't know if I can literally show. Can the camera see that? You see? Yeah, there you go. It's actually vodka, to be honest. No, I'm just kidding. It's ice. A little Russian in me. No, it's. Oh my God! Did I just drop the water on the computer? Did you guys see that? Okay, not a lot of water fell, but see, this is because of you guys. Freaking water fell right here. But yeah, it's not. No, it's not Saratoga. It's not sponsored water. It's not coffee either. It's just I'm really digging water and ice over the past couple of days. Water and ice is I don't know. It's like a vibe. What's also a vibe is CPI 2.4%, baby. I really didn't think we would get 2.4. I thought inflation was still sticky enough to keep us at 2.5. We're at 2.4. Yeah, the CPI got me drunk, and now I'm spilling my water right here. 2.4, dude. We needed that number. We really did. Nvidia right here is still down. Pre-markets are still down, getting a little bit more of a red move on the pre-markets. I think, again, the CPI number is amazing, but I was thinking about it this morning as well. We had such an explosive move yesterday, and we're going to talk about some stats that show how insane the move was yesterday, that we're probably going to give some of that back. I mean, it's hard to imagine us not giving even a little bit of it back. So it was a good number on CPI. 2.4 is what we needed, but we also probably can't sustain like a 20% move within 2 days on the major indices. We got 10% yesterday. If we give some of that back, I don't think it's the worst in the world. Real quick, let's get a little bit more coverage on CPI and jobs data, and then we will get into all the headlines this morning, especially around these negotiations on tariffs.
Which was perhaps a pop that you saw in prior months because of front running on tariffs. That came back and was well behaved. If you look at the commodities, ex-food and energy core goods, it resumed a negative downward move. Nice help on vehicle insurance was down 0.8%, at least on the month. It's up quite a bit. And you went the other way on the owner's equivalent rent, 0.4, not as bad as it had been. You had some pop up in food prices, 1%, 1.3%, and you got an awful lot of help from energy this time around. The key here is going to be, well, this may be the calm before the storm, a lot like the employment numbers. Do you have higher inflation numbers coming through because of some of the tariffs that are out there? Real quickly on the tariffs, the market seems to think it got a lot of relief, and maybe it did. Maybe there's a change in stance of President Trump, but I'm reading a lot of the dismal scientists that say, you know what? There might have been a lot less there than you think. Our average tariffs in the country are still very high, even after that relief, much higher than 10%. Wells Fargo just sent me a note. They say the average tariff in America is 27%. I'm seeing numbers 23, 22, and they're still predicting negative numbers on GDP and surges in inflation from the existing tariffs, unless they go away, Andrew, from negotiation. To you.
And that's why the markets are red right now. So look, CPI came in really good, 2.4. However, and this transitions nicely into what we are about to talk about, there are still concerns. And those concerns are pretty obvious, which is that we are in a aggressive trade war with China that did put out a statement today. And China did say, hey, we are much more willing to negotiate with the United States. We just want the United States to be a little bit more reasonable, yada, yada. So it does seem like China's ready to negotiate. But you've got a massive trade war with China, and then you still have 10% tariffs across the world. This chart, I think, is pretty telling. Even with Trump getting rid of the reciprocal tariff rates that he put on April 2nd, we are still having some of the highest tariff rates ever. Right now, again, the average is around 22 to 24%. A bunch of different banks are expecting the implied tariff rate after the 125% tariff increase. 125% tariff increase that Trump put on China. That is up from the 104% increase that is in response to China's 84% increase that they imposed yesterday morning as well. So from that perspective, yeah, are there still some issues in this market? Of course. I just think personally, based on the momentum that we saw yesterday, again, 10% move on the S&P 500, best day since 2008. The NASDAQ, 12%. That is the second best day in the history of the NASDAQ. Last time it went up anything remotely close to 12%, which was 18%. That was back in the dot-com bubble in 2001. So we haven't had a move like that in a very long time. Now, it kind of makes sense that we had that type of a move, because if we went down so fast, if there was anything to reverse the reasoning for why we went down, aka the tariff pause, then we should have a rally to the upside. But even in the midst of that, like, people are happy if they could get 10% from the S&P 500 in a year. I mean, and a lot of us, based on the volatility that we've been experiencing over the past couple of weeks, we started realizing, like, yeah, this is why last year a lot of people got triple-digit returns. I think, and Peter Lynch is one of the goats because 29% for 13 years straight, or whatever the metric is, 30% for like 15 years, whatever he did, is really hard to do, right? Because you can barely get 10% sometimes for the S&P, because you have years like what it seemed like 2025 was becoming, where you just get a massive drawdown and it erases a lot of the gains from the previous year. So being able to CAGR an average much above 10% is very exciting. And you start to become really well respected if you can do that. Yesterday, you got 10% in 2 hours. You got 10% in 2 hours. I wish this screenshot was mine that I'm about to show, but unfortunately it's not. When you get 10% in 2 hours, you can make 34,000% on your money. This person bought a 0 DTE contract on the S&P 500 for 5,100 as their strike, expiring the same day, April 9th. They paid $200 for it. It was worth $70,000 by the end of the day. I mean, just like, it's like this is the type of money that was made yesterday in terms of the volatility that happened. Also, the other screenshot I'm about to show you guys will be sad, but it's also going to be one of the reasons why we always say in the market that somebody knows. 10 minutes before Trump made his announcement on the 90-day pause, you can see a very large spike in QQQ NASDAQ volumes for 460 calls expiring on April 17th. This was 10 minutes before the announcement was made. Obviously, there were some people that probably knew there was an announcement being made. And quite frankly, the president of the United States himself told us there was an announcement that was going to be made indirectly by saying it's a great time to buy. I mean, I don't think I've seen a day where the president of the United States of America says it's a great time to buy, and then 5 hours later, it, creates one of the most insane pumps I've ever seen in the stock market. It actually works because the stock market actually does pump. And then we end the day with historic levels of momentum. The Dow Jones getting 3,000 points in a day. I mean, that's the single largest increase in a day for the Dow Jones. It is just incredible. It's just incredible to see how that ended up playing out. But I think that also adds to the fact that there's a lot of volatility still left, because just because we had a good day doesn't mean that we can't give up some of those gains. I personally don't think we're going back to the bottoms. Can we see 5,000 again? Sure. I don't think we see 4,800. I don't think we see 4,800. Was it illegal what Trump did? Yeah, I think so, dude. I mean, technically, you can look at loopholes and probably say that it's not legal to say it's a great time to buy, because if there was like an investigation, he could, Trump could be talking about anything. Granted, even if the administration is talking, the president is talking about buy anything, that, can be interpreted as advice, all that stuff. But who's going to investigate him? It's not going to be the SEC. Right? Like it's not going to be his administration. So it's one of those things where yes, I agree. It is sad. It is not something that I personally want to see, but it happened. And the fact that we're living in this world where that happened, I think is just insane. I think it is absolutely just insane, but all we can do is kind of adapt to how this is playing out. Now, we do have some updates this morning in the context of the deal. So here is Hasset. He's the National Economic Council advisor. He was on CNBC this morning, and he explained why they did the pause. Now, what's really interesting is he was on an interview on Fox and Friends a couple of days ago, and he was asked, will there be a pause on the tariffs? He said no. And then that got interpreted into a 90-day pause outside of China. That ended up being fake news. The White House said, we're not considering that. A day later, that ends up being the headline that creates one of the single greatest moves we've seen in the stock market ever. Which begs the question, A, did the White House see the fake news headline and how the market pumped because of it? And they said, all right, this is what we're going to do. Or B, did the market know that the Trump administration was going to do this 90-day pause? They were just a couple days early. And as a result, if you traded it that day, it went the wrong way. If you traded it yesterday, it went the right way.
How much of the decision was led by, in terms of to pause yesterday, was led by the bond market and what you were seeing there and anxiety on that front?
My view, and I've been on the show for 20 years, right, is always to just shoot straight. My view is that they're very, very close. It could well be that the announcement that came out yesterday was going to happen anyway, because there were so many deals teed up. There was a discussion about whether a general pause or a few deals that are just about finalized are the way to move to the next step and to make it clear to markets that we're serious about the strategy that we're following. And I think in the end, everybody decided as a team, all the way from Peter Navarro to whoever else you think is on the other side agreed to do it this way. And I think, the fact that the bond market was telling us, hey, it's probably time to move, certainly would have contributed at least a little bit to that thinking. But it wasn't the bond market that made a panic move, because there was a very systematic, well-planned move that was just about to happen. It just turned out to be at the same time.
Right. No.
Okay, so I think he's wrong here. At least I don't believe him. So what he's saying right here is, hey, we didn't look at the bond market and we were going to do this strategic 90-day pause, whatever, irregardless of what the bond market was telling us. I think that's wrong. I don't agree with it. This was the bond market at 1201 when the Trump administration put up the 104% tariffs on China. The 10-year was up 5%. The 30-year was up 7%. That could have created one of the largest credit crises. Is that how you say crises? Is that the plural of crises? I don't know, but it would have created one of the largest credit events ever in the history of this country if we had let bond yields continue to spike. We would have seen hedge funds implode. We would have seen countries potentially implode, especially those that are heavily levered against our debt. At least their central banks would have had to do some really unique monetary policy to be able to get out of that mess. And I think Besant went up to Trump and he said, hey, I've been doing this for a while. We are going to have a financial collapse if you don't get rid of some of these tariffs. And I think that finally got through to Trump, and that made the decision very clear. Now, is there a world in which the Trump administration was planning to do some type of pause? Yes. I think so. I think they because in my heart of hearts, I don't believe that they were going to actually create 45% rates against South Africa, right? Like, I think that was inevitably going to be paused or at least taken back. Was it supposed to happen yesterday? I don't think so. I think if the 10-year and the 30-year didn't spike the way they spiked, which again, if you were up at 3 a.m. 2 days ago, people were scared shitless when that was happening. That's what I think caused the move to happen yesterday. If that didn't happen, I think we might still have these tariffs. But as a result of the bond market, in my opinion, that is why these tariffs are now paused.
The reason I ask about the bond market, Kevin, is as this plays out over the next 90 days, and we all watch the bond market as well, and I imagine you folks will too, if we see a spike in the bond market in a similar way to what we saw, in the last 48 hours prior to the pause, how you think that changes the negotiations, or if it does at all, and also how our allies or folks who may not be our allies or negotiating against us on tariffs are going to be thinking about that bond market.
Well, I think that you can think about there being two phases. Phase one is going to be where we demonstrate the truth that with the guidance of Susie Wiles, the Chief of Staff's office, that we've set up a process so that these negotiations can proceed in a very orderly, well thought out fashion with timelines and so on and priorities. And again, there's a big meeting about that with senior cabinet officials today here in the White House. And then once we show you, well, here's how we're doing it, then I think that'll be very reassuring for markets, because I understand not only are they serious, but we can even see the schedule and we can see the priorities. So the priorities make sense. And then I think that the second phase will be when you start to see the actual deals and see the characteristic of them, and they say, oh, not only are they talking about it, but they're delivering. And oh my, that thing they delivered is really great for American workers. That second phase is going to be much faster than you might think, because basically we've got a few deals that we've been working on ahead of this that are really, really well advanced.
Kevin, I think that's a big part of the question, what those deals look like. I mean, there had been questions asked because even renegotiating NAFTA took 2 years to do. Are these just kind of straight across the board, bring tariffs down here, cut these non-tariff barriers? Is it a formula that's kind of working, or is every country different?
Well, in the end, the asks are going to be put forward by the president, guided by the same trade team that got us to this point. And I think that the asks will be sometimes extremely clear to the public, and sometimes they'll be quiet things that involve things that people don't even talk very much about, involving military matters or so on. And so it's an all of the above approach to make the relationships between our countries much stronger than they've ever been before. And I'm really highly excited about it. It's going to be a heck of a time. And when you talk about timing, when I talked about, 60 days, 90 days, the book Around the World in 80 Days kind of ran into my mind. And I'm thinking, well, if we say 90 days, then let's shoot for 80 days. And I think that when I look at the schedules that we're getting ready to debate and talk about, I think it's very doable, very doable.
Now, Hasset went on to say in that interview that they have 20 different countries that they are currently knee-deep in negotiations with. So one of the things I think we can see over the coming weeks is a flurry of announcements by the Trump administration saying, hey, we launched a deal with these guys. We got to deal with these guys. We got to deal with these guys. And like every other day, you could see headlines around new deals, which the stock market's probably going to love. The bond market's probably going to love because that means it's not going to be as inflationary. And overall, it could be this world in which Trump takes credit for a lot of the deals that end up being made. But obviously, those deals have to happen in order for the market to start getting excited for them. Now, the question I asked in the chat, I think is going to be the number one question that people are going to be talking about today, which is, was the pause that created one of the single biggest moves in the S&P 500 since 2008, was it the art of the deal by Trump? Or was it him capitulating based on the bond market saying, we're going to have a recession if you don't do anything about this? Or was it a little bit of both? My answer is a little bit of both. I think to some respects, there was, let's be as rough as we want to be with these countries, and then we'll walk it back, but we got to get them to the table. I think that is a bit art of the deal. But I also think if the bond market did not go up, rates didn't rise the way they rised last night or 2 nights ago, I don't think Trump would have capitulated this easily. I don't think we would have got this 90-day pause, because I think he would have liked if yields were steady while he was still going through these negotiations. So I think it's a little bit of both, but I think a lot of people are polarized right now on like, what was it? Was it art of the deal? Was it just pure Trump not knowing what to do? In my opinion, it's a little bit of the both. Yesterday again was a 9.5% 2% close on the S&P 500. It was the 8th best day in history, best day since 2008, and the 8th best day in history. April 9th is going to be one of those days people don't forget. It's going to go down in the history books. And what's really going to suck, or what's really going to be amazing, is if you sold on April 8th. I mean, there's a lot of people yesterday. There was a lot of heartbreak of people that sold on April 8th, which ended up for now being the bottom. And it just hurts, dude. It really hurts when you go through all that volatility and then you say, you know what, I can't take it anymore. I'm out. And then at that moment, everything changes. It is deeply, deeply painful. Now, having said that, if that wasn't the bottom and we're heading much below 4,800, back to the 4,500 range, which is what a lot of people thought we would head to with these tariffs, then you probably still feel smart. But even in the midst of that, you would have wanted to probably sell S&P at 540 versus 480. And so this is why the stock market is so unbelievably ruthless. It's emotional. I mean, it like, you feel like you're on top of the world one day. The other day, you feel like the world is completely crushing you. You feel like the bottom's falling out. This is the nature of how this volatility can really affect people. I think one thing is, if you didn't sell and you just stayed the course and you DCA'd, as boring as that is, that, it historically has worked over the long term, and it is working right now. But yeah, yesterday was an incredibly emotional day for a lot of people, either to the upside or to the downside. Well, one thing is true. If you were a short, you got screwed yesterday. If you were a short, you got screwed yesterday. And maybe you get some momentum as we see some downside pain if we continue to like see serious volatility. I think we'll see volatility. I personally don't think we're going to get back to 480 on the S&P. Maybe we do. That would need another 12% decline. I mean, I think it would be hard to get there, but I mean, it would be easy to get there if Trump screws it up. But I would be hoping, after all this volatility and what he saw in the bond market, that he wouldn't screw it up like this again. So yeah, if you were short yesterday, it sucked. If you were long, or if you DCA'd heavy April 2nd to April 8th, you're probably pretty happy. Now, what we're seeing right here on NVIDIA is at 110 down about 3.6%, Nike's down about 3.3%, Google's down 1.8%, Apple's down 4%. Again, I don't think yesterday was a dead cat bounce. I really don't. And the reason I don't think it was a dead cat bounce is because I think we had a fundamental narrative to change what's going on. The narrative was tariffs are going to create inflation and stop growth. That narrative is now changed to a big extent, even if not fully, because the tariffs that we thought were going to be in place are not in place. That to me is a fundamental piece of reasoning for why we rallied yesterday and why we had the velocity of rallying that we had. Could that be a dead cat bounce? Yes, it's possible, but also that like 540 to 570 on the S&P 500 when we reclaimed the 200-day moving average, there was nothing fundamental about it. It was just like people started feeling a little bit better about the markets, and that's why we got some excitement. Yesterday was fundamental. It was a lot more fundamental than anything we've seen, in my opinion. So it's hard for me to say it's a dead cat bounce, but I mean, it could be if we get some different headlines. I just think if the bond market continues to be as aggressive as it is, then it's going to be very hard for us to see a meaningful retracement from these levels. Now, in terms of technology and tech earnings, we got Dan Ives right here talking about what this means for tech companies. Bearish on what this has caused for tech companies, aka their earnings and their estimates might end up being affected a bit more heavily because of these tariffs, but he remains optimistic that tech still will outperform over the long term.
From Altimeter Capital on our air yesterday, he said the pause, it gave tech CEOs, it gave tech companies a framework that will let them move forward and kind of ease some of the questions about what's going to happen next and ease a lot of the uncertainty. Do you agree with that, take?
I mean, look, I think there's a framework, but the reality is that there's mass uncertainty. And I think you could still have 10 to 15% CapEx large purchases that ultimately significantly get downsized or at least get paused. And I think that's the issue here. I think tech is going to be very volatile going into earnings season. I think a lot of these companies either don't give guidance or give very general guidance. I think that's just the reality of what's happened. You've set a storm in motion. We came off the cliff, no doubt, very positive for big tech, but we're still, I think, only a quarter way through this.
Well, I mean,
so it's interesting, right? Dan Ives, a lot of people call him a perma bull. He turned super bearish on the tariffs. Now a lot of the tariffs are gone for at least 90 days. He's still not that bullish. So it's not like he completely flipped and he's like, all right, the party is still at 9 p.m. He's still realizing that earnings are going to suffer or at least be mitigated to how good they could have been based on this volatility. And we're going to have to live through earnings over the next coming weeks to see how the market ultimately interprets it.
absolutely. A lot of these stocks are still well off their 52-week highs. What do you make of the rally yesterday and the pullback today? Nothing really fundamentally changed from yesterday. Why do you think we're seeing such a sharp pullback today? We're looking at NVIDIA shares down more than 3.5%, Microsoft pulling back about 1.5%. We're going to get to your Microsoft call in just a minute.
It's like being in a storm, and then you come out in a hurricane or a tornado, and you come out, what's the damage? The damage is real. I mean, uncertainty. I mean, we talk to so many out there in the field, in the US, in Europe, across Asia. And I think the reality is like this has created a lot of uncertainty for the tech world. But China is the hearts and lungs of the tech world. And those tariffs are going to continue to increase. And I think that's the worry here, is that you're playing with a third rail issue when it comes to China. And that's what from Apple to NVIDIA and the rest of the tech.
All right, let's get to your Microsoft call. You lowered Microsoft's price target from 550 down to 475. Part of your thesis is that tech spending, CapEx spending related to data centers and everything is pulled back 10 to 15%. And you're saying that's conservative. Mm-hmm. Why? I mean, the tariffs, if we're being fair, and Brad Gerstner pointed this out, they've only been in place for about a week, maybe 10 days. And we had some insight they were going to come. What has fundamentally changed so much that you think spending is going to pull back 10 to 15%?
CapEx plans are paused. I mean, from a large.
But why don't they just restart? Isn't that the whole thing?
Because ultimately, it's like once you start that snowball, you can't just stop it. And then when you look at it, it's still paused, but then it all comes down to China. China is the epicenter. How many companies are exposed to China? On the tech side, it was from when you think about shipping, what's coming in, parts. If a CIO ordered something, it's $100,000. Is now they paying another 100? Is it going to be double? So I think that's part of the issue. When it comes to Microsoft, and you'll see this with Google, you see with Amazon in terms of hyperscaler spending, I think it's paused a lot of what we're seeing.
Well, let me push back on you. You're saying it's paused, and you're saying it's primarily because of the China tariffs that, again, have jumped up to 125% right now. But if there's a deal made with China, the president seems to be very confident that he can make a deal. Does that change the whole outlook? Does that go back to boosting CapEx spending? And then how do the sector tariffs and the metals tariffs, how do those impact?
Yeah, it's a great question. Well, first off, I think at this point, Street's going to look at June quarter is basically a mulligan. In other words, June quarter is going to be very, very soft. And I think investors will look to any sort of sign of a China deal and a de-escalation. To your point, the reason we haven't downgraded one tech stock, we've lowered target, is because my view, it's going to be the COVID playbook. You throw out 2-3 quarters, you look at 26 earnings, and you look at a worst best case, and that's the way that you pick the valuation of the winners.
Let me ask you something that I'm sure you're at least beginning to think about. So a lot of these big-time tech CEOs, they were at the inauguration. They've been going to meet with the president, and the president's been very proud to say that they're going to increase their spending, like Apple increasing its spending here in the U.S. If they pull back, does that raise the risk of them drawing like the ire of the president and maybe an administration that's not so friendly?
Of course, because the reality is all those projects that you're talking about in terms of Stargate and everything else and some of the app projects, how are you building that? Where is it coming from in terms of the products? I mean, it comes down, China is the epicenter. So it comes down, the unintended consequences here are key. And look, big tech, they're caught in the middle. And I think they are still trying to get their grasp. Apple's not flying 4 airplanes of iPhones if they felt that they were ahead of the game. It's a game of high stakes poker, tech caught in the middle.
All right.
So what he's saying about Apple is one of the craziest headlines I've ever seen, but this happened 2 days ago. Apple quietly shipped 600 tons of iPhones, around 1.5 million units from India to the US in recent weeks. Now, India is 20% of US iPhone imports, which is, 1/5 of their imports is a pretty significant amount. The fact that they shipped all those iPhones out of India to avoid the tariffs means that obviously the tariffs are still affecting the companies, which is what Dan Ives is talking about, particularly Apple and Amazon. Amazon got a price target downgrade from 265 to 230 by JP Morgan, particularly because of the tariff overhang. And as a result, companies still have to react to what's going to happen with these tariffs. So I think the caution from Dan is needed, because I don't think we can get back to euphoria bull market like everything's great, because again, we still have about 20% tariffs across the entire world on that average rate. And we're still in a trade war with China. Now, granted, we are bringing in some money from these tariffs, right? Which should be able to help in the context of the deficit. But that doesn't matter as much in the context of consumer confidence, because if the tariffs make products more expensive, that's where Dan is getting a bit more bearish on what the consumer is going to be able to do. Also, can Meta, Google, et cetera, actually invest the level of AI capital expenditures that are needed if there's going to be lower consumer confidence, or if there is going to be more pressure on their margins? I think there's two reasons we can push back against the argument for why CapEx spending would go down, which is why I think NVIDIA still is cheap right now. The first reason is that it's an AI arms race, right? This is what Jose talked about yesterday, which is that regardless of what happens in the macroeconomic environment, companies realize this is a once-in-a-lifetime opportunity. And if Meta is buying the latest chip from NVIDIA and Google's not, Google's got to really think that they have a competitive advantage outside of not having the best chip when it comes to beating Meta in the AI race. Same thing with Microsoft, which is why they're going to have to spend. And so from that perspective, there still should be a significant amount of spending. I wouldn't expect NVIDIA's guidance to go down anytime soon, just because of the tariff volatility, unless the tariffs are actually affecting their export controls, which as of now, semiconductors are exempt from tariffs. And so we shouldn't necessarily feel that. Number two is that Google last night actually came out and they reiterated their $75 billion number. So Google reiterates $75 billion CapEx spending in 2025 for data centers amid the tariff woes. Sundar Pichai said right here yesterday in a note to employees, in 2025, we plan to invest around $75 billion in total CapEx. This investment will be directed towards our servers and data centers, which include powering our AI compute and cloud business. So you got Google saying, hey, even with all the craziness that has been happening with tariffs, we are not going to stop our spending when it comes to tariffs. And so 75 billion, I would imagine Meta's probably not going to stop spending. I would imagine Amazon, et cetera. All these guys, even if they take spending down a little bit, the majority of what they care about when it comes to CapEx, which is realistically building out these data centers for their next decade-long ambitions in AI, I don't think that goes away anytime soon. And the biggest companies in the world, even in a downturn, have the free cash flow and net income, the share buybacks, everything they need to do to still be able to justify that type of spending. So from that perspective, I don't think the AI trade is messed up because of tariffs, and we got a big relief yesterday. But I understand Dan's necessity to be cautious here, given we are not out of the woods yet. Trump just tweeted. He said, "Great news! The big beautiful bill is coming along really well. Republicans are working together very nicely. Biggest tax cuts in USA history. We are getting close." All right. So that was the latest tweet by Trump just now, basically saying, hey, we're getting close to getting these tax cuts to be permanent. The bill is not passed yet through Congress. I still think it is working to get through the House. It got through the Senate a couple of days ago, if I'm not wrong. So eventually getting that bill passed will also bring a lot of clarity to the markets. The one thing it won't bring clarity to is how we're going to afford the tax cuts, which, Trump says tariffs, but it doesn't look like we're having these mass tariffs anymore. So those are still the looming questions that I think matter. And obviously they matter for the deficit as well. And so, which matters for the bond market. Like all of this is interconnected, and that stuff is not going away anytime soon. But the overarching claim that tariffs are going to ruin everything, at least for the next 90 days, we have a little reprieve. And my belief is that those 90 days will turn into an indefinite pause, because we will hopefully get enough deals. Yesterday at 12:57 p.m., Goldman Sachs put out a headline and they said, we are moving our baseline case for 2025 to a recession. We now expect the U.S.'s effective tariff rate to rise by at least 20 points, and we are forecasting a recession with a 12-month probability of 65%. We think the White House is unlikely to quickly reverse most of the new tariffs, but our probability of recession would decline if it does. 73 minutes later, USA, President Trump announces 90-day pause, reverting to our non-previous recession baseline. Signed, Goldman Sachs. They write, President Trump has announced a 90-day pause on the additional country-specific portion of the reciprocal tariff. This leaves in place all prior tariffs and the 10% minimum portion of the reciprocal tariff, and we continue to expect additional sector-specific tariffs. As a result, we are reverting to our previous non-recession baseline forecast with GDP growth of 0.5% and a 45% probability of a recession. So you had Goldman Sachs do the quick flip. CPI was 2.4 for those that are just joining, which beat expectations of 2.5. But you had a lot of other banks that lowered their S&P 500 targets, again, from the average, which was close to 6,500, all the way down to around 5,500. I'm not saying they're going to increase them back to 6,500 anytime soon, but the probability of 6,500 feels more possible than what it felt like yesterday. I mean, we're basically at 5,500 right now, based on where we closed yesterday at 548, right? So it's like all because that's a 10% move, and that's what analysts were expecting based on the tariffs. We got that 10% in 2 hours. Now, if we don't give all of that away, then we've made some good progress. But still, I would imagine a lot of the larger equity research firms are now taking a look at what Trump announced yesterday, and they're probably making a little bit of a pivot in terms of how they think about these tariffs. I don't think we're, again, out of the woods, but it probably is going to change a lot of estimates coming across the board. Now, in 90 days, if we get further pain and volatility in regards to not only the tariffs, but new things that we haven't even thought of that Trump says he wants to now pursue as his agenda, obviously that's not going to be good. And I think that has to be, to an extent, part of everyone's models when we're trading in this environment. But as of now, it looks like we're getting a little bit of relief. Here is Amazon CEO Andy Jassy talking about the impacts of tariffs as well. Let's get his thoughts, and then we'll keep going from there.
Exclusive interview with Amazon CEO Andy Jassy out with his annual letter today, and there's so much to talk to you about. Couldn't be more thrilled to talk to you, especially right now. We have the CPI number. You don't focus so much on these. I mean, how often do you look at that number and think this is going to change the direction of my business?
Not that often.
Not that often, but I imagine you do when it comes to tariffs.
We look at all the things that could impact consumers and customers.
So what is going on right now in terms of the way you're thinking about the tariff position? Obviously, the China piece of it is still on, and a huge portion of your sellers and other and manufacturers that are selling through Amazon manufactured in China.
Well, it's hard to know what's really going to happen. You know, there's a lot of flux right now, and what we're going to spend time on, where we spend all our cycles trying to figure out how we have the right customer experience. So we know customers care a ton about selection. We're going to try and do everything we can to keep prices as low as possible for customers, and we're going to ship things as quickly as possible as we can for our customers, and that's what we're going to spend our time focused on.
There have been some reports that you've already started to cut back, though, in terms of buying certain product from China. Is that true?
Well, what I would tell you is whenever you have any threat of any kind of discontinuity, as a team, you have to think about what are the things you can do to help customers. And so we're doing everything we can to try and keep prices the way they've been for customers, as low as possible. And so we'll do things like we've done some strategic forward inventory buys to be able to get as many items as makes sense for customers.
Which is inflationary, right? Like if they're buying all this stuff ahead of time, obviously that'll create some inflation. That's also another reason this 2.4 number surprised me, because we did have a decent amount of companies pulling forward, aka importing before they needed to avoid the tariffs, but still we came in at 2.4%. And so, yes, that number can go up next time because of the tariffs being inflationary, but at least it's not going up from a baseline of 2.8, 2.9. Now it might be going up from 2.4.
Customers at lower prices. And there are some cases where we have deals we were negotiated that weren't done, where we'll renegotiate terms to make it easier for customers to have lower prices. So we're going to do everything we can to keep prices as low as possible.
Are you seeing, by the way, any pull forward in terms of folks saying, I need to buy? My son just yesterday, who's been desperate for a new laptop, said, Dad, maybe we got to buy the laptop now because it could cost a lot more later.
You have a smart son. How old is he?
14.
Oh, my gosh.
It always, this is just a personal thing. Andrew Ross Sorkin makes like $20 million a year. Why is his son desperate for a laptop?
It always when rich people say, "Oh, my kid was like," it's like wouldn't he just get him the laptop? It just, I don't know. It just always surprises me when I hear stuff like that.
I think again, it's such little data at this point since the first set of tariffs came out, and then yesterday there was a pause. But we have seen we see people have not stopped buying, and in certain categories we do see a little bit of people buying ahead. But it's hard to know if it's just an anomaly in the data because it's just a few days or how long it's going to last. But we're going to do, as I said, everything we possibly can to keep prices low for customers.
Who is going to eat the cost, though? Because I think that's one of the big questions. How much can get passed on to the customer? How strong do you think the American consumer is right now? And how much of it gets eaten by Amazon? How much gets eaten effectively by potentially a third-party seller?
I think we'll have to see how it all plays out. But if you made me guess, I'm guessing that that sellers will pass that cost on
fully.
I think they'll try, and I understand why. I mean, depending on which country you're in, you don't have 50% extra margin that you can play with. So I think they'll try and pass the cost on. And as I said, it's so early right now, but we haven't seen any change in consumer behavior in a meaningful way yet.
Is there any change in terms of your own behavior, meaning the company's behavior? And one of the things you're doing is building data centers, for example, and having to invest heavily in that space. Obviously, there's component parts that are coming in from China and all over the world, and how you think about that, for example.
Well, every finished good that's got any degree of complexity in it has parts from all over the world. And that's been true for a while. And actually, in our AWS business, really starting about 5 years ago, we very significantly diversified our supply chain. And so we have components that are from everywhere. It's not just one country, but we have such high demand right now for AWS, and the AI growth is so significant that we don't see any attenuation in demand, and we're going to keep building.
All right, so Jassy's saying the tariffs will have an impact on our business. He talked a lot about pulling forward demand. Didn't really say that consumers are starting to pull back aggressively. He did say consumers are becoming more cost conscious. Obviously, Amazon is one of the websites where the cheapest goods ever are available to be found and purchased. And so Amazon, he did reiterate his commitment that they're going to try to keep prices low as much as they can. But that probably will require some level of inflation because they're going to have to buy a lot of stuff. Amazon Basics, I think, is their core brand that sells like all the off-brand white label batteries and suitcases and random stuff. They're going to have to import a lot of that stuff soon, or else they're going to have to pay a lot of tariffs on it from wherever they manufacture it. They probably are going to have to already pay tariffs on it given they're in effect. But I would imagine they imported a decent chunk in the past month before the tariffs went into place. So I think that is still going to be a headwind that exists on Amazon, which, yes, is an issue for the overall Mag 7 trade. I wonder how much it's going to be an Amazon or Apple issue versus a NVIDIA Google issue. Again, Google and Meta theoretically don't have exposure to tariffs the way Amazon and Apple do. But obviously, advertising demand can go down, which is Google and Meta's biggest business, if the tariffs have an impact. So that's where they're impacted from it. NVIDIA's demand could go down if all the hyperscalers don't want to spend that much on CapEx. Again, Google reiterated they're going to spend $75 billion. Amazon's got to reiterate they're going to keep spending. But if they have to incur some costs because of tariffs, that's going to be a little bit more of a tricky situation in terms of how much can they spend. And then what can they guide for spending in 2026 if the tariffs officially are stagnant for the next 4 or 5 years. So yeah, I think more and more guidance we're going to start getting from these CEOs in terms of how they think about what's going on with tariffs. That was some pretty good clarity we got from Jassy to an extent, which is, hey, tariffs are inflationary. We're pulling forward a lot of our inventory to be able to deal with that, but it will have an impact is essentially what he said. And we're just going to have to deal with the implications of that impact once we get Amazon's earnings as well. And yeah, NVIDIA also has earnings. Well, again, NVIDIA doesn't have exposure yet because the semis are excluded from the tariffs. But Trump said 2 days ago he's getting ready for pharmaceutical tariffs. And once they do pharmaceutical tariffs, I imagine they'll probably do semiconductor tariffs as well. They're going to do a lot of sector-specific tariffs soon. I don't know how they're going to levy those tariffs. But I think if Trump was really smart about AI, they would completely let go of the semiconductors and just say, hey, let these guys do what they need to do as long as they continue to build in the United States, because the United States needs supremacy when it comes to AI.
So I think there's a world where maybe the semiconductor tariffs aren't as aggressive if Trump is listening to the right people and realizes that NVIDIA should not lose power because of something as stupid as tariffs, because like AI in the long term is really what matters. And hopefully that's what we see going into the future. Andrew was trying so hard to be relatable with the laptop story. Yeah, I mean, look, I agree with a lot of you guys in the chat as well that if you're rich, you should raise your kids to the point where they don't even know that you actually have money, right? Those kids should not grow up being privileged. I'm just thinking, I'm pretty sure his kid goes to a private school in like Manhattan. So like the fact is like he's begging for a laptop. I'm like, dude, he already goes to a rich ass school. Like you might as well just get him a laptop, right? It's like it was more of those stories where he was trying to be relatable to the average person, when in reality, the dude makes a lot of money. People don't know the CNBC hosts, dude, they make a lot of money. Now, the one thing is they're not allowed to trade. They're not allowed to trade, so they can't buy stocks. But the Ross Sorkins, the Joe Kernans, the Becky Quicks, these people have been doing this for 20 years. I mean, like, you can't replace them. And when you built an audience for 20 years, like, the audience wants those people. And so I think their average salary is in the tens of millions, if I'm not wrong. Like the David Faber on CNBC, like all those like people that we see every day, they make a lot of money. Like Anderson Cooper on CNN makes a lot of money. Sean Hannity on Fox. There's a lot of money if you're in these big mainstream media networks subsidized by good old pharmaceutical companies. But yeah, I think the relatability of that is what he was trying to go for there. So that's what we got from Amazon in the context of their tariffs. Pre-markets right now, are we red? We are still in the red. We got 13 minutes until we open up. Google right here down 1%, Uber down 2%, Apple down 4%. So Apple giving back some of those gains yesterday. Tesla down 3.2%. Tesla monster day yesterday, 22%. I think it was one of the top 5 days in Tesla's trading history is what we experienced yesterday. Bitcoin right here back above 81,000. It was at 84 yesterday. And then the S&P 500 down about 2.75% currently right now. Shout out to Dougie in the chat. It was Doug's birthday yesterday. He didn't tell anybody. He told me late at night yesterday. So want to give a very, very happy birthday to my boy Doug. He says, kid is begging for a new laptop. Got a new laptop 3 months ago and gets a new iPad every year. Doug is a very, very good friend of the channel. So happy birthday to him. I think he started watching the channel like early 2022. He was early Palantir as well. So he's been along for a very long time and very, very happy he continues to come back every day. And what a birthday gift he got. 10% on the S&P. Dude, I don't think I could get a better birthday gift than 10% on the S&P 500. Like, I think for the rest of my life, I don't know what a better birthday gift would be outside of like if my child was born on the same day as my birthday, right? But like outside of that, and literally outside of that, I mean, there's not much more than that. Like what else could be better than 10% on the S&P 500 on your birthday? Now, if you sold the day before, you'd probably want to go buy some Clorox stock because you're going to be stacking up on a lot of bleach if you sold the day before your birthday and we get a 10% pump. But I don't think Doug did that. I think Dougie bought the dip. And that's why he probably had a very exciting day. Dude, it was a crazy day yesterday. It was crazy. Like, it was literally crazy. I'm going to ask you guys again. I asked everybody in the market close, where were you when that day happened or when that pivot happened? I was just on my computer and I start seeing stocks go up and I'm like, what's happening? And then I see the Trump tweet and I'm like, holy crap. I didn't know it would turn into 10% intraday, but it was one of those holy crap moments. Papa K, thank you for the $20 super chat. You're doing great work. Thank you. Appreciate you. Thank you for being here on the show today. Rishi, thank you for the $2 super chat. Thanks for analysis each and every day. Rishi, thank you for being here and appreciate you watching the show. Shy, thank you for the $5 super chat. Everyone got bearish. 90 days to work out deals, maybe a tax cut while boxing in China. IDK Hopium. Also trust that Basent is taking the wheel. I agree with you as well. Thank you for the super chat. I think Basent took the wheel yesterday. Basent has seen credit markets explode. And in his time as a hedge fund manager, I think when he saw the credit markets start to act like they were ready to explode on Wednesday night or Tuesday night, which was Wednesday morning, he realized like, yeah, we're going to have an issue. And I think he got President Trump's ear and he basically told him we need to do something. And then Trump acted. And that's why we ended up getting that pause that we saw yesterday as well. Someone said driving and then I crashed when the announcement came out. Ram said he was on the treadmill. Magusto says I was waking from a nap and then I saw your tweet. Harsh was at his desk. Kelson was in science class. Dude, for all of you guys that are like 18 years old, 19 years old, you're in college right now and you're keeping up with the markets. Again, like I didn't start as early as college. I mean, I kind of started at the end of my junior year, but I didn't take it that seriously. For those that are taking it seriously and you're a freshman in college and like you're watching market open streams over whatever random YouTube videos you could be watching, it's like, first of all, you're experiencing one of the craziest stock markets ever. B, you're probably going to be a lot wealthier than a lot of other people if you're starting this early. So it's just so cool for the young generation to be exposed to this. Also, one of the reasons I think we had so much media attention around the stock market that a lot of YouTube personalities and podcasters were talking about, even if they don't care about the stock market, is because the stock market is becoming a cultural zeitgeist that everyone can't ignore. And that's definitely due to Robinhood and GameStop and everything that happened a couple years ago. But like the Trump tariffs eliminating stock market value, I think was even more relevant than the actual tariff policy itself, because that's what people wanted to talk about, not just financial media, but everyone. And so I think the concept of the market just being one of those things that people care about and potentially invest in, which is good for all of us because you've got more money in the system, is growing more and more and more. It's growing. And I think that's going to be something that a lot of the young people benefit from as well over the long term. Beneficial said, when I got the announcement, I was quote unquote working from home. Yeah, I would imagine everyone was quote unquote working from home when they when they got that announcement. But it was a hell of an announcement. It probably made you guys do some work when you were working from home. You're like, you know what? All right, I'm making money again. I can actually go do my real job. It was a really big announcement, dude. It changed everything. It changed everything. Arnie says, even in Italy, young people are investing early, which is crazy. Yeah, because in Italy and Europe, like investing is taboo. I know a lot of you guys tell me from the UK, it's weird to invest. Most people don't talk about it because it's a scary thing. You're supposed to save your money, yada, yada. So again, if you are investing, you might not be in the top 1% financially of the world, even though in the United States, I mean, technically, even if you make like 30,000 a year, you're in the top 1%. But I think you are in the top 1% of people that know how to allocate any level, or I should rather say top 1% of people that have financial literacy, if you're even in the game of investing. Because again, 99% of the world don't have financial literacy, and they don't even think it's possible to make money in the markets or understand the concept of compound interest. And I just think you go through all that pain to be able to have days like yesterday, which we might give back some of those gains that we got yesterday, but I don't know. Down 2.5% right here on the S&P 500. I don't think we give back all those gains. Now, in the chat, I asked, is this a bull trap again? 52% of you say yes, 48% say no. 48%. So still the majority of you feel this could be more trappy than not. I don't know. I don't think it's a bull trap. Do I think we could see another 4 or 5% decline from here? Of course. But I don't think today or tomorrow we just give back everything. And if we do, we've got an issue, because yields will go up if that happens, because if people are selling stocks, then they're going to be buying something else. Well, no, technically yields will go down, which is actually a good thing. So if that did happen, that would reaffirm the thesis of Trump wanting to get the 10-year to come down, but that would hurt the stock market. That would be one silver lining there, but we can take a look and see if that plays out, which I also think is a risk, because at the end of the day, they still want to refinance the debt, right? So you need to get yields to come down. But if the markets are going up, yields might not come down as easily. So that's one risk. And then number two is just, what is the nature of these 90-day negotiations? Are there actually going to be meaningful negotiations that can get the market momentum to continue to feel optimistic about the future? I think we've all figured out at this point, the market trades on perception of narratives more than narratives in and of themselves. And if the perception is that the tariffs are gone, markets have room to go higher. But we need more momentum. We need more deals to be announced to build on top of this. And I think that's what we're going to be looking for as well. Yields are up today. That is correct. And again, this is something that's still worrying me. I talked about this on the market close yesterday. I don't know what this administration's plan is on the 10-year. Like, is their plan that Jay Powell is going to bail them out and lower rates, and that's what's going to get the 10-year down? Maybe. But if their plan was to tank the markets to get the 10-year down, it was working for like 2 days, and then it stopped working when yields were going up and the market was going down. And that's what created the potential credit event. I mean, we saw credit swaps. If you owned credit default swaps over the past couple of days, you've done very well, like really well. And in 2008, you did really well because we had an entire 50% decline. But thankfully, we got the tariff announcement yesterday before we got anywhere close to some crazy decline like that. which would have sent credit default swaps to the moon. And now they are starting to come back a little bit more to normal. Doug says all of that wealth destruction, it was based on an announcement of tariffs. Zero data was collected about the actual effects of those proposed tariffs. Yeah, and I think that's why selling over the past couple of days was tough, dude. Like, if you sold over the past couple of days, it was just freaking tough to see something like this happen. Now, if you sold before April 2nd, you're still not even back to those April 1st highs, right? So technically, like you got out at the top, and if you didn't buy the dip, it no harm, no foul. But selling 2 days ago, I mean, it's just it's something that can psychologically mess people up, dude, because it's like you just don't know. And then what it does create, which is good for everyone who held, is FOMO. Because now if you can build on top of this momentum, even if you go down a couple percentage points from the very highs, you get people saying, all right, I missed 480 on the bottom. I missed Meta at 470. I missed Palantir at 65 or whatever it got to. Now it's at 85 instead of 95. I'm going to buy in. Now that the market's at 520 versus 550, I'm going to buy in. And that only leads to new capital starting to compound this momentum as well. One thing is certain, retail ended up not doing too bad. So the stat was retail bought the dip to the tune of $40 billion in the month of March, which was $10 billion higher than the largest month of gains in 2022 in regards to inflows into the stock market. Hedge funds sold at their most aggressive pace since 2010. Now, in the past 7 or 8 days of April, I don't have the data on what retail did or what retail didn't. From my understanding, it seems like the majority of retail either bought the dip or held, didn't really sell. If that's the case, the retail beat the hedge funds, because hedge funds uniquely, we have data from Goldman Sachs, sold aggressively from April 3rd to April 7th. If you're a retail investor and you just didn't do that, then you ended up being smart money over dumb money. The dollar right here is going down as well, which is actually really good for stocks like Nubank, Mercado Libre, and Grab, international stocks. It is a little weird, though. You would think the dollar would potentially be ticking up. So the dollar continues to get weaker. Again, this is the wonkiness that's going on in the currency markets. But we are seeing a little bit of a retrace in the dollar, which, again, is good for international stocks. We just have to see if that 10-year retraces with it as well. Amit, did Trump really file an appeal to the courts to fire Jay Powell? Yes, that is true. So Trump asked the Supreme Court, not literally if he can fire Jay Powell, but if the president has the executive authority to fire heads of agencies and replace them within his term. I believe there is a 20-year precedent that was decided by the Supreme Court back in the 80s around why you're not allowed to do that. And every administration has followed through with that, that precedent. Trump has filed an appeal to say, hey, can I change that precedent? Now, he didn't literally say, can I fire Jay Powell? But I think obviously we know what he wants to do if he gets authority. The problem with his appeal and why I think the Supreme Court might not pass it is because obviously the Fed is supposed to be apolitical and all these agencies are supposed to be independent. And as soon as President Trump can immediately pick who he wants to put in there intra-term, obviously that can create a lot of volatility and take away legitimacy from the trust of these institutions. So I don't know if he's going to get that appeal granted by the Supreme Court, but that is what they said. We got about 30 seconds until the market opens. Here's a quick stat. 23 times the S&P 500 has gained at least 5% in a day. A year later, the stock market is up 27% on average, more than 91% of the time. So if the S&P 500 gains about 5% in the day, 27% they are up a year later from that day, 9 out of 10 times. Maybe this is one of those days where we will be up 27% a year from now. That is really hard to see. That would be an aggressive move. But if that happens, that would obviously keep the bull market alive and well as we get into today's market open. Thursday, April 10th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Here we go. The S&P 500 falls 3% as we open on a historical day from yesterday's largest move that we saw since 2008. We were up 10.5% in a day on the S&P 500. For the NASDAQ, the second largest day since 2001. S&P 500 right here down about 2.9%. The Qs open up down about 2.5%. Again, if we are down 2 or 3 or even 4% for the day, I don't think anyone's going to complain given where we were 2 days ago. But the S&P 500 and the NASDAQ right here giving up a little bit of those gains. NVIDIA, I do have $110 covered calls, which means if I don't roll those calls, my shares get sold at 110 on Friday. Right now, we are below 110. I'm not doing anything with those calls right now. On Friday, if we're above 110, I'll roll them. But as of now, giving up some of those gains is allowing those calls to not be in jeopardy. Delta right here down about 3.64%. Uber's down 1%. Google's down 1%. Nike's down 5%. Microsoft down 3%. Apple down 5%. Tesla down 5%. The S&P down 2.95%. Bitcoin goes green. Royal Caribbean is down. Carnival's down. Grab is down 5%. Robinhood, I do have $42 covered calls on Robinhood as well. That might be pressured on Friday, tomorrow. If they're not, then it'll be okay. But if they are, then we'll have to roll those calls as well. One thing this market is proving is that given the ups and downs, the jittery of it, the jittery nature of it, covered calls are working. 2024 covered calls were not working. 2023 covered calls were not working. 2025 covered calls are working because you just can't expect massive pumps day after day after day given all the volatility. So trying to be relatively conservative with your targets, you can still collect a little bit of premium in this market based on the volatility. The Micron is down about 7%. SMCI is down 4%. Intel's down 4%. ASML's down 5%. TSM down 2.9%. They have earnings next week. SoFi was up 20% yesterday. It is down 5% currently right now. AMD is also down a little bit right here. AMD is down 5.4%. So we are giving back around 1/3 of the gains on individual stocks that people experienced yesterday. Yeah, there's NVIDIA going down 5%. And again, I think it's expected. There's no way I think we could expect another 3-4% to the upside today. But just holding the levels that we would want to see that we had before April 2nd, I think would make the market very happy. S&P 500 right here down about 3.12%. Palantir, which I did at Twitter Spaces yesterday with Chad and Iliano talking about the relationship between tariffs and software. If anyone wants to check that out, that's on my Twitter. Palantir right here is down 3.2%, $89. Again, Palantir, the lows were 66, got up to 93 yesterday, still holding the high 80s. It is not too bad in the world of Palantir. NVIDIA right here down about 4%. Uber's down about 1%. Delta's down 5%. In terms of the Max 7, Apple's down 3, Microsoft's down 2, Meta's down 2, Google's down 2, Amazon's down 3, NVIDIA's down 4, and then Tesla is down 4% here right now. We have a headline on an acquisition. Prada bought Versace for $1.38 billion. Prada buys Versace. Okay, cool. I know those are designer brands. I've never owned Prada or Versace. I'm more of a Saratoga guy. But yeah, there you go. You got some M&A in the luxury private markets happening right now. Does anyone buy Prada and Versace stuff? And are they as expensive as like Gucci and Louis Vuitton? Like, is it in the same ballpark? Prada bags are the big thing, right? That's what girls like, right? Prada bags. That's like, I don't even know what Versace really sells outside of like clothes, I guess. Wow, a lot of you saying you buy Prada. How many whales do we have in the chat buying Prada and Versace, bro? What's going on here? Casually saying you buy Prada and Versace. All right. Well, now Prada owns Versace. Open Door right here down 6%. SoFi down 4%. S&P recovering a little bit from the absolute lows. There's that green candle right there, down about 2.8%. It was down 3.5%. Snapchat, the founder of Zynga, dude, which is a company that makes games. They originally made a lot of games for Facebook. Farmville was, I think, one of their first games. I don't know how much this guy's worth. I would have to assume in the billions. But he's been buying a shit ton of Snapchat. And he's been pumping it too on Twitter. Like, he's just like, I'm buying more Snapchat. I'm buying more Snapchat. I think this guy's like 50 million shares of Snapchat. And when someone asked why, he was like, they have 450 million daily active users. That's all I care about. Which is interesting, right? It's interesting to think how people invest, because this guy, he built consumer products. So all he cares about is daily active users. He's not caring about probably any of the metrics that you and I would care about. Like, hey, what is their stock-based compensation as a percentage of revenue? I'll tell you, it's pretty ugly. But he doesn't care about that. He cares about the 450 million daily people using the product, which sometimes really is the thesis over the price to sales. So I'm not in Snapchat, but I mean, look, every time Snapchat goes to $8, it ends up pumping to 12 and then dumps back down to 8. Maybe we see that happen again. But that one right here is down about 4%. It was up 20% yesterday with the rest of the market. NVIDIA right here, 109. Amazon right here, 185. The Q's down about 2.5%. Palantir as well, 89.25. And AMD, 91.88, up from 79
yesterday on AMD. Celsius, are we green on Celsius? Celsius is green. Celsius continuing the trend of being the best hedge. Might as well say the best freaking equity in the markets. Not only did it pump yesterday, but while everything is giving back their gains, Celsius is making new highs, up 2% on the day at 38. I don't know why this stock acts like this, but it does. And congrats if you own Celsius. I mean, it really has been a hell of a hedge this year. Next decade right here is down about 4.3%. VG Venture Global, that is also down 4%. The liquefied natural gas companies did get some momentum yesterday, but they are continuing to give back some of their gains with the rest of the market. You have a bougie chat? Yeah, we do. We do. There's a decent chunk of you that said you buy Prada, bro. That means you guys were getting on me for drinking Saratoga. I wonder how many of you have a freaking case full of Saratoga in your fridge. But if I buy it, it's definitely the top again. So I cannot get that Saratoga water. Aren't we just kicking the can for 90 days? Hopefully we get a deal. So yes, we are kicking the can for 90 days, but I think the can has been kicked indefinitely, because if in 90 days, if we allow the tariffs to go into place like they did on April 2nd, the bond market's going to start crying again, and it's going to be a disaster. So I think the bond market clearly told Trump, hey, you might think you have power on tariffs, but we actually have power on how the global financial system is constructed, and you cannot impose this level of inflation, aka tariffs, because we're just going to sell off U.S. debt. We don't care how good U.S. debt is. We're going to sell it off if you create this policy. So I think the 90 days is going to turn into forever, and they're going to try to claim it as a victory by getting a lot of deals, which, yes, it will be perceived as a victory. But the reason this happened is because of the credit markets. It was probably a little bit of art of deal as well, but I also think to say it was 100% art of deal on a day when the 30-year got to 5%, no. Like if the 30-year was at 4.2, I don't think it would have been art of the deal yesterday. Maybe a week from now, maybe a month from now. But Trump had to do something yesterday, and he did. Now it's just a question of how long he continues to hold out on these tariffs. Tesla right here down 4.7%, Apple down 3.4%, Microsoft down 2.9%, Robinhood down 4.2%. Quick stat on Robinhood. Robinhood is now number 2 in the iOS App Store for finance, and it is number 24 in the entire United States in the iOS App Store. So a lot of this volatility has been really good for Robinhood. We did see options at one point. Dude, why is my battery always dead? I don't even try. At some point, it just happens. But Robinhood is probably getting a decent share of the option volatility, because the average options traded in 2025 are 58.2 million contracts traded per day. 58.2 million. 3 days ago, we saw 100 million, almost a doubling of the average daily volume traded on the day, I think, when the S&P 500 was down about 7%. So even on the volatility to the downside, that wasn't the worst thing for Robinhood, because they probably picked up a lot of new users who were interested in the markets because of all this volatility. Credit Karma is number 1, for those that are wondering. So a lot of people have their taxes that are due very soon. They're probably looking at Credit Karma to help them figure out their debt situation, all that stuff. So that one is currently number 1, but that's very seasonal. I think when tax season is done, Credit Karma will go back down to like number 30 or 40 or whatever. Robinhood has consistently been in the top 20 and really the top 10 for the majority of the year, which is a very good thing for them as well. VIX is sitting at 36. Yeah, where's the VIX? It should be up today a little bit, right? Yeah, it's up 6%. All right, so the VIX is up 6% today. It was up 28% for the month. It's up 99% for the year. Yesterday, it was down 30% because of volatility dying out on the tariff news. But it is up today as we give back a little bit of those gains. Look, if we end the day at these levels, S&P down 3%, I don't think anyone's going to get that mad. I don't think anyone's going to complain. But I'm curious to see if we actually do get head a lot lower and people just get scared and people sell into the rip. People think it's a fake rally. Or if people feel like, you know what, I learned my lesson. I tried to time it. I'm just going to get in, and it is what it is. And I'll just DCA. I mean, you know, the ironic thing that happens about a lot of these events is people try to time the market. And I'm guilty of this as well. I've done this in the past. And then you time it, you get it wrong on the timing. You buy in higher, and then you tell yourself you're just going to become someone who DCAs because you know that it's going to be really hard to time it. So if you sold 480 S&P and you're getting back in at 530, you're getting a discount, a 3% discount from what you had yesterday.
And you might feel, you know what? If it goes back to 480, I'll just DCA, because the stress of trying to time it is just unimaginable, and obviously creates a lot of toll on different people. DJT right here, that's up 2%. That is the Trump stock. That one is green. Alibaba getting a little bit of love. That's green. China is preparing for that bazooka level stimulus that they haven't unveiled yet. Reports are that coming this weekend, they are getting close to unveiling that level of stimulus. Now, where their 10-year is trading, along with their unemployment rate, you put in all that stimulus, that's a recipe not really for the greatest economy ever. It's quite frankly a recipe for disaster, because they're going to have inflation out the wazoo, especially given their GDP growth is 5%. But they might have no choice but to stimulate, which also means they may have no choice but to negotiate with the United States. Because if they want to unveil this much stimulus with as little growth and unemployment that they have, then they're probably going to have to get a deal done with the United States. Again, we are the biggest importer from China, 5x more than what they import from us. But we also need their products. So I would imagine a deal gets done eventually. It's just a question of when that ends up playing out. Time in the market, better than time in the market, 1,000%. 1,000% agreed. All right, so what are people buying? What are people buying? Or are you buying anything today? I mean, do you see this as a day where you deploy capital? Do you see this as a day where it's a dead cat bounce? You're going to wait for another 3 or 4% down? I mean, how are you thinking of this day? Are you selling calls on a day like this? Are you selling cash secured puts? Like, what moves are people making? I think, I sold calls at the beginning of the week. I'm going to let those play out. It seems like maybe I won't have to roll them on NVIDIA and Hood. In terms of new capital, not opposed to taking a nibble at some of these names again if they fall another 1 or 2% as well. I don't think we're going to get the absolute lows that we got a couple days ago, like NVIDIA 85. Do we see that again? I don't think earnings will be the reason we see it. It's going to have to be something else. So if 85, 86 becomes one of those generational August 5th types of prices, I mean, I could definitely see people getting excited to buy in at 109 if they missed it at 85, especially if you have a fair value of close to 180, 200 on NVIDIA. But market sentiment is going to dictate a lot of that action over the coming weeks. Buying SoFi, Grab, Riot. Okay, so we got some people buying the fintech names: Grab, VG, Tesla, Intel, Oracle. Micron down 8%. All right, so we got some definite dip buyers right here. Limit order on NVIDIA at 105. I love that. Sometimes you just throw out that limit order. If it hits, it hits. If it doesn't, it doesn't. DCAing on Grab, AMD, Meta. Meta at 487. Again, I saw it. I wanted to pull the trigger, but I didn't, because it was like peak fear and just like scariness. But dude, Meta at 487 was crazy. Now, could it get back there again? Sure. But now it's at 564, which I still think is not a horrible price for Meta. Like anywhere from, I would say, 450 to 600. I do believe in the next few years, Meta is going to be a lot bigger than it is today. But I'm really curious now, what does Zucks have to say about advertising budgets, right? And CMOs and how much they're spending on marketing. Like, now that you got a little bit of a pump before you decide to pay 560 for Meta, it would be nice to hear from Zucks on what the advertising outlook is going to be for 2025. And if it's materially changed, you might get a better price, right? So I do think there's going to be some hesitation from people, just because now we're so close to earnings. Why would you buy right now until you hear from the horse's mouth itself? Granted, if they have a really good earnings, maybe the stock pumps and you might not be able to even get in at these prices. But I think people would be okay paying a higher price if they have more clarity and peace of mind on what these companies say. Wow, Meta went to 469. Didn't even see that. 469, incredible. Some heavy discounts that we saw yesterday. Trump just tweeted, just out, inflation is down. Just out, inflation is down. All right, so there you go. Trump is happy that inflation is down. Now, the problem is his tariffs are going to only make it harder for inflation to come down, which is the issue. But yeah, we are seeing some level of decline when it comes to inflation. CPI, again, 2.4% for those that are just joining. A really, really nice report. I mean, I did not think we would get 2.4. And I felt like if we got 2.4, we would go to the moon. Now, granted, we're probably not going to the moon today because the market's going to get back some of their gains. But regardless of what's happening to the market, we needed a good inflation print to calm the bond market down. But we also needed a good inflation print because we need a level of margin of safety, because tariffs will be inflationary. And if tariffs are more inflationary after have that number going up from 2.4 versus going up from 2.8. And at least this morning, it seems like we got a little bit of a relief from that perspective. Here's an update on the tax bill that Trump is trying to get passed along with the congressional budget. And then we will keep going from there.
Yes. So we have Speaker Mike Johnson came out this morning and said that he believes that he has the votes to move forward on Trump's major agenda. That includes, of course, that $5 trillion package of tax cuts. Now, other members who I've spoken to this morning, it doesn't seem like necessarily a sure thing, but it seems like they have gotten momentum and made progress since last night. Remember, the main concern here for a lot of Republicans in the House is that what the Senate passed is ultimately going to add trillions of dollars to the deficit. And you saw Senate Majority Leader come out with Speaker Johnson this morning and say, you know, the Senate is committed to the House is cutting $1.5 trillion.
This is the issue, right? Although the new plan is trying to cut $1.5 trillion in spending, we're giving a ton of cuts in regards to tax rates, and we're making the tax rates that we had from 2017 permanent. So there's another couple trillion we have to find to pay for somehow. Tariffs might contribute a little bit to that, but realistically, Besant and Trump and Lutnick believe that growth is going to solve those issues, which, yeah, theoretically it should. And that's why the markets went up on November 6th, because this is supposed to be the most pro-growth administration ever. But if the Senate or the House of Representatives is not convinced that that is going to be enough to be able to deal with the deficit problems, then I don't know if they pass that bill. I think that bill probably is going to go through a little bit more negotiating before they officially get it passed, because a lot of, representatives are going to be asking, where do we pay for this from? Where do we get the money? And it's not going to be easy to just imagine that money comes out of nowhere. Amit, do you think it's time to buy the dip? Well, look, I've been buying the dip for the past couple of days, or the past week, right? And really the past 3 months. Whatever stupid dip there was, I've been deploying whatever I can. It's always the time to buy the dip. In terms of this market, you've got to just be confident here on, do you think we revisit the lows? And if you do, then it's like, so what, right? Like that's kind of the mentality you have when buying the dip. What I think is important is, was yesterday a fundamental catalyst to change the overall narrative for 2025 into a bull market? I think the answer is yes. And as a result, I think dip buying makes sense right here. But if you think the answer is no, and you think this tariff volatility is just getting started and we were in a clown show for the past 8 days and that clown show will continue, then no, you don't buy the dip, because you probably think we're getting way cheaper prices as the markets continue to price in this volatility over the coming months and definitely over the coming years. But I think if you think it'll, be resolved, then I don't think that's the worst thing ever. Amit, what's the lowest price you got NVIDIA? I think 97. I picked up like 5 or 10 shares, but I did not go balls to the wall at 85. I mean, and again, now in hindsight, that seems like that was the best price to go balls to the wall to, but it's scary. Like, it's scary for everyone. When shit is hitting the fan, it is always scary. But then you look back on it and be like, man, that was the best price. Like, if I had just DCA'd at that moment, but that's the whole concept of a DCA. It's like, you just don't know what the best price is. So 103 is not as good as 85, but when NVIDIA is 180 one day, hopefully 103 is going to look really good. And I think that's the overall concept that most retail has embraced, and that's why so far they are beating hedge funds this year. Meta right here, 569. That's down about 2.85%. The S&P 500 still down 3% on the day. And you got NVIDIA down 4%. In terms of the poll in the chat, I believe it's still 50-50 on if this is a bull trap or not. We are at 53 yes, 47 no. 53 yes, 47 no. NVIDIA average is 120.5. But my adjusted cost basis is, I think, 117 with the premiums I've collected. But yeah, I think 120 is the actual average. Wow, a bunch of you guys got some at 85. Benny got some at 85. Brad got some at 88. Nate got some at 86. All right, cool. We got some people that got that dip. Is Palantir back at 90? Palantir, are we back at 90? We are very close to 90, 89.69. Dude, I really think Palantir is going to crush this earnings. I've been saying it every single day. I think that Q1 is going to be massive. I think we're going to get way more than 30% growth. I think they're going to increase guidance. I think free cash flow margins are going to be above 60%. I think operating margins are going to get closer to 45%. I think it's going to be a good quarter. And if this macro is the macro that we're trading in, aka a macro that is okay with 10% tariffs across the board and getting rid of all the reciprocal tariffs, then I think, could Palantir get back to 125? Like, I don't think the valuation would be justified unless they grow at least 50, 60, 70% going into Q1, right? 125, $300 billion market cap. You would need just insane NVIDIA type of growth to get the market to feel like that's okay. But Palantir's never really traded just on pure valuation and metrics. So if there's momentum and there's a really good quarter, maybe like a step below an NVIDIA quarter, but still a really good quarter, yeah, I could see it exploding again. And it probably would get even more expensive unless, again, the growth is just like that insane. But if it's momentum, Palantir, again, if the worst Palantir face was 65, which most of the bears feel that is still aggressively overvalued for Palantir at 65, and that was the extent of the pain when the market fell, the worst it fell since 9/11. It just shows you the resilience in this stock. It really does. It really shows you the resilience in this. It shows you the resilience of people who are diamond handing it. It shows you the resilience of potentially institutions that really got excited to finally get their exposure to Palantir because they see it as an enterprise AI play that they missed in 2024. And maybe it just shows you that the market feels a lot more excited about Palantir's growth prospects if they're willing to give them this multiple. So earnings will determine everything, but it seems like earnings, in my opinion, will be good. Robinhood right there above 41, down about 2.84% of the day. Grab up from 340 where it bottomed at 2 days ago. It hit 430 this morning, right now at 402. ASML's down 4%, Intel's down 5%, TSM's down 3%. All the semis still getting hit with NVIDIA. Palantir right there, right at $90, and NVIDIA down about 4.7% on the day. CoreWeave, let's look at that. CoreWeave, I think it was up yesterday a lot. Oh, wow, it's down 11%. Yeah, it hit 50 yesterday. Don't know why it's down 11% today. Maybe there's some headline I didn't see on that one, but it is declining along with the rest of the semis, almost at double the pace, down about 10%. NVIDIA down about 5% right now. What else do we have? Remember, Carp said bad times are good for Palantir. Yeah, and that was the spaces that I did with Chad and Ileana yesterday. Basically, they were saying, hey, like when things hit the fan, Palantir is more important than ever. Chad said that he was having conversations with a lot of different customers before he did the Twitter spaces. He got off of a conversation with a client, and they were talking about how to navigate tariffs with Palantir. So I don't know if tariffs will be like a tailwind for demand, which would be pretty awesome if it is, that they're getting even more business because of this volatility. But I could imagine that the customers that have Palantir and that have very complex supply chains like a Wendy's, yeah, they're probably really happy they have Palantir, and they're probably going to keep the software for a long time, just given the fact that when shit hits the fan, this is a product that actually is more valuable than not. Okay, let's hear from the professor what he thinks is going on in the context of tariffs, if we are out of the woods yet when it comes to this volatility, and then we will go from there. We have a couple other headlines that we are getting here right now as well.
Yeah, well, Becky, we are much better off than we were at this time yesterday, but are we as good off as we were 3 months ago? I don't think so. Actually, interestingly enough, with the 125% tariff on China, the 10% blanket tariff, the average tariff actually went up yesterday with the raise in China, and JP Morgan calculated at 23%, which right now is higher than the Smoot-Hawley tariff at this moment. So, we're not out of the woods on the tariff. There's, we'll see what gets negotiated. It definitely, will have to be a negotiation with China. I don't know whether Trump holds as many cards as he thinks. He holds on that. But I know that Trump will declare a victory. And by the way, it is good to the extent that he has 75 countries he will be negotiating with. But the shock of what happened, I don't think you can get that out of consumers' mind or investors' mind for quite a while. And so I don't think we can challenge those February highs for quite some time.
And again, that is just a situation of people being burned in the past, thinking like, okay, we got to wait and see how this really falls out?
Yeah. Well, but the fact is that you still have a big tariff on you, which is gonna raise some prices. The fact that, oh my God, this volatility, I hadn't seen that. I didn't expect that. Could that happen again? Listen, I've got to be cautious about equities. And by the way, I mean, I don't know if you people listened. Dan Ives was on about a half an hour before Squawk Box, big bull on tech. He said, hey, this isn't over. This shock, the decline in orders, there's still uncertainty. Now, in my opinion, he's not going to put this back. But July 9th is still a date out there. It appears the 10% tariff is permanent, which is still 5 times as what we had, before the Trump presidency. So that's still.
Although isn't that the 10%? Isn't that still a temporary permanent? If you can negotiate better deals and get to a position where you feel like there's less inequity, that tariff would eventually get dropped on a maybe country by country basis too.
Yes, hopefully that will. That is across the board, and we'll see what happens. Listen, even if we negotiated, I mean, if every country said, let's go to free trade, all right, U.S. would still have a trade deficit. I mean, it's part of being a reserve currency. We pump out capital, the world uses it. They use it for transactions. They use it for liquid assets. We had a $900 billion trade deficit. If Trump negotiates and gets $200 or $300 billion back, and all my colleagues said that's crazy. That would be unbelievable. That's less than 1% of GDP at best possible. Well, the stock market fell 10%. It's still 10 times that amount. $3 trillion, $4 trillion below where it was before all this tariff mess is happening.
So I think the professor is making a good point right there. There's a couple things to break down in terms of what he's saying. Right now, Trump is mad that we have a trade deficit with the rest of the world. What is a trade deficit? Right? Like we keep saying the word all the time. What is a trade? A trade deficit is very simple. If China imports $1 from us and we import $100 from them, we have a $99 trade deficit, right? That is a deficit because we are taking more from China. We are giving more money to them than they are giving to us. Now, Siegel's argument right there, which is an argument that is pretty obvious, by the way, NVIDIA right here down 5.3%. Markets as well, S&P down 3.4%. There's a new low of the day. So we are getting some heavier red candles right here. The argument around why a trade deficit is okay is because if you are the world's reserve currency and we pump all that liquidity of USD into the markets, that is very beneficial for us. It gets a lot of countries to buy our debt and want to hold our debt, which is important for getting the cost of capital, which quite frankly is really the only thing that runs the economy. It's the cost of money. That comes down if you are the world's reserve currency and countries want to buy our debt. So Siegel's argument is if Trump is able to negotiate the $1 trillion trade deficit we have down to $800 billion, aka we're able to take in $200 billion more than we give out, that would be insane. It would be you would have to acknowledge it would be some of the best negotiating on the planet, but it would still only be 1 or 2% of overall GDP if you're able to bring in 100 or 200 billion bucks. I think what they're trying to do here, so there's two perspectives of this. Either you think that's stupid and that Trump only trying to get 1 or 200 billion dollars, but lose $10 trillion in the stock market is a economic approach to fiscal policy that doesn't make any sense, or to trade policy that doesn't make sense, and that he's fighting too hard for something that doesn't matter. That is one fair take. NVIDIA right here down 6% now, 107.45, getting hit on the day. Or you think that there's a deeper plan to what Trump's doing, aka it's not about saving 1% of GDP from the trade deficit. It's more about XYZ that the administration is trying to get done. Now, what is XYZ? I have no idea. I really have no idea. I don't know what they're actually trying to do outside of getting rid of the trade deficit. Maybe it's get other countries to buy their bonds. Maybe it's get other countries to maybe, the fentanyl immigration stuff, but that's not Vietnam. That's more Canada and China. So I guess there's other things that are part of his agenda that he cares about that he's trying to get done, because it's not going to be creating a $1 trillion surplus Like that's never going to happen. The world is not going to buy American goods as much as we're going to buy the world's goods because America doesn't make that many goods because we're a services-based economy. We pay $30 for manicures. Just want to make sure everyone sees that right. This is a good one from last night versus making all the tools that the manicure lady was working with yesterday. All that shit comes from China. And now we're tariffing the shit out of China. So if I get a manicure again and she's like, it's $60 instead of $30 because she had to pay $20 for a nail cutter, I'm probably not going to get a manicure. And that's what the market was pricing in yesterday, is that if the MIT doesn't pay for these manicures anymore, we are going to have a recession in the United States. That is delayed with this pause. But what we're going to get from lowering the deficit can't just be another couple $100 billion because that's not enough. There has to be something deeper to all of this free trade stuff that Trump is going with. And I guess we're going to get those answers in the coming weeks when we hopefully see some deals. NVIDIA right here down 6.3%. S&P almost down 4% on the day. So the market's giving back about 40% of the gains that they got yesterday. S&P was up 10% yesterday, down 4% today. I think we can handle even giving back 50% of those gains. Let's just not give back 100% of those gains. That would be nice. But we got to see later today if that ends up playing out. It's crazy they used gloss polish on you instead of matte. I don't even know what that word means, bro. Matte. I don't even know what gloss polish is. All I know is that my nails look fabulous. Okay, that's all I know. That's all I know. Let's see what else we got going on. Let's get some updates live and get some coverage here. And then we will keep going from there. The main headline this morning was the EU, again, is reciprocating or not reciprocating for 90 days. So that's big right now. That's nice to see. And then we do have China that said they were willing to negotiate this morning. We just have to see if they actually follow through and we get a deal anytime soon.
30-year yields today.
All right, we are 30 minutes into the trading session. Here are some big movers we're watching, starting with the big jump in European markets, rising sharply after President Trump temporarily reversed course on tariffs. At least most of them, banking, tech, and industrial stocks notching the biggest gains. Obviously, that follows the huge gains in the U.S. yesterday. We continue to monitor the bond market. As Sarah said, the iShares National Muni Bond ETF moving higher following a dramatic drop earlier this week. So, again, recovery in all areas of the bond market from the brink. And take a look at the weakest S&P sectors so far today. They are energy, tech, and consumer discretionary. Among the biggest laggards in early trading, of course, they were the leaders, at least consumer discretionary and tech were coming off the lows. Staples, the only sector higher so far today.
We continue to monitor the fallout from President Trump's reversal and his pause of tariffs on dozens of countries, except, of course, China. Eamon Javers joins us from the White House. He has some of the latest news for us. Eamon.
Hey there, David. As the dust settles here after the president's reversal on tariffs yesterday, the focus here is now on what comes next. White House trade advisor Peter Navarro told me that the administration is going to come up with a schedule for negotiations, given that they just can't physically conduct 75 simultaneous trade negotiations with the countries that are interested in that, which leaves the big open question of what's going to happen with China, where President Trump is increasing tariffs. National Economic Council Chair Kevin Hasset on CNBC this morning predicted there will be negotiations.
It's an absolute extreme disruption for the Chinese economy right now that's come because of repeated terrible behavior on their part, including aiding and abetting the fentanyl trade. And so I think China's going to have to figure something out. And my guess is it's going to involve reaching out to us and setting up talks.
But Chinese embassy spokesman Lu Pengyu striking a defiant tone in a statement today, saying if the U.S. wants to talk, our doors remain open, but dialogue must be conducted on the basis of mutual respect and equality.
So they're willing to talk. They're willing to talk, but they feel that the aggressive tariffs are not really the conditions by which they would talk on. I don't think Trump's going to get rid of the 125% that he put on yesterday, but at least to an extent, China's saying we're open to dialogue.
If the U.S. is bent on waging a trade war, China will fight to the end. And guys, if we're tracking which factions have the upper hand here at the White House now, I'm told that there were only 3 people in the Oval Office yesterday making the decision to reverse course. They were Commerce Secretary Howard Lutnick, Treasury Secretary Scott Bessent, Trade Advisor Peter Navarro, a staunch advocate of tariffs, I'm told, was not there. One other thing I'm told, guys, this morning is that there's going to be a series of meetings here at the White House throughout the morning as they work on how to tier these negotiations, which countries go first, which come in the second tier, which come in the third tier, et cetera. All that being worked out behind the scenes right now, guys. Back over to you.
Yeah, it's a lot, obviously, to tackle in 90 days. Eamon, do we have any sense? And I know the president made some comments, I believe. Correct me if I'm wrong, about potential exemptions in certain industries or for certain companies, even when it applies to China, for example, and whether Apple might get an exemption as it did last time?
We don't know, is the bottom line. I mean, the president has throughout this been both saying that he doesn't want any exemptions, but also, saying he's willing to negotiate. So I think, companies would be well advised to be here on campus lobbying this administration, because clearly there's a huge moving target right now, and all of them can have their opportunity to weigh in. I think companies that are seen as having done the right thing and trying to get with the program here might have a friendly ear, but we just don't know for now.
So no more clarity outside of the 90-day pause that we got yesterday. S&P, dude, it looks like it's going to probably be in this range. I mean, to recover that 3% would need some headline. To get all the way back down to yesterday's levels would need a worse headline. And because the S&P is down, everything else is down. So look, I have covered calls on NVIDIA for 110 tomorrow. It looks like as of now, those are going to be okay. Same thing for Hood at 42, which again is why covered calls in this market are working. Cash cleared puts have not been working unless you've been super aggressive, super conservative with your strikes. But the S&P and the Qs down is what's causing everything else to take off about 2.5%. IWM, look at that, down 4%. That's the worst of the indices today. So small caps, which look, I still don't get the small cap thesis right now. Like, if we avoid a recession, it feels like small caps will be fine, but it doesn't. I don't think small caps outperform if we avoid a recession. Granted, I don't know if technology outperforms either. My guess is that it would, because these are the best companies in the world. But I don't know if small caps and mid caps actually outperform if we avoid the recession. I wonder what is the real outperformer. Maybe it's utilities, maybe it's consumer staples, maybe it's healthcare, which was lagging a lot last year. But obviously, the first 4 months of the year, the market has not been a fan of tech, which I still don't get why. It's not like tech is expensive. It just kind of feels like unilaterally the market decided, yeah, we don't care about Amazon, Google, Meta anymore, which again is stupid to me, but I think their earnings will get the market to be excited again. But I don't think the small cap thesis is that exciting. Like, if you could buy Google at 14 times earnings versus small caps, I feel like you just buy Google. Yeah, you also need rate cuts for small caps to do well. The probability for a rate cut now in May is 24%. So that went up from 18% yesterday, but it went down from 53% to 24% after we got the 90-day pause. But I don't know if we're going to get enough rate cuts for small caps to explode this year. I still think we'll get more than 2. I think we'll get at least 3 cuts. Consensus in the market is 2. You got a lot of firms like Bank of America that says we're not even going to get 1. I think we get more than 2. But if we get like 5, then it's probably because something's breaking in the economy. So I don't think we get that many. NVIDIA right here, down about 6%. SoFi was up 20% yesterday, down about 7%. I mean, if you were trading calls yesterday, short-term calls, if you were just trading common equity, there was a lot of money to be made yesterday. I mean, some of the screenshots I saw, this one guy took like $5,000 and turned it into $1 million because of the calls he bought on the S&P, 0 DTE. I mean, just insane trades that ended up going massively to the upside yesterday. But the question is going to be, how long can we keep up these targets at these levels right now? Which again, I think we should be able to keep up these targets way better than what we've kept up for the past couple of days. But is it easy to get back to 570, which was the previous 200 day? Is it easy to maybe get back to 550, which is the high of yesterday? That I think is yet to be seen. Uber right here down about 2%. Nike down, wow, 8% on the day. Bill Ackman losing about $100 million today on Nike. Sorry, about $80 million. He's about 16 million shares. Is down about $5. So about 80 million. He's down. Microsoft right here down about 3%. Apple down 3%. And then Tesla right here down 6.6%. Christina says, my small cap fund in my 401k has been struggling for a while. Yeah, you had to really get it in early 2024 for small caps to give you some level of momentum, or like late 2022. But the sort of $300 target people had on IWM has not happened yet. Tesla just started selling its EVs in Saudi Arabia. Okay, so that headline we saw a couple of days ago, where Tesla is officially starting to come into Saudi Arabia. It looks like they've sold their first EV now in the country, which is good. In terms of Tesla's overall story right now, we're going to get earnings in about a week. I don't expect earnings to be good, but I don't expect Tesla now to have to go below 200, whereas I think yesterday it was almost a guarantee that we would go below 200 on a crappy earnings. I think Tesla can hold, I don't know, 220, 230. I mean, like, I don't think it's that crazy if the earnings are okay and the macro is okay. I mean, we would have to see, I mean, if we're 250 on the day of earnings, we would have to see such a horrible earnings, like just a disgusting earnings for Tesla to fall below 200 if macro sentiment is better. And I think we will get a disgusting earnings, but I don't know if it's enough to get it to be that bad. Yesterday, though, I would have said 100%, because like if we have these tariffs, this macro plus those earnings, they just, it's a recipe for disaster. Now it feels like things have kind of changed. And again, here's the wild card. I think if Elon actually makes a real Optimus announcement, aka we have a letter of intent from Walmart to buy 10,000 robots, like that is all he needs to get the street to be like, okay, so let's plug in these numbers. Let's see what valuation we can get if we actually have some raw data in the context of this big vertical that Elon keeps talking about, but we don't have any way to project what the growth looks like. If he says anything, which I don't think is that hard for him to say. I mean, like you could call up any company in the United States and be like, hey, like, are you guys interested? Would you guys take a purchase order? I mean, like, I think it would be relatively easy to get a letter of intent, if not a purchase order. And then boom, that's how you get the market to be excited about Optimus as a vertical. S&P right there officially falling 4% of the day, 526. So S&P giving back 40% of the gains that it got yesterday. JPM says this is the calm before the inflation storm. I mean, they're not wrong on that. Obviously, inflation is going to take up with freaking tariffs, but at least it's not going to be the disastrous event people thought it would be, because the tariffs are now delayed, and the reciprocal tariffs are likely going to turn into 10%. And who knows, bro? Maybe that 10% goes a lot lower than 10% if they actually get some serious heavy negotiations done. But in the next 3 months, we're probably going to get that data. But yes, inflation will increase, which is why it was so important today for inflation to decrease top line, because if we're going to increase again, we can't increase from an already high level. Bart, thank you for the 120 euros. Wow, appreciate that, Bart. Thank you for being here. Bought $100,000 of Hood on Friday and sold yesterday. This was nice. Thanks to you, I got to know Hood. Bart from Belgium. I love it. Thank you, Bart. Appreciate you, brother. That's great. So hold on. If you got it on Friday, that means you might have gotten it at like what, 34, 35? Got to sell at 42. Not bad. Dude, it's a trader's paradise, right? To be able to play those swings to the upside or the downside if you were short on certain names. It's not bad. Lots and lots of money to be made. Thank you, Bart. Really appreciate the super chat. And thank you for being here and being part of the show. I think robotaxi announcements should be imminent. Yes, I think that as well. We've seen a lot of new leaks of the robotaxi in Texas. Dude, I want to go to Austin just to try out the robotaxi. I feel like that would be fun. If it's launching in June, I think I'm already coming to Texas in May for the Houston meetup. I think I might come again in June to see the robotaxi, because that would be really cool to like be in one of Tesla's first ever robotaxis. Granted, I think the cost of it is going to be pretty damn expensive unless they figure out how to make sure it's because it's going to be. I mean, I don't think they're even going to want the cost to be that cheap, because they're not going to have that many out there, and so they know people would be willing to pay a premium. But theoretically, if I was Tesla, I would like lose as much money as possible on the robotaxi. You don't like Wall Street doesn't really care about the revenues from robotaxi. Just make it so cheap and try to undercut Uber and Lyft, right? And like get people the incentive to get into the car. Like that would be pretty cool. And you're going to get a lot of organic media of people posting that they're in the robotaxi. You would love Austin. Yeah, I've been to Austin once in 2015. I went to Austin in 2015 for the National Debating Championships. Actually, I should say international, because there's a format called World's Debate. There's like domestic debate, and then there's a format called World Debate, where every country has a like national team that represents them. And so I was representing Team USA, and we got to semifinals. I remember this story like yesterday. One of my best teammates, there's 5 people on a team, but only 3 people can debate. So, you know, there was obviously 3 really good people, 2 crappy people. So I needed the 2 good people to debate with me in the semifinal round. One of the really good people said no. The reasoning? He was hungry. I can't make this up. I still don't forgive him to this day, because then we lost that round on a 2-1 decision because we had the bench warmers play in the game, and he was hungry. Now, granted, he's a senior, so he doesn't really care, right? He's a senior in high school. He doesn't really care about this tournament. I was a junior. I really wanted to win. But I will never forgive him. I was like, really, dude? You didn't debate because you were hungry? So I remember Austin very well, because that was the city I lost semifinals of a major tournament in, because my guy was hungry. All right, Tom Lee's on CNBC. Let's go to him and see what he has to say about these tariffs.
Let's go to what history says about these extremes
by just having a one-day rally. So I think that investors are understandably cautious. But one thing that my friend Tom DeMark likes to call is washed out markets.
Yep.
And I think some things really got washed out, and that's what we're going to keep an eye on. I think it's actually kind of constructive. Like the Teslas and the Mag 7, you know, they basically bottomed on Monday.
Yeah.
And so even though the markets were plumbing new lows into Wednesday, they were holding up, and they've made a big move. So I think there's an argument to me that high beta and the Mag 7 are what you want to watch. And I'm kind of in the camp that this is going to extend further, the rally.
So, I mean, you were bullish going into this whole thing, right?
Yes.
I think everybody did not expect it to be so severe. After yesterday, how much changes fundamentally around your bullishness? Because it's great that he paused on all the other countries, but as we mentioned, we are still going to have to face a lot of tariffs, and that could hurt growth.
Yeah, I mean, I think the upside case for stocks is impaired, right? Because the Fed has made clear during the midst of this that the Fed put, it really isn't in play until they have a better idea of inflation. I mean, we just heard that again. So I think markets then have to depend on fundamentals, and then a policy path from the White House that they can't necessarily depend on. So I think markets are going to put a bigger risk.
But can they depend on it? I mean, the White House did make it clear that they would be flexible if things really started to get shaky.
Yes, but at the end of the day, I think companies aren't going to get hit as hard as we initially thought. For instance, even looking at these revised tariff rates, to me, there's still the ceiling. So even if this is what's in place now for 90 days, I think there's a chance things could still improve from there. And of course, it could be better for U.S. companies, and there could be concessions made for U.S. businesses. So do I think stocks, do I think stocks are an easy road from here? No, I think it's going to be very challenging. But again, I think so many things got washed out. I think the Mag 7 especially, that's where you're going to find opportunity.
You do. All right, the Fed put may not be there, but what about the Trump put? Is it back?
It's in the bond market.
And can you rely on it?
Well, it's got a different variation, right? Because it is driven by instinct. So there's not a level that's going to make a difference, or how close to recession do we get? So
we don't have a handle on the reaction function, as we would say with the Fed. Yeah,
that's right. It's like it's a blunt instrument that we don't know where it strikes.
Right.
But at the end of the day, I know U.S. companies are going to be very innovative. I mean, for instance, if they have higher import costs, they're not just going to pay higher import costs. They're going to be very innovative on cutting costs, which just means AI spending should be a lot higher and automation spending. So, I mean, it's actually good for tech over the next 12 months.
We could see a reduction in employment, though, right?
Yeah, I'd say, and that that also, again, acts as a stabilizer, because to the extent that Main Street jobs get lost, I'm not sure then we can say that these policies are good for Main Street.
Yeah, I mean, and just in terms of, I agree that, at least on a tactical basis, the washout conditions were there. They piled up over the course of a few days. Mag 7 definitely led us lower. They were breaking well before the broad market was. It wasn't really about tariffs. That being said, the NASDAQ 100 went from like 27 times forward earnings to 23.5. That's a huge drop in a short period of time, but not necessarily to levels that have ever been kind of cheap or put the risk reward really in your favor. Where do you think that means? What do you think that means for forward returns?
Yeah, I mean, valuation's definitely an art, because, X Mag 7, the PE on 26 is, let's say 14.5, 15.5,
Sure.
It's somewhere in that range, which is not demanding.
No, it's not.
But the Mag 7, I think they're always going to earn a premium because they're not capital intensive businesses. They essentially make money without incremental cost. I mean, I think they should.
CapEx is pretty high at some of them. I mean, as a result of the data center build out.
That's true. Yes. There's a CapEx, but then there is what I'd call a higher expected realized return, because there's a network value to their CapEx, right? Because the bigger these data centers are, the harder it is for a new entrant to come. So it's the same reason like the tower industry ultimately gets pretty high multiples, even though that's capital intensive, because no one's going to build another tower network.
Cell phone tower, yeah.
I mean, you like Mag 7, but this is a more cautious Tom Lee than I've heard in a while on the overall market. You're usually very bullish.
Yeah, I mean, I'd say Tariff Liberation Day was a huge negative surprise for us. I mean, it was actually so absurd. It was hard to believe that this is what could be happening to our real economy. So I think that's still, still recovering from those ripple effects.
Don't you think the current level of China tariffs also fit into that category, though? The market is seeing them as maybe too absurd to last?
Yeah, I mean, 125% tariffs. I mean, they're bananas. I mean, it's pretty
It's an
hard to
embargo,
believe.
as Jim says, almost. It's not really even a tariff. It's just saying, all right, we're not going to do anything.
It's not sustainable, though?
I mean, if it's sustainable, I think you guys exactly said this right. There's going to be a whole new supply chain built, and even a lot of businesses built around subverting tariffs, you know?
Yeah, it's sort of a tax on global efficiency.
But if you've got to build a new supply chain, you're going to spend a lot of money to do it. You're going to cut back in other areas if you're a corporation, aren't you?
Yeah, and I think that's the reality. Like when companies need to cut costs, it is going to be employment that's going to take a hit.
But retail, it's easy. I mean, retail, you just need like a sewing machine and some labor. I mean, it's not as capital intensive moving some of these factories.
We're going to have.
You don't need to go to ASML and get one of their rare.
Can't do it here.
Go to the garment center again, and people.
No, go to Vietnam, go to Bangladesh. They got relief.
Come on, dude. You and I took home ec. Come on.
So Tom Lee getting a bit more. Yeah, Tom Panicking Lee. Dude, I don't think anyone has shook Tom Lee the way Trump shook him with this tariff announcement. Like, this man came out and said, I'm sorry because Trump violated a core covenant of capitalism. Like, when I read that quote 2 days ago, I was like, oh, he's upset. Like, he's using words like covenant. Like, he's putting freaking philosophical words into his analysis. I mean, like, obviously that upset him a lot. Now this tariff delay is really good, but still, it is a more cautious Tom Lee than I've ever seen. Probably believing there is a bull market to be had, but that bull market is going to have a lot of different nuances, especially the China tariffs, in terms of those eventually being resolved in order to continue. And right now, we're not necessarily there yet. NVIDIA right here, down about 4%. We do have some green candles across the board. S&P, there's your green candle. NVIDIA from down 6% to down 4%. Palantir, you got a green candle. Hood's probably at, 40 or 41. Hood is at 41.11. I don't think there's any news that came out. We are just before 10:30, which is usually when we dump. We're actually doing the opposite right now. I don't see any news. I don't see anything crazy. Maybe there's news coming and we're starting to see a little bit of a reversal. Yeah, it's an inverse 1030. It's a 1030 bounce today.
Yeah, I don't see anything else that would be calling for this, but we are getting a little bit of a bounce. Now, it's important to understand on CPI, month over month CPI. I didn't say this stat when the CPI came out, so this is very important to listen to. Month over month CPI came in at negative 0.1. Here's a chart that I'm looking at right here. That was negative for the first time since May 2020. Now, what is the implication of that? A, the implication is inflation is coming down aggressively for that to go negative. B, the implication is demand is starting to come down, because the only way month over month that comes in negative is if people meaningfully stop spending money month over month. Now, that's a good thing because we need inflation to come down, right? So you need demand to come down for inflation to come down. However, that's also not a good thing because earnings might go down if demand goes down. AKA, if a perfect example, airline fares went down in the month of March, partly because people might not be flying that much. So United, Delta, American Airlines, they're like, hey, in order to get people to start flying and traveling, let's lower the prices. That creates a deflationary effect on prices, which are good for consumers, but it's not really good for earnings, because if you're not paying as much to Delta and United for airplane seats, then they're not making as much money. So there's a really unique balancing act that Trump's going to have to navigate, which is that we need rates to come down, which means we need inflation to come down, which means to some extent we need demand to come down. But if demand comes down badly, yeah, inflation will come down and yeah, the Fed will cut, but it'll be because of a recession. And the beautiful thing that Jay Powell's been able to do the past 2 years is not cause that recession, while also having GDP growth continue to be at 2.5%, while inflation now is below 2.5%. But the tariffs bring in a totally different picture to navigate how this is going to play out. S&P 500 right there, still pumping 3.2% down, but you are up from the absolute lows of the day, 526 to 530. But that CPI report was really telling in terms of that month over month inflation number for the month of March. A sudden drop in demand is not a good thing. You will lose jobs. Yeah, but see, the thing is, we're not really losing jobs yet, right? The job numbers are good. They're like more than good. JOLTS numbers are good. The jobless claims this morning were in line with expectations. I mean, again, average initial jobless claims should be 350 to 375,000 a week for a recession. We are nowhere near that. We are not even close to that number. We're at 220. And then we added 228,000 jobs in non-farm payrolls last Friday. So if we continue to add a couple 100,000 jobs and we're only losing 220 in initial jobs claims every week, that is not a recession. So I think even if we're seeing some level of demand destruction, which is causing inflation to come down, it needs to be correlated with job losses. And maybe the numbers just haven't shown up yet. But eventually I do think we'll see those numbers. I did get a text yesterday from someone on Twitter who is in the technology space. And here's what they said. I thought it was really interesting in regards to what the tariffs are doing to the job market. Okay, I don't know if I'm going to be able to find this DM. Yeah, I can't find it. So I'm just going to summarize the DM. But the guy said he was applying to Bumble, which is a tech company for dating. And he said he was in the final stage of the interviews to get the job. And then the interviewer told him, hey, we're canceling this job because we have to decrease our demand outlook because of tariffs. And this is a dating app, right? So tariffs affect the cost of capital. The cost of capital affects every business. And so it made sense that that position wasn't available anymore. But the fact is that's a job that now he's not going to get at Bumble. And so I do think there is a hell of an argument to say that tariffs already created so much volatility in terms of how companies think about their earnings going forward that they can't afford to hire some fancy product manager because they just don't know if they need that product manager, A, or B, if they have the margins to sustain hiring these people if the tariffs are going to be that volatile in their business. And this was Bumble saying it. I can't imagine Amazon or all these other companies that actually are affected hardcore by tariffs, what they must be thinking right now and the potential hiring freeze they could be having to be able to figure out if they actually need as many jobs as they wanted to hire. NVIDIA right here, recovering a little bit from the very lows of the day, but still down 4.5% currently right now. Jobless claims don't peak until the recession is already deep rooted. Yeah, I mean, look, that is true. That is a historical fact. I think a lot of people are trying to figure out if the jobless numbers can show, or if we can see any signs of the puzzle that jobs are breaking before we inevitably get those jobless numbers peaking when we're knee deep into it. And I think given all the data that we have, this is different than 2008. We have a lot more sources of data from external sources like Trueflation, for example. There's a lot of those websites that cover the job market as well. I think we will know, or at least have some sense of knowing, if demand for jobs is going down dramatically, which will be the leading indicator for the recession. But there is a world in which we never see that because Trump is able to navigate keeping a strong job market with inflation coming down. I mean, dude, I think the last thing Trump wants to see in his first or in his second term is a recession. And if he sees the job numbers that start to look really ugly, I mean, dude, it's like he tweets with such pride that inflation's down, that the job market's going up, yada, yada, that we're adding all these jobs. I mean, he can't do that. He can't call the jobs, numbers, if they're declining by 500,000 a month, fake. Those are real people that are going to be unemployed. So he's going to have to take the responsibility for that. I think a lot of people gave him a pass in COVID because it was a global pandemic. It is what it is, right? Like, I don't blame Trump for that many jobs we lost on something external. But if you start to see negative job growth month over month, I mean, I think the administration is going to do something immediately about that. The question is going to be when we see that, if we see that, and if it's too late, if that ends up playing out. Oil prices are down a little bit today as well, down 4%. Oh, wow, we're back under 60 on oil. We were up yesterday. This 55 to 65 range is not a horrible place for that to be at, but WTI crude right there, down about 4.3% currently right now. Fed watching markets minute by minute to ensure liquidity keeps flowing. Interesting. Okay, so that's a headline we got. The Fed is watching markets minute by minute to see liquidity flowing. I would think they're probably looking at liquidity. They're probably also looking at the bond market because they're probably trying to make sure that yields aren't spiking today, which is important. They're also trying to make sure that after the volatility we experienced yesterday, there's not a lack of liquidity that we're seeing right now. Where is the 10-year? 10-year is down. Not down aggressively, but it is down. Again, if this thing spikes anywhere near 4.5, we're going to have some issues. So this one definitely needs to chill out and hopefully come below these levels. Down 3% is not bad when it was up 10% yesterday. Yeah, I agree. 100% agree. 100% agree. I think if we end the day even down 5%, give back 50% of the gains, that is okay. That is okay, especially given the core catalysts, which is a fundamental catalyst around tariff pauses, I think are bullish. And I think we're going to be able to figure it out. And going back to my point about Trump doesn't want to see negative job numbers, I think the pure embarrassment of negative job numbers and a recession would be a lot for Trump to have to deal with because you can't blame COVID for that. So I think the administration is going to try their hardest to hopefully not plunge us into a recession. And we got the first proof of that yesterday. Like, we were headed down that recession path. Every sentiment, everything's dead. The bond market spiking, and then the administration pivots. I mean, it shows that there is some level of clarity in the administration, even if it's coming from Bessent himself, to be able to correct course. And, maybe Peter Navarro was upset yesterday, but he did not have the final say when it came to job numbers, or when it came to the tariff delays, which will affect the job numbers. NVIDIA currently 110. All right, so NVIDIA getting a little bit of a reprieve. S&P 530. Celsius still green. Are we getting any other inflation numbers today? No, I think CPI was the only. PPI is tomorrow. We're not getting anything else. We had a bond auction yesterday. We had initial jobs claims. Oh, we have a Fed speaker that's going to be speaking in a bit. We'll see if he says anything different. But yeah, that was most of the data. CPI and initial jobless claims. That's what most of the markets cared about seeing. Walmart's up 2%. Yeah, there was a report that came out this morning on Walmart as like one of the best ways to play this market Yeah, Goldman Sachs, they upgraded Walmart and they said long-term momentum is still intact despite the tariff uncertainty. E-commerce is a profitable part of the business. We reiterate our buy rating on Walmart. Look, I don't hate that, but I do think logically, Walmart gets a lot of their stuff from China as well, just like Amazon. So until we get a deal, I feel like it's a scarier name to get into, because if the deal is not 125% tariffs on China, but I don't know, 35%, that's still pretty damn aggressive. Much less anything above the current levels that we're going back and forth with on China. So it's interesting to see Walmart get that level. Target is down. Wow, that's really weird, dude. Target's down, Walmart's up. So Walmart's outperforming the other retailers today. Home Depot, is that green today? Home Depot is, yeah, Home Depot's down as well. Interesting. That Goldman Sachs report really has Walmart moving opposite to its peers in the retailers. Which also feels a little weird, right? Because it's like, again, a lot of their shit's from China, bro. Dude, when's the last time you guys went to a Walmart? I think there's a Walmart really nearby. I think it was like a couple weeks ago. I don't go to Walmart that often. But when's the last time you went to Walmart? It's still a cultural icon in the United States. At Walmart. This week, yesterday, yeah, dude. People freaking shop at Walmart. Years ago, okay, some people never did it. Never been to a Walmart. Yeah, for those of you in Europe, you've probably never been to one. What is the equivalent of Walmart in Europe? Is it like Walmart A? Like with an E? With an accent on the That was so bad. That was so bad. You guys made so much fun of me when I said it was Matte. I didn't know it was called Matt. I don't know M-A-T-T with an E is called Matt. It sounds like Matte. Sounds like freaking Matte. Why is it called Matt? But yeah, what's the Walmart of Europe? Tell me that doesn't look like Matte. M-A-T-T-E. Who sees that and is like, oh, Matt? Like what? That's Matte. It's a silent E. It's a silent E. ASDA, that's what it's called, ASDA in Europe. ASDA. I've never heard of this before. Online food shopping, ASDA groceries. Okay. I've never heard of this one before. There you go. ASDA. Some of you guys are saying Aldi as well. I thought Aldi was only an American thing. It makes sense. It's a European thing. I thought it was only American. Yeah, a lot of you guys are saying Aldi right here. A lot of you are saying it. Dude, I thought it was Matte. Anyway, the point is Walmart is heavy in the United States, but it's weird that it's green today because I still think the tariffs are a concern for them. And so the fact that they're going the opposite of the sector likely signals some level of excitement in that name and their earnings. Let's get an update on pharmaceutical tariffs. Again, Trump said he's going to be launching tariffs on pharmaceuticals real soon. Here's the update on pharma tariffs.
Stocks of pharmaceutical companies, you can see some of them right there. They are down rather sharply this after a new tariff promise from the president last night. Take a listen.
We're going to be announcing very shortly a major tariff on pharmaceuticals. And when they hear that, they will leave China, they will leave other places because they have to sell. Most of their product is sold here. And they're going to be opening up their plants all over the place in our country.
Let's get to Angelica Peebles. I'm also curious how long it takes to build a manufacturing facility for pharma. Angelica, take it away.
Yeah, David. So a flat tariff on pharmaceuticals across the board would be pretty straightforward, more than the different rates that we saw announced last week. So if the main ingredient of a drug is made overseas, it's likely going to be subject to a tariff. Leerink analyst David Reisinger says that every large pharma company he covers would be affected, but calculating the individual company's exposure is basically impossible with how little they disclose. So the two key variables here are where the main ingredient of a drug is manufactured and who pays for the intellectual property of that imported drug. And the latter detail significantly affects the price that's ultimately tariffed. So on its own, a drug might only be worth the cost to make it, and that's much less than what drug makers charge for it here in the US. But when the IP is factored in, it's valued much closer to the list price, and Reisinger says that would result in a far bigger hit to earnings. So while we wait for the details, one lawyer told me that companies are scrambling to sort through their supply chains and the transfer prices of the drugs that they're importing into the US. But another lawyer told me that despite what the president says, he doesn't expect to see companies make any meaningful changes anytime soon because there's just so much uncertainty, and these are not easy moves. David, you asked about the time it takes. It can take about 5 years to open a new manufacturing plant. So you might go ahead and do that today, but the tariffs might not be around 5 years from now. So we're really going to make that move right now.
It feels like it was working, the threat of tariffs, because Lily, a month ago, I remember when David Ricks was on with us, with you, talking, they were going to increase, they're going to double manufacturing investment in the United States and open 4 factories. Question is, once these tariffs go through, whether they'll still be able to do that because they're going to be having much higher costs.
Right. But if you remember what Dave Ricks said, the big factor in that decision to do more manufacturing in the U.S. was the 2017 tax cuts, because a large factor in why so much that manufacturing has gone overseas is the tax rate. And so now with lower taxes in the U.S., that is the main incentive. And so that's the critical piece here.
I think the hardest part about pharma is that it's not easy to just start making drugs the way facilities are already set up in different parts of the world, particularly in China. Now, granted, it's definitely a part of our global economy that I think we would want to have more of in the United States. But I don't know how constructive the tariffs are going to be to incentivize that. I also don't know how inflationary the tariffs could be on drugs and drug prices. So that's another whole debacle we're going to have to deal with, which is why likely volatility is not necessarily over. Robinhood right here looks like it's about to go green. Still down 1% on the day. A lot of the market getting some level of recovery. Palantir back above 90. Tesla still down 5%, but that's up from being down 7%. Nvidia still down 3%, but that's up from being down 5%. So you're getting a little bit of intraday. 531 on the S&P from 523 at the lows. Next Decade just went green. Celsius still green. Snapchat down 8%. AMD above 90 again. The Qs recovering a little bit, even though they're still red, which is very nice to see, because if we end the day only down 2 to 3%, I don't think that's the worst thing in the world. Hims right here, only down about 4%. Walmart, again, green in a sea of red. Lululemon is red. Elf is red. Shopify is red. Bank of America is red. All the financials are still red. Also, Trump acknowledged what Jamie Dimon said yesterday. Jamie Dimon went on Fox and said, we're going to have a recession if we don't do anything soon. And Trump actually said in the interview that I was listening to Jamie Dimon, and I saw that he said something had to be done. So Jamie Dimon, Bill Ackman, all these people, they definitely have Trump's ear, and when they talk, he listens. But obviously, the bond market is really what got Trump to make a decision. Is GameStop green? We're green on GameStop. Wow, GameStop 3%. I think Hood just went green. Hoodie not green yet. Still away from being green, 41.73. That one's still red, but GameStop is green. Let's look at some of these spec names, like the Quantums of the world. Most of them are green. IONQ's down, D-Wave's up, Rigetti's up, GameStop's up, MicroStrategy's down 4%, AMC is up, Oklo's down, Color's down, SoundHound and Archer, those are also slowly red. Rocket Lab is green. Rocket Lab back above $20. It fell to 15 during the decline 2 days ago. Fartcoin, which is our unofficial economic indicator, is up 24%. Dude, this thing literally goes up whenever the market goes down. Like the S&P down 2 or 3%, this thing explodes. Yesterday, it was barely up. It was up like 2% when the market was up 10%. You would think this thing would go up when the market goes up, and it literally trades the opposite. It is so weird. And it's not like there's not a lot of volume. There's $500 million of volume in the past 24 hours. So it's not like this is one of those random meme coins that like no one's trading. It's getting volume. I just don't understand why it goes green when everything goes red. 10-year right here, red on the day, 4.31, but getting that one down to 4.2, 4.1 would be really important as well. Is it a new hedge? Dude, it's not a new hedge, but it has been acting like a new hedge. Like I wouldn't say Fartcoin is the hedge, but the price action has showed it is absolutely the hedge. It's been a better hedge than gold to an extent, which is ridiculous because it's Fartcoin. Like every time I say it, I was like, this is just insane. But this is the nature of the market we're in. There was a random DJT coin yesterday that was up like 500% that people started trading after Trump tweeted. So we had a lot of crypto meme speculation yesterday as well. Oh, this is the best comment. Fartcoin puts the ass in asset. There you go. That should be their headline. Or maybe because Fartcoin is powered by gas and gas prices have come down, the input costs for Fartcoin has declined, so their margins are higher. I can't believe I just said that, but that could be a reason. Arnie says it's a hedge against shitty markets. Exactly. There you go. That's that's how we rationalize this. I can't not laugh every time I hear the word Fartcoin. I wouldn't pull it up unless unless it act like, because it acts as a hedge, I look at it, but every time I'm surprised when I look at it and it legitimately acts like a hedge. And if it keeps getting this up a volume, dude, I don't think it's going to stop acting like a hedge. I don't even know how you buy Fartcoin, dude. I don't even know what platform. To be honest, Robinhood, dude, if it actually gets that much volume, Robinhood should list it. I mean, you would get some more volume on that one. Oh, here's a piece of Robinhood news that you guys didn't see that I didn't report on because the world was crashing over the past 3 days. Okay, so take a look at this. This is really cool. So, hold on. Where is it? It is a, there we go. Okay. Robinhood got a bank license in Lithuania. They got a bank license in Lithuania. So I don't know exactly what they're going to do with this, but it looks like they're going to do something. And they're probably going to try to expand into other banks in Europe. Now, Europe has banned payment for order flow, if I'm not wrong, which is how Robinhood makes the majority of their transaction revenues. So I think that getting a bank license in Lithuania and then trying to expand into other bank licensees around Europe might be a way for them to navigate how to make money on trading without payment for order flow. And I guess you need a bank license to be able to get the logistics of that to make sense. Again, we'll talk more about this on Hood Weekly next week because this news broke yesterday. I think there's maybe a world in which they want to get into lending in Europe, but I don't think that really is the ambition. I think there's other things they're interested in. And then having a banking license maybe just makes it easier. So we are seeing some expansion from Robinhood in the EU, and hopefully they bring that brokerage to a lot of you guys that have been dying to get it in the EU. It would be hilarious if Robinhood comes to the EU before Canada. I mean, that would say something about Canada if they thought they could easily work in Europe over freaking Canada. Amit, do you think the CPI reading was fabricated? Isn't it too good? No, it's not fabricated. Oil was down 3% last month. Natural gas was down 6%. So I do not think CPI is fake. We had meaningful declines. We had demand destruction because of probably higher prices due to tariffs, which is a good thing for inflation coming down. You know, that's so ironic, right? Like the tariffs are going to create higher prices, which is going to create inflation, but people are going to not spend as much because of the higher prices, which is going to create demand destruction, which should decrease inflation. So there's like those two forces kind of going back and forth. But the fact that airline fares came down, the fact that energy came down, shelter was up relatively in a small way, 0.2%. All of those sum up to legitimate reasons for why we got the reading that we got today. So I don't think it's fake. I think people care about the job numbers, but like when it comes to inflation, I don't think people have doubted CPI that much. They've doubted the JOLTS numbers more than anything. But yeah, I don't think those are fabricated. And if we get inflation to continue coming down, obviously that'll be a good thing for equities. Sam Altman, he just tweeted, a few times a year, I wake up early and can't fall back asleep because we are launching a new feature I've been so excited about for so long. Today is one of those days. Okay, cool. Looks like OpenAI is coming out with some new stuff. Again, to me, I don't really care about OpenAI. I care about NVIDIA. And OpenAI is one of the biggest spenders of NVIDIA. So the more features that OpenAI comes out with, that ChatGPT comes out with, I think about A, what does that mean for the broader AI ecosystem? B, are we getting closer to AGI? C, how much damn compute are they going to need to make those features sustainable for, at this point, they said 500 million weekly active users. And all of that screams NVIDIA, in my opinion. So I wouldn't invest in OpenAI at these valuations, but I do think their progress is really important when it comes to the general AI sector. Also, they're suing. I forgot that headline. They're suing Elon, OpenAI. So they're counter-suing Elon. They posted yesterday. They said something about him. They basically said Elon's a piece of shit. I mean, that's basically what they said. But they're counter-suing him against his lawsuit. Yeah, they said Elon's nonstop actions against us are just bad faith tactics to slow down OpenAI and seize control of the leading AI innovations for the personal benefit. Today, we counter-sued to stop him. He's been spreading false information about us. We're actually getting ready to build the best equipped nonprofit the world has ever seen. We're not converting it away. More information available here. Elon's never been about the mission. He's always had his own agenda. Wow. He tried to seize control of OpenAI and merge it with Tesla as a for-profit. His own emails prove it. When he didn't get his way, he stormed off. Elon is undoubtedly one of the greatest entrepreneurs of our time, but these antics are just history on repeat. Elon being all about Elon. Okay, so you got OpenAI saying, screw Elon. We're going to still be the world's best nonprofit. Elon saying, what are you guys talking about? You are obviously going to be a profitable. I mean, you're raising a $300 billion valuation because you are trying to make a profit. And so it looks like they're going to be going back and forth in court. I don't think there's going to be a winner of that lawsuit. Like, I think there's going to be like a settlement or something. And if there is a winner, to be honest, I think OpenAI would win. I don't think Elon's going to get away with them saying, hey, you transferred from a nonprofit to a profit, therefore you have to give me control of the entire entity. Like, I think it's not a bad claim, and he probably has the best lawyers in the world, but I don't think he takes down OpenAI entirely. Like, I really don't. I mean, at this point, SoftBank's involved. You got the biggest VC firms involved. Like, I think there's going to be a lot of forces to make sure Elon doesn't own OpenAI or try to get it to be worth $97 billion, which is what he thinks the perceived fair value is, so then he can buy them out, which is the headline that came out a couple of weeks ago, that he was offering $97 billion to buy them out. Also, the fact that XAI bought X, I think, is going to be more important for Grok and Elon's AI ambitions than taking control of OpenAI. Like, what do they get from buying OpenAI? They don't get anything. Because one could argue that Grok is a better AI than ChatGPT. I mean, I've made that argument many times. I think it's way better. But Elon gets to fulfill his ego of buying OpenAI and forcing them to kind of shut down as this like potential multi-trillion-dollar company. And I don't blame Elon for having that ego, because the dude funded it with $40 million in 2015. So I would feel pretty pissed off too if this nonprofit turned into some multi-trillion-dollar company and I gave the seed funding for it. But I don't know if he wins that lawsuit in court. I think it's going to be a little tough for him to easily get to win that lawsuit. But yeah, they definitely said screw Elon with that dude. They're getting tired of him as well. Mick can do that after the Figure IPO. Dude, I don't know when Figure's going public, but they are the most sought after stock in the private markets right now. So hopefully in like 4 or 5 years they go public, but they're going to have to put up some real revenues, real growth. Like right now, a lot of people are excited for the robot revolution, but eventually we need that growth. Now, if we're bringing all this manufacturing to the United States, again, Figure, Optimus, Eptronic, these robot companies, Howard, dude, every time I try to say his name, I stop myself from saying Nutlick because of all the comments you guys put in the chat. But Howard Lutnick has said that automation is the key to increase manufacturing. If that's the case, then robots are probably going to be in high demand if we have all this manufacturing in the United States. The question is going to be, are we actually going to have that much manufacturing come back to the United States to allow robots to make a difference? I think robots are going to make a difference regardless, but the increased manufacturing would help. Dude, every time I have to stop myself from saying Nutlick because anytime we mention him, you guys spam the name in the chat, and then I start thinking that's his actual name. But That is not his name. It's Lutnick, even though you guys say it the wrong way. Fear and Greed is at 8. Okay, so Fear and Greed went to 17 yesterday. It was at 3 the day before, or the hours before the Trump tariff announcement. So now we're at 8 due to the 3% decline. You know what? Theoretically, people like to shit on Fear and Greed, but when we got to 3, yeah, that was the time to buy, right? I mean, like it worked yesterday. If you bought when Fear and Greed was at 3, you're probably happy. The question is going to be now if we can get back to neutral or greed later this year, even if we're stuck in extreme fear right now. For those that are seeing the bots in the chat, I'm sorry about that. I think there's some bots doing crypto stuff. Please ignore the SONE27K token. Please do not think that that's a real token. Why they love YouTube, bro. They love YouTube chats to come in and just like spam. They like, I feel bad for the people that take these coins seriously, bro. Like you see a random comment on YouTube, SON27K is the real winner of 2025. Who in their right mind sees that comment randomly and is like, I'm gonna go buy that coin? Like I just it's so weird, bro. But don't say you guys bought it, bro. Don't like it's so weird. I'm like, who sees that comment and is like, wow, I really got to go buy that coin. But apparently it works, which is why they spam it, because it actually freaking gets people to buy the damn coins. It's so weird, bro. It is so freaking weird. It's like, and YouTube doesn't do a damn thing about it. I don't know why Google has all this freaking fancy AI. They can't get rid of bot comments. Like, it's insanity to me that YouTube can't do anything about it. But yeah, I hope no one buys anything from those comments. Nike's down 9%. Wow. 9.2. Nvidia's down 4. So Nvidia not as bad as Nike. Bill Ackman's probably not happy about this, especially after that reversal yesterday. It looks like it's levered against China, so there's no way you can't get out of that narrative for Nike. But that one's down heavy today. When does Anduril go public? I think end of 2026. I don't think they're going. I don't think a lot of companies are going to go public this year. I think based on all this volatility now, you would be stupid to take your company public, because you just don't know what's going to happen with tariffs. And you want to go public when there's massive liquidity and there's really good sentiment. Sentiment's better than yesterday, but it's going to take a while. I would say like at least a month before people feel super, super excited around the state of the economy right now. Palantir down about 2.9% at $90. S&P still down 4% on the day. Tried to get a recovery to 531, right back to 527 currently right now. I don't think YouTube wants to ban the bot comments. It would affect their DAU. So yes, it would affect their DAU. But from my understanding, YouTube has 2.4 billion monthlies. Like, how many bots could possibly take away from that number? Like what, 10 million, 20 million? Are we saying there's more than 100 million bots where it would make a meaningful difference in their numbers that they report if they got rid of them? Twitter, I would believe that. Twitter, like if you told me there's 100 million bots on Twitter, I would believe it. I don't want to believe it, but I would believe it because there's just too many bots on Twitter. But YouTube, out of 2.4 billion people that use it every month, I don't know. I feel like there's less than 10 million bots. But maybe I'm being too conservative there. Because yeah, that could definitely be a reason why Google doesn't want to ban them, because then it would decrease their numbers. But it's just so annoying, bro. It is so annoying. Micron's crashing right now. Where's Micron? Micron, oof, that's down 8%. All right, all the semis are getting hit. ARM, Marvell, TSM, Qualcomm, Broadcom, ASML, Intel, SMCI down 6%, AMD down 7%. NVIDIA is actually doing the best out of the semis, only down 4%. TSM down 4.2%. The semis trade, again, Jose was on yesterday. I don't think the semis trade is dead if you believe in the long-term AI CapEx story. But the semis trade, in terms of being the best performing trade of 2025, I kind of feel like it's not as easy for that to take place. And I don't know if software is going to replace it. Software stocks also facing some volatility today. Pretty much all of them, yeah, across the board. Cloudflare, ServiceNow, Adobe, MongoDB, Palantir, Salesforce, etc. But still, technology in general, whether it's semis or big tech, Has not been the trade this year. The trade this year has been Celsius, which is now red on the day, down 1.2%. No, it's been consumer staples, utilities, defensives, healthcare, United Healthcare, massive recovery from the lows. That one, look at that, 591. Is that an all-time high? That's close, right? No, all-time high was 625, a couple percentage points away. But the Dow Jones holding up very nicely as UNH up about 2.25% on the day. White House to CNBC, tariffs on China. Whoa, China now 145%. All right, there you go. 145% tariffs on China. I believe that's the cumulative number based on the newest ones that they announced 2 days ago. Maybe that's also why the markets are down a little bit, because that headline number is aggressive. Robinhood below 42, now down about 3%. 145% on China. It was 125% yesterday, right? So I think that's another 20% that they imposed. Or they might have just added the existing numbers to the 125% they got, and that's how they got to 145, because they already had 20% baseline. But there you go. Yeah, 100. Yeah, that's how they had 145. They did 120 plus the 25 they already had. So there's no way business in China is going to happen if we have 145%. Like, that doesn't make any sense. Like, even if Kevin O'Leary wants 400%, there's no way, bro. Like, eventually we will have to get a deal with them. And I think here's the thing now. So the number was so crazy on April 2nd across the board that all of us thought there would be a deal that got done. Eventually we got the pause as of yesterday. We had to get punished in the market down 10% until we got that pause, but we got a deal. The number on China is so absolutely absurd. Alibaba right here, up a little bit, up 1%, that I think all of us now should probably expect a deal soon. Like, I don't think we're going to go months without a deal. I think in the next 3 to 4 weeks, we should get a deal, because there's no way business can take place with 145% tariffs. Like, that's just not possible. And if it is, there's no way in hell anyone should be buying Apple, Amazon, or Walmart, right? Apple right there down 4% on the day. Because even if the momentum around the market starts to get better, if we really do have 10% tariffs across the world, but 150 against China, Apple, Amazon, and Walmart, I feel like, are the biggest culprits. And the street's going to not price it in probably for a few weeks because they expect those to go away. But if it's a month or 2 months and there's no deals with China, I think those would be some of the worst performers this year. But I refuse to believe we're going to go more than a month with 150% tariffs on China. Like, I just don't believe that. Well, that's a good poll question. Let me ask you guys: do you believe that we act like I don't think we're going to go that long with these tariffs? 55% of you said we're in a bull trap again on the last question. Here's the question: how long do we keep China tariffs at 145%? 1 month, more than 1 month. There you go. That's the question. 1 month or more than 1 month. I think it's going to be less. I think it's going to be 1 month at the max, and hopefully less than 1 month. Let's get an update on Max 7 names and see some coverage right here. And then we'll get into a couple other different headlines that we have currently right now.
Storage and gear. So actually the big clouds actually might be cheaper. So you might want to bring some workloads into the big clouds, because on-prem gear could soar in price. And then,
wow, everyone's saying a week. I can't say I disagree, dude. I think this should be done pretty soon. So even if it lasts for a month, it would surprise me.
they have a relative price advantage. So if I'm running a big cloud, I don't know if I slow down right now, because you could actually take more workloads.
So you think you're going to take more stuff off of on-premise, where a company is saying, all right, we got to move more stuff to the cloud because it's just going to be cheaper.
It's going to be cheaper. And heck, I mean, if you're a big bank here in New York City, you have no idea what's going on. So it's like, why not leverage the cloud? Maybe it's cheaper. Maybe they can scale up and down, and you focus on something else, because it's so uncertain right now. Why pay 20% more for gear on-prem?
Right. I mean, some things like banks, some things they want to keep on-prem, I would assume.
Yeah, of
For-
course.
yeah.
But it was an example. But the price shock that we're seeing, we're seeing HP Enterprise and some of their competitors raise prices on servers. A 20% shock is a big number.
Is that the expectation? I mean,
That's
obviously, a
what
lot
we're
of
seeing in
servers
our
come from
checks.
a lot of places around the world, all with 10% now. I don't know
Yeah.
how many are made in China.
Quite a few.
Quite a few.
And everything goes through there. It's really hard to determine what's going to happen to the price of this on-prem gear.
Well, I mean, you can't 125%. I don't know what you do. What you're going to do?
Well, that brings us to Apple, one of my longtime favorite names. I know it's getting crushed. I hope Tim and Donald are talking, and maybe Tim's got to invest a little bit more here to get an exemption, because this is just too much. I think that also you got to remember with Apple, they employ millions of people.
Yeah,
in
Jim-
That's another point I forgot to mention. There is a world where the China tariff trade war continues, but Apple gets an exemption. If that's the case, then Apple's free to go forward, right? Like they'll have some disruptions, but the majority of it will be subsided. If Apple doesn't get an exemption, then they're caught in the crosshairs of this. So there is a world in which Apple survives even with the trade war. But if we don't get an exemption, I just don't think it's sustainable to pay 145%.
China. We're talking about it earlier.
So, there is a lot of uncertainty out there. I'm wishing the best for Apple. I have a hunch Tim's on it, in a good way. And I think the cloud guys are going to keep going. But the on-prem stuff, you got to watch. There was a rush to buy in the first quarter. There could be a big slowdown in 2Q, 3Q because everybody's stocked up. So the clouds may be the best game in town. And the Mag 7, hopefully keeps spending.
So, okay, so not peak CapEx, you don't think? We're not at peak CapEx?
For some people, but I think if you're in the cloud, you got a once in a lifetime opportunity
Investment.
here. So you gotta be careful. If you're going to slow down, you may regret it in 3 weeks.
And then on Apple and some of the others you cover, I mean, supply chain is in focus with all the tariffs, and that's a pressure point. But what about demand? I mean, especially for a company like Apple and some of these others that rely on China, does this change that entire equation as well?
Yeah, we cut numbers on Monday. It was a little bit like put your finger in the air and try to figure it out. But China is going to go down. It's just a question of how much. It's already been hurting there. The nationalism and some of the concerns got to hit earnings for an Apple. You hope that slows. You hope that peters out at some point. But
you're talking about the domestic sale.
The domestic
in China
sales,
of iPhones,
18,
right?
19% of sales.
Yep.
18, 19% of sales are in China. That's got to go down hundreds of basis points from where we were thinking. So we cut that. That is something we got to watch. But like I was saying before, the big thing that's going on right now is you saw PC sales better than expected in the first quarter. That's not real. Trust me, I'm looking at PCs every day. I mean, the AI PC is a bust. So that was
Why? There was so much hope for it.
Well, that's
Dell, HP,
you got
they were
me
so
on
excited.
for an hour here. We're going to talk about that. But people are buying in the first quarter in semis and hardware, and then we got to see how that goes in the second quarter and third quarter. And it's a concern. That's why we cut numbers proactively, because at the very least we know that's going to happen. Then we got to see what happens with Apple. But look, cooler
If
heads.
Apple doesn't get that exemption, what do they do?
Well, they're going to have to move here eventually, and
Move here.
Move production.
You make an
more.
iPhone here, it's going to cost.
Hey, look, there's talk they were putting stuff on 747s.
Oh,
moving
they
stuff.
were. There's
Yeah.
no doubt they were
Yeah.
doing that. Right. They're trying to get 2 quarters of inventory over here if they could.
They
That's
are.
what
They're
my
going to move
understanding.
more stuff to friendly countries, and they're going to be more flexible. But they are the number one China focused supply chain, and it's a big part of sales too. And they're going to have to move it over gradually. But I'm holding out hope. I think Tim can up that 500 bill number, and he could work with TSMC. He could I know Jensen's trying to do more here. So let's see what happens.
Important story. We'll be following it with your help as well, Ben. Thank you.
Hey, thanks for having me on, guys.
Apple needs an exemption. We need Tim Cook to cook up a way for Apple to be. And now here's the thing. Trump, I don't think, wants to give them an exemption because Apple's the biggest target, right? He wants Apple to produce their stuff in the United States, even though that is a pipe dream to an extent. Unless realistically all the robotic stuff plays out. But if that's the case, those are not jobs then, right? That's like, yeah, it's American made products, but
It's not like Apple's going to be employing millions and millions of people to screw on bolts into an iPhone. I don't know. I think if the trade war lasts longer than what Trump thinks it could last, I mean, Trump probably wants to get a deal done like tomorrow. If the Chinese are not willing to negotiate anytime soon, you're going to have to give Apple an exemption, right? Otherwise, like, I mean, he will single-handedly be responsible for Apple getting hit pretty damn bad. So, but maybe he wants Apple to feel the pain. I mean, like, no one really knows exactly how this is going to play out. What is so crazy to me about all of this is like, and I didn't realize this when Trump got elected. Maybe I was numb to it after 4 years of Biden, but every single thing we talk about in the macro every day has to do with Trump. And it's not because he's president, because that's just in general, right? Like the president matters, but it's because every little word that he says or tweets has an impact to the tune of trillions of dollars, as we saw yesterday. And his opinion on tariffs or Apple or manufacturing or supply chains or whatever legitimately determines the trajectory of the market. With Biden, I don't remember like quoting Biden every single day and then relating that back to the market. A, because Biden didn't really talk much. And B, it's because like Biden didn't really have that many opinions and he wasn't really like actively doing the type of stuff that Trump is doing every single day. So like it is just a totally different administration. And if you're trading in this and you're investing in this, obviously it's a type of volatility that I think we haven't seen before. The NASDAQ was down 11% in the 2 days after Liberation Day. It was up 12% yesterday, and now it's down 4%. I mean, that type of volatility is unheard of. And it's all happening because of Trump. Like literally all of it is due. It's not because of JPOW, not because of CPI, not because of inflation, not because of job numbers. All of this is because of one guy. And I think he loves it. I think he literally loves it. I think he absolutely loves all of this attention and the fact that he can have this much of an impact on the market. It feels like that's what he wants and what he enjoys, and it's just something we kind of have to go along with as investors. RJ says, Amit, would you work for a few hours each week at an iPhone plan for free healthcare and $15 an hour? Okay, so I think a lot of people would do that. The problem is $15 an hour is still significantly more than what Apple pays their workers in China that make the iPhone. From my understanding, okay, here's the exact number that I have right now. This is from IDPBG Group, which monitors Foxconn, which is the parent company that Apple contracts to be able to build the iPhones. The hourly wage is $2.88. So 21 yuan, which is a base salary of 2,460 yuan with overtime pay. To go from $2.88 to $15, we're talking about a 6x increase in costs. Like that will have an impact on the margins. Or Americans got to get ready to pay, I don't know what the exact number we would pay, but at least a couple $100 more, if not more than that, for an iPhone. And already people don't want to really upgrade to the iPhone because it's not that different from the previous one after the 20th version that we've seen in 2025. So you already have demand that is faltering because people are not that interested. This whole AI upgrade super cycle has not happened. Maybe it happens next time, but so far it's not here. Siri still can barely talk to you, right? If you increase the price on that, I mean, like it's immediately like that is just not good for Apple. There's no way to slice it. Maybe it forces them to innovate. Yeah, I agree. Definitely could be a kick in the ass to innovate. But I've also kind of had Apple's backs on this. Like at some level, it's really hard to keep innovating and embrace the future when you've been the future for so long. So Apple was the beacon of innovation really for the past 30 years. And in the past, I would say 7 to 8 years, that has started to falter out. That's what happens to companies, right? And so when you're talking about a consumer product that can hit the entire world, Apple definitely missed the ball with AI, like badly. Like they should have had a ChatGPT before ChatGPT, or they should have had a competitor to them. Like they should have had something inbuilt within the iPhone so that it was AI native. They missed that badly. They missed the EV revolution, and it looks like they're going to miss robotics. I don't think Apple's going to be a big winner there. So then the question is, what were they doing for the past 10 years if they weren't focusing on those main trends? And unfortunately, this is where the lack of Steve Jobs takes place. Now, granted, the watches were selling, the AirPods were selling, the phones were selling, and the phone really can't get that much better in my opinion. So I don't blame Apple for making a new iPhone where the only selling point is a better camera, because it's really hard to make a better phone. Like the phone is so damn good. I don't know how you can make this thing better outside of just like making the battery significantly better, because I would pay a lot of money for a good battery. But in terms of new verticals, they've just not ventured into it. And I don't think that's the death of Apple, but that definitely could be the moment Apple decides that they need to start giving a dividend and start realistically stop calling themselves a growth company, because they just haven't capitalized on that type of growth. Even if Apple makes zero sales, their services will keep them afloat bad times, but not atrocious times for them. So yes, but I disagree with zero sales, because the multiple on Apple is still aggressive. It's not like it's a recession multiple. I mean, Apple is still trading at a 30 times earnings, and they don't grow revenue. They grew 0.74% year over year in 2024 versus 2023. Now, EPS is growing at about 13%, so you can do different math to try to justify some of these numbers, but they can't get away with sales declining that much. I mean, they can get away with sales declining, but they cannot get away with it being masked by services if people just straight up don't buy phones anymore, if the prices go that high. So I think Apple's going to be a unique story to see how this one plays out. But yeah, I don't think we're going to be paying people $15 an hour to build iPhones. Like I think Apple's going to do everything they can to not let that happen. Baba right here is up 1%. Robinhood down 4% on the day. S&P should be going down a lot more now if Hood's going down. Yep, S&P, there you go. New low for the day, 4.16%, 425.58 on the S&P. Yeah, we talked about the J. Powell headline. President Trump did ask the Supreme Court for the authority, not literally to fire J. Powell, but to fire heads of agencies, which obviously would include J. Powell. I don't know if the Supreme Court's going to grant him that permission, dude. My bet would be that the Supreme Court says, get the hell out of here. Like, I don't think the Supreme Court's going to give him that win. Oh, wow. The Republicans approved the budget. Hold on. Did we just get that? The House Republicans narrowly approve budget. I think. Oh, wow. They got it passed. 216 to 214. They got it passed. Wow. There you go. The budget is now passed.
On this vote, the yeas are 216, the nays are 214. The motion is adopted without objection. The motion to reconsider is laid on the table.
All right. The Republicans got the budget passed. I didn't know if they would get it passed in the House. It was contentious in the House. They got it passed by 2 votes, which means now it goes to Trump's desk and he has to sign it, and it's done. The Trump tax cuts in the United States of America officially have become permanent as per the House vote that happened 10 minutes ago. But why are we dumping? Inflation fears? Yeah, I think so. So I think part of the reason we could be dumping off that announcement is that there is a massive tax cut, which leaves, in my understanding, I believe 1.5 trillion that we need to make up for somehow. Some of that will be tariffs. Some of that will be the administration's hope for increased growth. But the rest of it might just end up adding to the deficit. And that could be inflationary as well, right? Or that could definitely be something that the bond market is not happy about. So there you go. That bill is passed. Imagine if the China tariffs were reduced to 10%. Dude, if the China tariffs go down to 10%, 6,000 on the S&P? Is that where we're going to? 6,000? Like, that would be crazy. Okay, let's use some AI in real time right here. Let's see if AI can help us. So here's what I'm about to ask Grok, because I haven't done much research on the House bill. Trump's latest budget bill just passed. Can you tell me the top 5 most important parts of the latest budget bill? Let's see if Grok can give us the most important points of this. And see, this is where I think Grok has an advantage. They own X, right? So they can use as much Twitter content and sift through all the posts to try to figure out what are like the most important things. Okay, so the first one is extension and expansion of tax cuts. This would make the 2017 tax cuts permanent, which would cost the United States $4.5 trillion over 10 years. All right, so we're gonna have to figure out how the hell we pay for that $4.5 trillion. Second, spending cuts. The bill proposes significant reductions in federal spending, with the House targeting at least $1.5 to $2 trillion over 10 years, and the Senate setting a lower floor initial to $4 trillion. Border security funding. A major priority is allocating substantial funds for the border. The Senate will allow $175 billion over 10 years. Defense spending, $150 billion over the next 10 years. Trump did say he wants to start spending $1 trillion on defense. Right now, we're at like $850 billion. So that's not necessarily the opposite of cutting in the government, but they justify it because of defense, American military, but that is something that will be an expense. And then the debt ceiling. Oh yeah, this is a big one. So this is important. So the debt ceiling will now be $5 trillion, which is higher than the 3.7 trillion number that it was a year ago. Obviously, people like Rand Paul have not been a fan of that debt ceiling, but that gives Trump a little bit more room to spend money and give himself the time to be able to make money to cover the cuts that he's wanting as well. Okay, so those are some of the high-level points from this. I don't know what it has to do with Medicare, Social Security. I mean, there's a lot of things I'm going to try to dive deep into and let you guys know about in the coming days from this bill that got passed. But I'm sure there's a lot more than just tax cuts that are going to have to be factored in. Is the 10-year spiking on the bill getting passed? The 10-year is up. Wow. 4.34. So bond market didn't love that they got that bill passed, particularly because they raised the debt ceiling, which is inflationary. It's almost about to go to 4.4, dude, which is, knocking on the door of 4.5 when everyone got scared 2 days ago. So again, that's not the worst thing in the world. If the bond market does get back to 4.5%, guess what? Scott Bessent knocks on the Oval Office and he says, Houston, we have a problem. And that might end up getting Trump to finally capitulate with China and maybe start negotiating and get rid of these ridiculous 145% tariffs, maybe, which is good for stocks. So there is a world in which the bond market breaking again could cause the market to decline again and could cause Trump to let go of some of these tariffs again. Now, granted, I don't think he would do it on China. I think he would just say, we're going from 10% across the world to 5%. Like, he would try to do as many things he can to keep China at bay. Yeah, Dixie at 100 as well. There you go. That is a direct reaction right there to this bill being passed, and the assumption being that it might end up creating some more inflation. But again, we could get an announcement from Trump at any moment on China if the bond market forces him to do that. What did you guys say in the poll? 62% of you say the tariffs on China will last for 1 month. 38% say less than a month. Or 38% say more than a month. Yeah, I would agree. It should be 1 month max, and that's it. Canada says we are going to fight against the tariffs until they're lifted. Okay. Canada will continue to pursue counter tariffs. Now, also, Canada yesterday did say that they're ready to negotiate. So I think this is Mark Carney just saying this to say this, because literally yesterday they said, all right, it's time to come to a deal. As in Trump says, all right, Canada, 125%. Dude, would that be crazy? If like that, see, I think it would be more effective on Canada because China has a much bigger economy. They're able to withstand some pain. If we put 125% on Canada, Canada would fold, I think, in a minute, dude. I think Canada would be like, you know what? We're the 51st state. Like, you know what? Like, like there's no way Canada would tolerate 125% tariffs. Like there's just no way. But also that wouldn't be the best for the United States. Robinhood going below 40. But he knows that 125% of Canada is stupid. 145% against China is also stupid, but it's more warranted than 125% against China. Or sorry, against Canada, because we just don't even do as much business with Canada as we do with China. S&P new low of the day, 524.68. Down 4.5%. on the S&P. I think that's okay. I think 5% would be a bit more aggressive. And if it's below 5%, then it's like, all right, we're really getting some pain. But I think this is a normal reaction to an explosive day that we had yesterday. I know it's crazy to say normal when you're down 4% on an index, but I didn't expect them to keep all these gains. There's still a lot of volatility to be had. It's just a question of if we really do go back to the lows, because then this was a bull trap again. Dude, if we give back all the gains again, like, can you imagine going back to 4,800 on the S&P? Could you imagine that? Could you imagine watching a market open 2 days from now or next week? And I'm like, yeah, well, we're making new lows for the year. Like, that would be insane. Like, I don't even know what would happen if that plays out. But the odds of that happening, I'm not saying are that low. I mean, who knows? Who freaking knows? Especially if there's some random headline that causes that as well. Nike's down 10% today. Yeah, Nike really getting hit with the China volatility as well. Ray, thanks for the $5 super chat. Mark Carney doesn't represent us. He's going to be voted out. The polls are based on a sample size of 2,000. I know nothing about Canadian politics, so I have no clue if you guys actually like Mark Carney or if you guys are fans of Pierre Poilievre or whatever his name is. But from my understanding, it looks like the Liberals still have a pretty big lead in Canada. Granted, I know nothing about Canada. So, yeah, I don't know, dude. I don't know. I really have no idea who would win, but from the research the slight research I've done, it seems like the Liberals still will have majority control. But it was weird because a couple months ago, it seemed like this Pierre guy was getting a lot of momentum. And it looks like it's not as aggressive as it was before. Should we buy when Buffett buys? So we're not going to know exactly when Buffett buys. I think the deadline for Congress is, I believe, May 2nd. They have to disclose all their trades. By the way, Marjorie Taylor Greene has been buying stocks like crazy. I think she's trying to become the new Nancy or something, but her timing sucks. But we're not going to know when Buffett buys, like, at least for another 45 days, because 13Fs aren't going to be out until mid-May. So, yeah, he could be buying right now, and we wouldn't necessarily know about it. Unless he buys more than 10% of a company, then we would know because he would be forced to disclose. And if he does, that means he's super bullish on whatever company that is. S&P 500 right here, down now 4.4%. I'm trying to get these buys that Marjorie Taylor Greene had. I think it was just a bunch of big tech, from my understanding. It was like 2 days ago she bought. She bought Dollar General. So that was one of the buys she had. Oh, here it is. Okay, here it is. Here's all the buys. Here it is. It's a bunch of these names. So she bought Amazon, Berkshire, Caterpillar, Dell, JP Morgan, Lululemon, Nike, Qualcomm, Restoration Hardware, UPS, all of these on April 4th, which was one of the worst days this year. Apple, FedEx, UPS, and then Dollar General. Dude, is she trying to make her own ETF or something, dude? She's like really picking stocks here, buying all these different names. But yeah, she is she definitely bought the dip and she continues to buy. S&P still down 4.5% on the day. Look, I know it sucks on this one being down, but again, I don't think we could have been naive enough to expect that 10% would easily sustain itself. I just hope that we're not going that much further below, but we will find out later in the day. Covered calls look like they're going to be safe. So if you got some covered calls expiring tomorrow, it looks like, unless something happens in the next 24 hours, those covered calls should not be under too much pressure. Did she chat with Steve? Yeah, maybe. Dude, Steve was hilarious yesterday. Steve was like, I told you guys, nothing mattered. Told you guys, doesn't matter. And look, I agree with Steve. Like, obviously, like 5 years from now, the tariff stuff is going to look like a blip. But we're not out of the blue yet. Or sorry, out of the woods. I keep saying out of the blue. We're not out of the woods. And this 4.5% decline on the S&P right here, that's proving to you we are not out of the woods. I hope we don't establish a new bottom, but 90 days, China tariffs. I mean, there's plenty of other narratives the market can look to now. Job growth, demand destruction, whatever it is, to come up with a bear case here. Will we have a podcast with Buffett? Dude, I would love to interview Warren Buffett. That would be the coolest thing ever. Interviewing Warren Buffett. I think even just asking him about 2008, because he navigated 2008. One could say perfectly, dude. Like, he got Bank of America at like 5 cents a share. Bank of America was at $40, and he sold puts on the entire market, on basically America, and those puts printed in premiums. He had some amazing deals with a couple other banks. Like, just getting to know what his mindset was during that time and how he navigated it, I think would be so cool to ask him. Here's the China tariff update that the White House just reported 20 minutes ago.
Around China, Megan.
Hey, David, absolutely. I just got off the phone with a White House official, and they need to clarify that the new effective tariff rate against China, effective today, is actually 145%, not 125%, as they told us yesterday. This is not a new shift. This is based, I want to make clear, on a close reading of the executive order. I have it here. When they amended their executive order yesterday, they changed the rate, the reciprocal rate, so-called, from 84% to 125%. But that comes on top of the fentanyl rate that was already in place this term of 20% against China. So a White House official confirmed to me it is correct to add those numbers together, making the new rate that President Trump has added in tariffs against China so far this term to 145%. A big jump there from where we thought we were even yesterday and the start of the week as well. These numbers just keep increasing. And as you guys know, you do have to add that 145% to any tariffs that were already in place before President Trump took office this term. That's the Section 301 tariffs from his first term, as well as anything else that was already in place at baseline. But now the new rate, when you add all these figures together for this term that they've added against China, is 145% on Chinese imports. Guys.
Megan, a very important clarification. Thank you for that. It does make you wonder, because I think the broad assumption was 125% included, perhaps the 20% already from fentanyl. I asked this question earlier of Eamon, but I'd love to ask it of you as well. In terms of exemptions, we were talking to an analyst earlier, of course, about Apple, where it may really be so important for a company like that to get an exemption, given how many iPhones are made in China. Do we have any expectations do you have any reporting around what may or may not happen when it comes to that?
The best that we know is that the president said yesterday he was willing to exemptions for some companies, but he didn't want to give any specifics on what it would require. So we don't know anything further than that. We know that Tim Cook has been in touch with this White House, in touch with this president. He's been down to Mar-a-Lago, been trying to win some of those exemptions here, as have other companies. But we just don't know yet. What I will say, despite just how high this China tariff is, now even higher than we initially thought, there is some more optimism now because companies like Apple that have production in other countries as well, they can at least move around. But I will say that, there was softer language from the president yesterday that at least he's considering exemptions. We didn't get that before. And if past his prologue in the first term, we did get some. So I would expect a lot more to come on that front.
I mean, a few things. The rate is so gargantuan compared to, first of all, the other tariff rates that we have and everything else. It makes me think that they're bringing them to the table to a deal, because at some point it's just unsustainable to have trade this way. And then their tariff rates now on our exports into China are what? Above 80%?
84, right?
They're at 84%. Yep. And they're doing all these other things. The TikTok deal, for example, is on ice. The president acknowledged that yesterday. The companies that have all been added to the blacklist, the entities list. I saw a headline this morning that China's buying some soybeans from Brazil. That's a hit to U.S. farmers. So China can do a lot more. I agree with you that I think with rates this high, you would think there have to be negotiations, and potentially we'll see those in the coming days. But I've been kind of amazed over the past few days just how little conversation has been going on between the U.S. and China. It doesn't seem like there's any sort of dialogue at this point. We've seen the tit for tat escalating without the leaders, at least, getting on a phone call.
That phone call is going to happen soon, bro. It's going to happen soon, bro. There's no way Apple, Amazon, Walmart are paying freaking 145%.
Wow, S&P new low for the day, 523.06. She keeps going down. Down, down, down. She goes down, but she does not go down on me. The S&P continues to decline. Yeah, I mean, this Trump tax thing is obviously what's causing this. Probably also the market giving back just some of the gains. See if it gets down to 5%, 4.63. The Qs as well, 4.3. At least covered calls are printing, but everything else is red. Everything else is red, except United Healthcare and BABA. Yeah, look at Robinhood, dude. Robinhood below 40. See, this is not good because now people, they're questioning if like this really is the dip, this is not the dip, bull trap. I mean, you're just going to have a lot more hesitations. I am really curious today to see what the money market inflows look like. We'll be getting that data at like 4 p.m. today. I am curious, did a lot of money leave safe money market funds yesterday as soon as Trump made the pivot? And if they did, are they going to leave stocks today because now they're afraid of that pivot? S&P, another new low for the day, 522.87. There she goes, 522.56. It looks like it wants to go a full 5% down. Right now, currently about 4.72% down on the day. Dude, if they make me wait another 3 months to get a manicure because we go back down to new lows, I'm going to be annoyed. Like, it was fun to be rich. It was fun to taste a little bit of rich again yesterday. If they make me poor again, it just is not going to be fun. S&P down 4%. Apple taking it on the chin as well. Down 5% again. We need another Trump tweet. Yes. At this point, we do. Violets are blue, stocks are red. I need to tweet this one day. That's a good one. Violets are blue, stocks are red. That's what I'm gonna write on a Valentine's Day card one day. I'll find out how to make it work. Violets are blue, stocks are red. I have no more money to give you a Valentine's Day gift. What rhymes with red? Oh, I found something that rhymes with red, but I'm not going to say it. But come to bed. Oh, there you go. That's a good one. I was thinking of a different word that rhymes with red. Yeah, come to bed. There you go. That's the rhyme. Violets are red. Oh, this is a good one. Violets are blue, stocks are red. Why in the hell did I get out of bed? That's another one. Well, that's a good one. Oh my gosh. Where's Grab? Where is Grabby Grab? Where's Grab? Back to 395 on Grabby Grab. Dude, I'm really excited for Grab's earnings. That product event I thought was pretty bullish. Most companies in Southeast Asia don't even do a product event. The fact that they held an event, they introduced like 7 new products. All of them to me are going to only increase user engagement, make the app more delightful to use, be good for tourists. Like, I think if we can get rid of the tariff volatility, I think this thing breaks out. I really do. It's definitely not going to break out with NVIDIA being down 5% every other week. So that is going to be a macro play. Trump needs to announce a 1-day tariff delay every day for the rest of his term. Dude, that's actually hilarious, dude. Could you imagine every day? This is gonna be quite the 4 years. Like, even I underestimated how volatile this would be going into his election. I was like, oh, all right. I mean, it's not gonna be like Biden, who really didn't do press conferences. It was gonna be a lot of headlines, but it wasn't gonna be that crazy, right? No, it is like that crazy times a billion. Like, I did not expect governing by tweets to control trillions of dollars in the equity markets every day. Like, I really didn't think it would be that aggressive. Where's Bitcoin? Bitcoin as well. Is it facing some volatility? Bitcoin. Wow, Bitcoin's down 3%. All right, so the whole market, Bitcoin trading with the NASDAQ today.
And let me check the 10-year. Please don't tell me we're at 4.4. No, we're still at 4.34. All right, so still a little down. If the 10-year spikes up, that's, again, if stocks go down, the 10-year has to go down. If stocks go down and the 10-year goes up, that's an issue. And Trump can't afford that right now. So we're going to need to at least see the 10-year come down if stocks go down as well. How are we feeling about NVIDIA covered calls? I mean, look, as of now, feeling good about them. Although, dude, it's like, look at this. This is how a covered call can, like, this is the interesting thing about covered calls, bro. Like, so these are my covered calls, right? I sold 9 of them because I have 900 shares. The average credit I picked up was 43 cents. 43 cents times 100 shares is $43. I picked up 9 times 43, $387 of premium. Not bad, right? I don't think anyone in the chat is going to say, hey, $387 for 5 days is bad money. That's good money. The contracts are now worth $1.55. So and at the height yesterday, they were worth $5.65. So if I had bought those calls at 43 cents and they were worth 535 cents or $5.35, so 535 divided by 45, that would have been a 12x return in 2 days, which is what a lot of option call traders do. It's just, to me, that's gambling. Because to me, no one freaking knew that Trump was going to cause this 90-day pause outside of the insiders who bought those NASDAQ calls in order for you to guarantee that 43 cents could go to 535. But as an option seller, all I need is for NVIDIA to not pump 15% in a week, and I get to keep that $387 and my 900 shares. And it looks like I'll be able to keep it, given NVIDIA is now well below 110. But that is the risk as an option seller if you have some crazy event. But that's the reward as an option buyer. But granted, I think 9 times out of 10, or more like 9.9 times out of 10, if you bought that NVIDIA 110 call, you would lose. Because you just don't know if in a couple of days NVIDIA would pump 15%, which is what's needed for you to even have any chance of having that contract appreciate. Robinhood right here down 6% on the day. So Robinhood really getting hit right now. The S&P, wow, 4.79, very close to 5% on the day. It hit 521 at one point. Right now it's 522, bounced off 521. But we could see 5% potentially happening. Isn't that also gambling? So I think buying the call is gambling. Selling the call, to me, is not a gamble because I think you win either way. Either NVIDIA's not at 110 and you keep the premium, so I get to keep those $387 and my shares. Or if I have to sell an NVIDIA at 110, it is what it is, right? You still make money off selling those shares. So to me, yes, it is technically a gamble, I guess, when you're option selling, but you're the house and you win either way. Now, if NVIDIA goes to 200, I'll be upset if I sold at 110, right? But that's just an opportunity cost. That's not an actual loss of capital. That's an opportunity cost loss of capital. Whereas if you're buying the option and the stock just doesn't move up, you lose. Or if you're buying a put and the stock doesn't go down, you lose. And so that's why I feel like from a selling perspective, it's just easier to navigate it. S&P 4.69. All right, so we're still down. Bitcoin right here down 3%. All the semis are really dumping right now. Across the board, 10%, 7%, 8%, Qualcomm down 6%, NVIDIA down 6%, AMD down 8%. AMD getting the worst of it today, along with Dell down about 6.3%. The Mag 7, are they tanking as well? Yeah, Apple's down 5%, Microsoft's down 3%, Meta's down 6%. Wow, Meta down 6%. Dude, Meta was at 580 in the morning. It's really hard for people to feel excited to buy those rips if they're going to get hit with a 6% whiplash. Amazon down 5%, Nvidia down 6%, and then Tesla from 270 to 280. Or sorry, from 270 to 250 down on the day. What was the time on the covered calls? It was 5 days. So it was I sold them on Tuesday. It was less than 5. I sold them on Tuesday. No, I sold them on Monday. No, I sold them on Tuesday. Yeah, I sold them on Tuesday. And if it's NVIDIA's below 110 on Friday, I make $387 in 4 days. Like, that's good money, bro. $400 in 4 days. Like, that's not bad. And I thought I was being conservative with $110. I was like, NVIDIA's not going to pump that much. And we'll see if it happens tomorrow. But that's the point. It's like, even if it does, you still win if you have to sell, or you can obviously roll the contract. If it doesn't, you keep the premium. Ray says, isn't it just a better gamble? One is gambling that it will go up 15%. The other one is gambling that it won't go up 15%. Yeah, but there's a difference there, right? One is gambling it goes up 15% and it has to go up 15%, or at least somewhat near that in a short amount of time for the contract to really move. The other one is saying it could go up 14.99%, but as long as it doesn't hit that 15%, aka there's a 15% margin of safety, or better yet, a 14.99% margin of safety, then you're going to win because you get to keep the premium. That's where I think the benefit is from an option seller's perspective. Tesla goes below 250. Apple below 190. I'm waiting for 5% on the S&P because it feels like it wants to happen. 4.87%, very close. It looks like we're going to see it. It looks like we're going to see it. And then tomorrow becomes really important because we get PPI. And so it's also going to be important to see if we fall another 5%, because we only pump 10%. I mean, if we give that 10% away in 2 days, that would be quite something. So I think that would definitely get Trump's attention, because that means the stock market has lost all faith in equities. If without any major headline outside of the China stuff, we give back all the gains, like that would be a real lack of legitimacy, or an increase in the lack of legitimacy around the institution that is the markets, if we give back a 10% move in 2 days without any like fundamental reason to give it back. So I think we'd better hope we don't give back the gains, because I mean, I think the market would be really scared about what's happening at that point. Dens, thank you for the $5 super chat. Using Grab's new lower fee option for solo food deliveries, orders today and saved a few bucks. Thanks for covering the stock and have a terrific day. I love what you did at the end there. Terrific. That's definitely an admit joke. Yeah, that's awesome. So Grab introduced this new feature where they're, if you're single and you're getting like a meal, instead of paying $12, you can pay like $7 or $8. And so it saves people money. It increases orders. That was one of the new products they announced the other day. And that should hopefully increase top line revenue as well. So I really do think the products they announced were smart, but we need a good macro. All-time high on gold. Really? Where's gold? Wow. Huh. Dude, I think people are calling bullshit on this rally. Gold's up 3%. I think some people are calling a little bit of bullshit on this rally. S&P, very close to 5%. The Qs are just at that 5% range. Apple's now down 6%. Gold is up. Bitcoin's down 3%. I mean, if we fall another 2-3%, yeah, that's the market saying we do not feel like the 90-day pause was enough. That's exactly what the market's telling you if we continue to fall. Now, the one good thing is that bond yields haven't moved up. Until they move up, that'll be an issue we don't have to worry about. But so that's something we have to care about. Someone asked, can you explain the relationship between bond yields and stocks? It's a pretty simple thing, just like in a nutshell, right? Stocks, we want to go higher, but bond yields are giving you a return without any risk outside of America defaulting on our debt, which no one assumes America will do. So I could buy Meta at 550 and hope it goes to 600 and make way more than 4%, or I could buy the US debt, which $28 trillion of bonds are available from the United States to buy, and I can get 4.376% guaranteed. So the question is, which one at which moment of time matters more? NVIDIA, by the way, almost down 7%. That one's getting hit. Down 5% on the S&P. There we go. Down 5%. 521.3. That is psychologically not the best to see. The S&P 500 right there. Many red candles falling 5%. So in the stock market, we want bond yields to go down and stocks to go up, meaning we want people to think there is more of a opportunity cost, more of a risk to being in bonds because you're missing out on Meta, NVIDIA, Palantir, Robinhood, et cetera. And that allows money to flow into stocks. However, if you want bond yields to come down, you kind of need some volatility in the stock market. You need stocks to not be as attractive, aka more risky, because you could lose 5% of the S&P in 2 hours. And so you don't want that risk, aka you go to bonds. In the context of refinancing our debt, it's primarily based on the 10-year and the 30-year. And so we need yields to come down so that we have a lower rate to refinance, which is how the country runs based on the debt that we issue. But if stocks are surging green, which is the conundrum I still don't have an answer to, I don't know how Trump can be happy with that, because he needs bond yields to come down to finance the country, especially to finance the $4.5 trillion that we lost over the next 10 years based on these tax cuts that he just passed. So from that perspective, and I said it yesterday on the market close, it was like I was really happy that the markets were up, but the 10-year also spiked. And so if people are selling the 10-year, which is what causes bonds to go up, it's an inverse correlation. When you buy stocks, they go up. When you buy bonds, they go down. Then that's not good, because you can't have people selling bonds to buy stocks, because then bond yields go up. And that's, again, not good for Trump's plans on what we're doing with our debt. So I still think there's a weird relationship here that we don't have an answer for. And I could understand someone being bearish off the idea that if they know the 10-year still has to come down, then the volatility in the stock market, aka the equity risk premium that you pay for taking the risk of buying equities over bonds, is simply too high, which means we need stocks to come down to make it more attractive, potentially. And at least today, the market is showing that with this 5% decline that we're getting right now. In terms of why we're declining, I honestly don't know. The answers that I can give you are the Trump tax cuts were passed. That's inflationary. I can also say a general argument that the market wants to give back some of the gains that they got yesterday. That's reasonable. I didn't think they would give back 50% of the gains, but right now that's what they're doing. And then the third argument is that tariffs are still on China at 145%, which still does affect the market, given China is our largest trading partner. So I guess that could explain, hopefully, a little bit about why we're experiencing this volatility. But I don't think there's any kind of core fundamental reason here. Dude, how long have I been streaming? It's almost 12 o'clock. Why did I not notice? Dude, we've been doing 3 hours and 30 minutes. It's like, I feel like I haven't looked at the clock, dude. It's 11:50. Wow, S&P below 520. I think it's because the market kept falling, so I just kept staying live to see me lose all my money. To who? Who gets my money when everything goes down? Like who? What magical Illuminati takes all this money away from me? Oh yeah, I forgot. Market makers. Or it could be any of you guys who are selling right now. Technically, it's so funny, dude. I confronted Steve about shorts. Yeah, shorts as well. I confronted Steve about this a couple months ago. Some of you guys might remember this. He was on the show. He was like, "Oh, Amit, you should start investing in the S&P 500. I started investing in 2005 in the S&P. You should start investing right now." And I was like, "Hold on. I'm just exit liquidity for you, because you bought the S&P at 200. Now it's at 500. You want me to buy it at 500 so you can get the hell out from 200 to 500." And I was joking, but it's kind of true. Like, when people say the stock market is a Ponzi, like obviously that's not true, but like it's kind of true. I feel like there's a good stand-up routine you can do on this, because it's like, in order for stocks to go higher, someone has to buy, but in order for you to lock in profits, you have to be buying from someone who's selling it to you. Like whether it's a hedge fund, a market maker, a retail investor, someone is selling what you are buying. And so if you're buying Robinhood at 39, there's someone out there who's selling it. And hopefully they're selling it for greater than they bought it at. But it's one of those things where it's like, if you lose the new buyer for every seller, it's like the market obviously can't go up. Like there's no liquidity to get it to go higher. This is why crypto is so interesting, right? Because there's so many different aspects of liquidity that come into the game, but we can see these violent moves because sometimes, there's just not enough volume or demand to buy Bitcoin at a certain point in time. And we'll see no one who wants to be the person to step in and say, "Hey, I'll buy it at 78,000 because someone is indeed selling it to you at 78,000." And that person could have bought it at 5 cents, given there's plenty of Bitcoin 2010 OGs that still haven't sold. So it's just funny because it's like, yeah, if someone's selling the S&P right now at 520, someone's buying it, and whoever's buying it has to think that 520 is a better deal than the guy who's selling it at 520. And one of them is going to be right, which is also what makes the game very fun. Because if you can be bullish on a stock when everyone's bearish, or you're bearish on a stock when everyone's bullish and it goes your direction, then it is obviously a certain thrill that is exciting to experience. Robinhood just told me there's a new company going public called AIRO. Have you guys heard of this thing? AIRO. I don't know what this company is. Arrow. I have no idea. The IPO price is going to be $14. Don't know what this company is. Going to try to look into them and see what this is like. But I'm surprised we got a new IPO on the docket, given this volatility, which kind of is bearish to me because any company that wants to go public during this time, maybe they really need to go public more than they want to go public. S&P still down 5%. Bitcoin right here down 3.3%, 79,000. Currently on Bitcoin. I don't think Trump tweeted anything. Let me confirm to check. Okay, he tweeted, "Congrats to the House on the passage of a bill that sets the stage for one of the greatest and most important signings in the history of our country. Among many other things, it will be the largest tax and regulation cuts ever even contemplated. Make America great again." Okay, so he's happy we got the bill passed. The stock market is not, because as of now, it is going to increase the deficit with no way to necessarily solve the issues on the deficit. But yeah, that is the market reaction to it right now. They sell weed, AIRO. It's a weed company. It's a weed company? Oh yeah, it's weed. They sell vapes. They sell vapes. A company that sells vapes is going public. Huh. Okay, so cartridges, vapes, if you consume that stuff, there you go. Interesting, dude. We haven't seen some weed companies go public in a while. That's how you know there might be excess liquidity, dude. These companies, they went public a lot in 2020. Now, maybe Arrow is a really, really good company, but the weed kind of bubble popped a couple years ago. I'll look through their S1. I'll try to see if the numbers are interesting, but I don't know if that's the most exciting IPO. Robinhood says drones. Okay, so then a bunch of you guys were saying they sell weed. They're a drone company. Hold on, let me type in AIRO drone. Oh yeah, there is a drone company called with the same name. Okay, that seems more exciting. Yeah, dude, a weed company with cartridges and vapes going public was weird. Like that just seems a bit too aggressive. All right, cool. Drone company, dude, defense, really finding some momentum. Headquartered in Denmark. Huh. Actually, no, Albuquerque is the headquarters, but they have one of their big offices in Denmark. Okay. All right. I will look through the S1 on that, see if there's anything interesting there. Let's get an update on CapEx and AI spend, and then we'll probably end it out for today.
Annual shareholder letter reiterating that this is a once-in-a-lifetime opportunity that must be seized aggressively through deep investment and full-stack integration, making AI more than ever an easy and obvious contender for Amazon's fourth pillar. That is, businesses that signal where Amazon sees durable growth and where it's willing to bet big for the long haul. Yet Jassy stopped short of naming it in his latest annual address to Wall Street. Amazon's first three pillars, they are Marketplace, Prime, AWS, massive defensible businesses that drive consumer growth and customer loyalty. Now, leadership has been searching for a fourth pillar for at least nearly a decade. Back in 2017, when I first attended an Amazon AGM, Jeff Bezos declared that they were hard at work finding the fourth. Then again, during his last shareholder meeting as CEO in 2021, Bezos said they were still looking and there were a lot of contenders, but that the bar was extremely high. And it's not that Jassy isn't contemplating it. In his letter last year, Andy Jassy called out Gen AI as the next primitives or foundational tools.
Folks, that 10-year is spiking up 4.378. If you round up, that's 4.5. S&P, 5.5% down. Where's the 30-year? Hold on. 30-year. Oh, shit. Oh, no. 30-year is up. 30-year, 4.8. Not good. Not good. These are getting awfully close to the levels we had 2 nights ago when everyone was freaking out about a credit event. Not good. Not good at all. So we're going to need either this bond market to calm down and for people to start buying bonds, or we're going to need something from the White House to chill this out. I think they still have a little bit of margin before they have to really say something. But if we see 5% on the 30-year, that's an issue.
Or to Amazon as a whole. Since then, Amazon has gone deeper into the AI stack, more workloads on its custom AI chips, continued infrastructure build out, its own foundational models, and the app layer soon as it gets ready to roll out an AI revamped Alexa voice assistant. Now, in owning the full stack, Amazon's strategy, it's starting to resemble Google's, which is seen as further ahead in the race. So as tariff whiplash continues and it hits Amazon's largest marketplace pillar particularly hard, investors, they could expect Jassy to double down on AI, calling it out as its fourth pillar. Guys, that would be a strong signal and maybe a missed opportunity in this latest letter. Of course, we cover Amazon so closely. We know that they have these pillars. I'm not sure how widely that is known, but it would certainly send a signal to longtime investors that it is all in.
Yeah, I get, and advertising, which has become such an.
So we heard Jassy talk about that this morning. Obviously, he's still pretty bullish on the future of advertising and the overall CapEx that they need to spend. But the broader market doesn't care right now. 5.4% on the S&P. I mean, it's looking like it wants to go 6% down. Q's 5.5% as well. Robinhood down 7%. Nvidia probably is down 8%, roundabout 7.3 on Nvidia. I mean, could you imagine if we go down 10% today, dude? Could you imagine? Could you imagine giving back all of the gains from yesterday? They're not going to let us hold on to any of them. Like, my goodness, bro. 5.6 now. Nasty red candle. I'm confused why it's this aggressive, though. The only answer I can give is that the 30 years ripping right now. And I guess the market is really scared about China again, which they should be, but I don't know if it warrants this much fear. But the market is saying what the market wants to say, which is that either they don't like the bond market right now or they don't like equities, given the risk premium that still is alive because of where this 10-year is at. 5.67% on the S&P. Wow, dude. You could have bought this morning at 5:30. It's already down. Now, granted, my strategy is the same. Just going to go down with the ship. Like, that's the strategy. The one thing I did say yesterday is and I think the situation taught all of us a little bit of a better lesson of just like buying some cheap puts is not a bad thing, right? Buying some protection is not a bad. I know a lot, and I'm guilty of this as well. Sometimes you buy a put, you think you're just throwing money away because like if stocks tend to go up, then your money gets eviscerated in terms of put premiums. But when things do go down or when it's really choppy, yeah, buying a couple puts a year out, 2 years out. If you've got $100,000 portfolio hedging with 5% of it in puts, I mean, that's not a horrible thing because in moments like this, they matter. And if the 5,000 goes away, it goes away. But hopefully the other 95,000 becomes, 130,000 or something. So, I mean, if anyone did want to hedge and maybe buy some more puts, obviously on a day like this, now the put premiums are up because everything's red, but in the morning probably were cheaper given we were much more green than we are right now. Dude, even CPI wasn't enough for the markets today. That's also telling, right? CPI down freaking to 2.4%. That was not enough. Look at the S&P, 5.75%. CPI was not enough to overcome the inflation fears from tariffs that the bond market is obviously telling us they have, which is why it's selling off. And it wasn't enough to overcome the China 145% tariff headlines either. Is this an overreaction? I don't know if it's an overreaction. I mean, I think the market is well within its rights to be afraid of the tariff stuff still. But I don't know. It feels like there's something deeper going on for why this is happening. Like it feels like the market is more afraid of the credit markets right here. Like I don't think the market's selling off because of 145% tariffs on China. That's bad, but I don't think that's the reason to go 6% down on the S&P. It feels like they don't have enough faith in bond yields coming down.
Armand, thanks for the super chat. Honestly, send it down. I can buy much more of this dip. I want maximum pain. Also, much love from Canada. Armand, thank you for being here. And yeah, I mean, look, if you didn't get enough of the dip over the past couple of days, you're getting another opportunity right here. The VIX is spiking. Wow, 30% on the VIX. Holy crap. Yep, that'll also do it. I mean, that's another reason for this sell-off. Oh my gosh. Are you talking cash secured puts them in? No, I'm talking about buying puts. So when you're selling a put, it would be bullish. When you're buying a put, it would be hedging the potential decline that the market or any stocks you're buying those puts on see. But if you're selling puts, you would have to probably be selling puts this year has not really worked. Because you've been, it's hard to say it's not really worked, right? If you wanted Robinhood at 40 because you thought it was a good price when Robinhood was at 48 and you sold the put and now you own Robinhood at 40, yeah, you're bag holding Robinhood given it's at 38. But if you got paid to buy Robinhood, then it's not the worst thing. But the point is most people sell puts hoping to not get assigned on the stock, right? I mean, if you sold any puts this year outside of early February, you were getting assigned over the past month or over the past basically 7 days. S&P officially 6% down, 515.95. 6% down. There it is on the S&P. Huh. That's aggressive. That's nasty. That is nasty. I thought we would give some of it back today. I didn't think we'd give back that much. I thought we'd give back 30 to 40%. Not as much as this. Let's get an update. Let's see what people are saying. But yeah, we are definitely seeing the market not happy with this.
Are being reduced. They have been for a while. Target prices are getting cut. This kind of after the fact, Scott, to be honest with you. Look, it's not often. And in fact, in 33 years of doing this, I've never been up 9.5% in a day. We know the long-term total return in general for each year is 7.7%. So yesterday was great. I'm not in the recession camp. No, I'm just not. Not with the weekly jobless claims where they are, and you're at 220,000 on a 3-6 month basis. Recession is 350 to 375. Inflation is coming down, not to the 2% we needed to, but it's coming down.
CPI report was really good. And on any other day, at any other time, we'd be like, this is exactly what we've been waiting for.
But maybe, just maybe, we start to make good progress on inflation, and then maybe you get the Fed conversation back. I don't know. I don't think we're going to see 100 basis points of cuts, but maybe if we can keep getting inflation down, that is a good sign. So I am just not in the camp of recession. I'm in the camp of slowdown. I'm in the camp of, are we flat? Are we up 1%? Okay. Now I want to hear what companies have to say in terms of earnings. Numbers, again, have been reduced dramatically. The stocks are down dramatically. I want to see how they respond tomorrow, starting tomorrow.
You can't expect.
If they cut, how do the stocks react? That'll be very telling to me.
I know, but you can't expect, can you? I should ask you rather than make a declarative statement. Can you really expect that these companies who have absolutely no visibility whatsoever are going to give any kind of guidance on any level that sounds good? If they even are able to give guidance at all.
No, but I got stocks down that are 25, 30% into that.
I know, but if you're having a recession, they may not be down enough.
But I'm not in that camp. I'm not in that camp. I just told you why. I'm just not. But I have stocks that are down a lot into the print. So the expectations are very, very low. And what is very clear is that Trump and Bessent are watching the bond market. You lose the bond market, you're going to lose everything. And that's why they actually reversed course yesterday in my mind.
Oh, it's clear that, the bond market's, ruling the
bond markets are making it pretty damn obvious that they don't like what's going on. But again, this feels aggressive, dude. 60% of yesterday's gains going away. Wouldn't surprise me to see a green candle pop up and start to recover a little bit of this pain. But this is definitely something where Trump doesn't get an easy win on this. The bond market is not going to allow him to get an easy win. I know it's funny. He said he doesn't look at the stock market, but then he was bragging yesterday that the Dow Jones was up 3,000 points. It's like, obviously they look at the stock market. They absolutely look at the stock market. But if the low of the day has been set on the S&P, then maybe we go higher from here, but not sure if, 517 was the low of the day. The exact low, 515.67, about 2 minutes ago. There's your green candles right there bouncing from 515. Question is if that is the actual low. Could be a bull trap again. Might end up being a bull trap again. But time is going to tell. Let's get a little bit of Josh Brown's take, and then we'll end it off officially for today. I know you guys are saying to stream live all day, dude. Maybe that's what the show is going to turn into. Maybe it's just going to turn into 9 to 4 at some point. But like that might be we're starting the market close early. Like the evolution of this might just be, you know what? We do it live all day.
Reported everywhere. I saw the tables, all the graphs, all the charts. What didn't necessarily accompany that commentary was the context in which we've seen the other 9 best days of all time. And I'll spoil it for you. Typically, they take place in years like 1933 and 2008 and 1931, and they happen when the market is in a 75% drawdown. A 48% in October 13th of 2008 was the 6th best day ever. We had a huge 11.6% run. We were already down 35.9% from the high. Yesterday is peculiar in that it didn't take place in a statistical bear market down 20% or worse. It's a little bit shallower than that, but from my perspective, close enough. Horseshoes and hand grenades. The median stock was in its own bear market. Most sectors that matter with market cap were in their own bear market. So what happened yesterday, while it was exhilarating and remarkable and a lot of fun and a lot of backslapping and a lot of rich kids who are really proud of themselves because they grew up insulated from the consequences of their own actions, the end result today is, oh, wait a minute, maybe we put the financial crisis on hold, but we still get to have a recession. So that's how I feel. And I don't want to get too negative. I'm not out shorting the market. I'm not a hedge fund, but I just want to give people a really accurate picture that this feels more to me like a classic bear market than it does a correction or a dip or a quote unquote healthy pullback.
Yeah. Wow. Josh Brown saying we are officially in a bear market, and he is calling complete BS on the pump we got yesterday and is expecting some level of recession to inevitably happen based on this administration's policies, particularly that being of tariffs. I don't know if I fully agree. I mean, yeah, maybe not. I think it really, I think, so I'm trying to remember how everyone felt 2 days ago when the sky was falling. And the biggest feeling was these tariffs are insane. Trump announces most of the tariffs are gone. Okay, we get some reprieve. Now, what are we feeling like right now when the S&P is down 5%? Still, the China tariff is insane. Well, what solves that? Trump getting a deal done. And then maybe people don't feel like the sky is falling again, right? The question is that enough to be able to then, get us into a bull market where earnings growth is strong? Or is that just the tip of the iceberg in terms of everything else that's breaking in the economy, quote unquote, whether it's with jobs, inflation, whatever it may be, and that the deficit exploding based on this new bill that they got passed through the House today? And could those underlying structural problems actually matter way more than the tariffs and create the inevitability of a bear market? I think that's essentially what Josh Brown is saying. And maybe he'll be right. But I think we will, find out pretty soon. Justice says it was never the tariffs. It was always the credit and bond markets. See, but the tariffs created a lot of the problem in the credit and bond markets, right? Like, because the tariffs raised the expectations of inflation, which is a meaningful reason for bond yields to spike. And I wonder if Trump just didn't go this whole Peter Navarro route in regards to free trade, what the bond market would look like. But theoretically, if he talks down or walks down all the tariff stuff, the bond market should chill out. If he walks it back and the bond market still doesn't chill out, then not only is it not a tariff thing, it's a much deeper credit problem going on in the country. And that's where you start asking yourself, well, where's the bubble then? Right? What's if it's not the tariffs, what's imploding that we don't know about that's going to become obvious, but when it becomes obvious, it's a recession. I don't have an answer to that. I know some people think it's the housing market. I don't necessarily think that's correct.
But I also haven't done a lot of research on it. I don't think it's AI, although the AI bubble, I mean, if we get a full-on recession, yeah, it's going to be tough to see AI continue to be the thing people want to allocate capital to. But so what is it, right? What is it that people are massively over leveraged on that potentially could break? The everything bubble. Yeah. The everything bubble. It could be everything. Who knows, dude? Who freaking knows? Zocold says this will not last past end of summer. I anticipate volatility due to uncertainty for the next 4 months. That's my assumption, bro. I think if Trump comes out tomorrow and the China tariffs are gone because they got a deal, I think everyone gets super excited. And the market gets excited as well. Like, and again, if I had said, oh, Trump's going to delay the tariffs yesterday and people would be happy before he did it, no one would believe me because everyone felt so bad. I wouldn't even believe myself. But then he did it, and then we had a major reversal. If he gets rid of the China stuff, I think we still see that reversal. The question is, can we hold after that reversal, or is there truly a deeper problem going on right now? And I mean, I don't know. Eventually, we're gonna be here to find out. What if China retaliates instead? China's already retaliated, right? They've already done 84%. Maybe China retaliates against the 145% with 245%. I mean, maybe, but at some point, the numbers become so imaginary and it doesn't even become real that I think they come to the table and do a negotiation. But as of now, they are still fighting it out the way they're fighting. Will there be a halt today? I don't know what the circuit breaker target is, but no, the circuit breaker target, I can tell you right now, is 510. That would be 7% down. 7% is when you get the circuit breaker. So 510 plus or minus a couple points around that range, on the S&P, we should see circuit breakers. Wow, down more than 6%, 6.1. We've officially crossed 6% down on the S&P. My goodness, that is a new low for the day. Whoever thought we had a low of the day settled in 5 minutes ago, 7 minutes ago. Nope, here's a new one. New low of the day. A circuit breaker is when there's a 15-minute break in the market to get people to realize that the sky is not falling and to stop the selling. And then it resumes trading. And if people still feel like the sky's falling, they'll keep selling. And then we'll have another circuit breaker. And then I think after you have 3, it's halted for the whole day. Or if you get to a level that's so meaningfully down from where you opened at, then it's halted for the whole day. Got to be before 3:25 p.m. Yeah, it has to be before 3:25 p.m. as well. That's also another important thing. VIX 43%, bro. Holy crap. Yeah, this is aggressive. The only good thing about this is if you have covered calls, you're fine, but everything else is red. If you bought some VIX calls today, you're green. If you bought puts on the entire market today, you're green. If you bought stock or calls, you are red. Dude, 6%, again, 6% in a stock is whatever. 6% on an index is just, wow, 6.2. She's not stopping. She's not stopping. I wish there was a way for people to like apply force to just stare at the market and get it to slow down and stop falling. Like imagine we all had a collective force of just like looking at it and like pointing our finger and being like, no more. Bad boy, no more. You're done for the day. But it doesn't work like that. It just keeps going down. Wow, 6.3, dude. This one's, if somehow we go down 10% and give back everything from yesterday, that's going to be insane. Like I don't think there's any words I would have for that. That would be the most wild 2-day stretch of my time covering the markets. And I think I've been here, call it 5 years, realistically, really caring about it 3 years. I know people in 2008 probably saw crazier things. Dot-com bubble probably saw crazier things. But still, this would be one of the craziest 2-day stretches if we actually gave back all the gains. Someone sold a ton of VIX puts at 30 earlier. Well, someone definitely didn't trust the rally. So there you go. S&P right here still down. SPX is down 5.4%. SPY is down 6.3%. So you got the major index down about 5%. The derivative of that index down about 6.2%. Grab right here down 9%. Apple down 7%. Qs are down 6.2%. So that means the Nasdaq's probably down 5%. No, the Nasdaq is well down 6.3%. All right, so the Nasdaq's down 6%. The Qs are down 6%. SPY is down 5%. Hoodie's down 9%. GameStop's down 3%. And then Bitcoin's got to be down at least 3%, right? Bitcoin, yeah, 4%, 78 on Bitcoin. 78 on Bitcoin. Why is SPY down more than SPX? It has to do with how they're traded. SPX is the actual index that people trade options on. SPY is like the most well-known derivative of that index. So I think it just has to do with how they're traded and the overall volumes and volatility that goes into it. But that one is showing a further decline of about 6.2% currently right now. Amit, your thoughts on Nike? I would stay away. I mean, like, look, if you have it for the next 5 years, I think Nike's fine. But like the China risk is heavy here. Now, maybe when Trump announces the China deal, this thing pumps 7 or 8%, but I don't think that's enough to save it. If you actually looked at their earnings sucks. Their earnings beat guidance because guidance was so low that like they had nowhere to go but up. But the actual earnings were not good. So Nike, Lululemon, all these things that are heavily exposed to China. I mean, if you're buying it, you're hoping that there's a China deal and there's a pump after that. But if you're buying it for any other reason, it would be a long-term trajectory because short-term, it definitely feels they are heavily levered against China right here. Bitcoin 78.5, S&P again, about 512 on the day. 6.59, dude. Holy crap. This one's trying to go for 7%. we only pumped yesterday because it was Dougie's birthday. Yeah. Doug, we need it to be your birthday every day. Amit, so what is happening? My only answer right here is that bond yields are up. There's no headline or anything crazy. Bond yields are up and China is being tariffed at 145%. Those are the two reasons I can give you. Outside of that, I have no other reasons for why markets are getting hit this bad. Also, the third reason is that we're giving back some of the gains from yesterday, but I thought that would be 20 or 30% of the gains, not 65%, 67%. S&P 511 right here. SPX very close to 6% now. Oh boy, NVIDIA down 9.4. My goodness. It is time to send some stimmy checks, dude. It's not working. None of this is working. We need some stimmy checks. Wow. What a reversal, bro. There's the S&P, very close to 7%, 6.8. Dude, if we go down 7%, they might as well take it all away. Like if we go down 7%, just take away. There it is, 7% down on the S&P. I mean, you might as well take away the other 3% and just like do it. Like China selling US bonds and the yen carry trade unwinding. Okay, so China selling the bonds is probably true. The yen carry trade, I don't think there's a yen carry trade anymore because if you look at the short percentage on the yen, it's not as aggressive, but the yen is down 2.4% against the dollar. So that, I mean, I don't know if there's a massive unwind like it was on August 5th, but there is some level of an unwind that is creating some forms of volatility. Holy crap, dude. Let's try to get some more coverage. I was going to leave, but I don't know if I can leave, bro. This is too much. This is we gotta get to the bottom of this because it feels like there's potentially something else happening
that's causing all of this. This is insanity. 70% of the gains off of a historic day. SoFi down 10%. Gone. And hold on, we should be getting a circuit breaker too if this... Okay, we bounced immediately when we were down 7%. I think that's why we didn't get a circuit breaker. But if we revisit that low and go a little bit below that, circuit breakers start down 7%, then down 13%, then down 20%. Those are the three levels for circuit breakers. So, I mean, I would imagine if we keep falling, we're going to hit one of them.
It's on a dime, which it can, but it definitely, especially with the unrest, can become a self-fulfilling prophecy on top of CEO sentiment. And it's just hard to believe that we're on the precipice of earnings seasons. And I think every company is going to come out like Delta and say, I don't know. I don't know guidance. How can you say that with a straight face as a CEO? I think the banks will be really interesting because they're at the epicenter because they have how much are they going to spend, M&A, et cetera. And so I think we're going to continue to be in this, I still think this 2018 environment on steroids. And if you go back to 2018, you had 8 drawdowns between 8 and 15%. Half of those drawdowns were between 10 and 15%. And I think what other, nugget you have to sprinkle into this is the Fed is not going to come in. There's no Fed put here unless, let's say, something breaks, but there's no Fed put because they're not going to be contra to a strategy or tactics they're not aware of.
No, but if, people were speculating yesterday who just watch markets well, like Mohammed El-Arian, for example, who joined me on Closing Bell, that in his mind, the Fed wasn't that far away from having to do something. Whatever the something is, that's not a bullish environment.
Stabilizing the treasury market is historically not bullish. Yeah. I would also point out that 45 basis point swing in the 10-year is maniacal. Like, this is not, again, I want to say, oh, it's a pullback. Just pick your favorite names and load up. I think you should be a buyer if you have a really long-term time horizon. You should not expect that the buys you make today will necessarily be rewarded a week from now. It's just a different environment. A 45 basis point swing in 3 days is the most that we've seen since 2022, which is another legit bear market. We've only seen that 7 other times going back to the year 2000. And on every single instance, the S&P was down 25% or worse that we've seen that. So again, that is a classic feature of when the S&P is down big, you get those huge swings in the 10-year. Now, I want to take it a step further and say, okay, great, we have the carnage. I just don't know if it's gone on long enough to really register.
You've got the market down 15% from highs, 18% for the NASDAQ. You've got stocks that are down 30, 40, 50% from their highs.
Agreed.
So I would say, yeah, there's things to be concerned about, but you've got to look at opportunities for the long term.
But here's the problem. Then so you buy a stock 35% in the hole, come out with earnings not as bad as feared. Maybe they even give guidance. 43% of companies in the S&P 500 give sequential guidance. So that would be great. And then the stock rallies by 10%. You say, I made a great buy. And then a week later, it's rolling back over lower lows. This is the main concern right now, I think, amongst Wall Street strategists. It's not, are these stocks compelling values? It's, is there a trapdoor in what looks like it should be the low?
Brenda.
I do think, though, from our perspective, you have to look beyond what the next couple of months are going to bring.
Totally agree.
And think about a year from now, is that going to be a good entry point into that particular stock? And that's the tact that we have taken. And
Oh my goodness. SPX, which is what the circuit breakers are determined on, not SPY, is down 6.1%. It has another 0.9 before we hit a circuit breaker. So SPY officially down 7%. SPX, if this continues, it's going to be there soon.
You're right there, and you have a front row seat to this reversal today, which is just downright ugly. I mean, the Nasdaq's down 6.5% as we speak.
And you guys really just laid on all of the reasons spot on. I'm saying that this rally is masking underlying vulnerabilities. You know about the minimum 10% baseline, the 145% tariff on Chinese goods still in play. As you said, Scott, those herd of elephants are going to hit OEMs hard. Dell, HPE, think of those stocks. They're down over 7% right now. We're also facing semiconductor tariffs that could still be coming in the next few months, even if they're on hold now. You have the AI diffusion export controls coming in mid-May. Remember, Biden put those in place. That's a big impact for NVIDIA. They're going to create supply chain disruptions, lead to unpredictable business results, and then that's causing companies to rush their orders in, so pulling forward, which would artificially inflate earnings this season. So this uncertain environment is really making it tough for companies to plan ahead. You guys talked about it, and Scott, you questioned about guidance. Well, Jeffries points out this morning that management teams will probably guide with, quote, extra conservatism in the upcoming earnings season. And then you've got let's add another vulnerability. 10-year treasury hitting a 7-year high yesterday, signaling higher debt for a lot of these companies, specifically at the NASDAQ. AI spending sustainability is another huge theme. Yes, Google's sticking with their $75 billion in 2025 CapEx commitment. Amazon CEO, I know you guys talked about it, Andy Jassy, told CNBC this morning they're not going to cut back on data center spending right now, but he did hint that AI won't be as expensive in the future. So what does that suggest? NVIDIA either needs to get cheaper or face viable alternatives. And then let's not forget Microsoft. They already started pulling back on some data center spending. We had that news yesterday, specifically with Ohio. So you put all of those vulnerabilities together, and we're looking at a potential growth slowdown, and that is troubling for the big tech companies that have been bankrolling on AI's expansion, guys.
Christina, thank you very much for that, just helping us layer in what's really happening. Let's show the 10-year yield as well, because an intraday, if you could, please, because as you see the 10-year yield elevate to the highs of the session, you're seeing stocks move to the lows of the session. Same sort of move you had yesterday. The 10-year is still green. It's at 435. It may not be as high as I think the 451 it got to yesterday, but it is significantly higher than it was pre so-called Liberation Day. So that's worth keeping an eye on, because that is not an optimal thing to have happen. I should also, we should have this conversation of what really changed yesterday. They reduced the numbers in terms of tariffs down to 10% from numbers that most people thought to begin with were absurd, that were gained through a formula that nobody believed in or thought was valid.
ChatGPT.
Okay? Seriously. So we took numbers down to 10% from numbers that people thought were already ridiculous. Okay? At the same time, we raised the number to 145% on China. And we're surprised that the market is reacting the way it is now. What do we do with that?
I think we want to start thinking about. I think we want to start thinking about the two things that matter most to stocks. Once all the Rose Garden meetings and all the rhetoric, once that becomes a little bit more background noise, I know it's been front and center. We're going to get back to the two things that matter most, which are earnings and interest rates. The good news on interest rates is that we put a floor in the trade war downturn in stocks when the Fed finally woke up. It took them until Christmas Eve, 2018. They were still saying insane things as late in the year as November, like we're nowhere near normal or nowhere near neutral on the Fed funds rate. And then Christmas Eve, they were like, just kidding. And then by January, they embarked on the first of 3 rate cuts. And the rest is history. 2019 was a wonderful year. Stocks have been very cheap going into it. Multiple expanded earnings grew. We all lived happily ever after. That is a possible outcome to all of this. And we should just remember, once the Fed does decide that it's needed, it does provide a huge tailwind to stocks. And that's why it's hard to get too negative here.
Okay. I wanted to go there.
And then you've got, all right, let's do the Fed first.
Let me do this real quick. No, because when you say it's hard to get too negative from here, I think people learned their lesson, Steph, to some degree yesterday of trying to get too negative with a president who thinks he can flip the switch, so to speak, at a moment's notice. And
which we might be seeing right now, retail selling, people feeling like, oh my God, I can't handle this volatility again. And then it might flip if Trump decides he can flip the switch. So, I mean, we're getting some green candles right here and having a little bit of a level off, but there probably is some panic selling again happening today, which might not be the best move if Trump decides to flip the switch when it comes to particularly China tariffs.
And, you know, the pivot that he did, what happens if President Trump comes out at some point, today, tomorrow, who knows when, if it ever happens, and says, I just had a productive call with President Xi, and we agreed to have negotiations and whatever. What does this market do?
Explodes
15%.
Explodes higher. Explodes higher. You have to get
All
resolution.
it takes is that.
You
and
need
won't be able to buy it.
resolution. You need some sort of resolution and clarity with China so that at least we could figure out what the numbers are going to mean to companies and to earnings. Right now, we just don't have that at all. But I'm not good enough to time, Scott. I'm looking at what you guys tend to look at more than me. The relative strength on the S&P 500 got to 23.
Yeah.
23. That's the 12th lowest in 20 years.
This guy's Mr. RSI over here. You're
He
preaching.
is. I know, but the fear and greed index got to 2. You know the last time it was a 2? COVID. And the great financial crisis, it was 12. So to me, and the VIX, you mentioned the VIX, had the 3rd best week ever last week. So I'm looking at investing and I'm thinking long term, like Brenda, like all of us pretty much, right? I'm not going to get the bottom, Scott, but when I see these best-in-class companies go on sale across every sector, right? You can pick and choose. I'm not going to catch the bottom. I mean, I feel horrible on a day like today because the stocks that were up a lot yesterday are now down a lot
It's funny.
today.
I have a lot of stocks. I have a lot on my screen. The only thing I have green on my screen.
Gold.
No, well, I don't have gold like in front of me. By the way, gold's been down too. Speaking of no place to hide, is the VIX.
The VIX.
Right.
Every single other stock on my
Judge,
screen.
you don't need
is red.
you don't even need an agreement with China. An announcement.
I didn't even say an agreement.
An announcement.
I just said we had a productive call.
Yeah.
What does this market do?
That's it. I'm gonna meet with President Xi, who I love very much. We have a great relationship. We have a great friendship. That's all you really need, and that's why it's really dangerous to be like, oh, the market's down 18%. Let me get super negative now.
Right.
I get it. We could go lower, and again, I'm the first to say, technically, this market's in a really bad place. But because it's so event-driven,
yes,
and because it's not yet a full-blown cyclical recession, we're not there.
No,
and we could get there, but it's not guaranteed. So while it's event-driven, I think staying nimble and accepting that there are going to be horrible days like this, incredible days like yesterday, you either want to be a day-to-day participant in that swing trade, or you want to think long-term and just say, I don't know if this is the right time, but this is the right valuation.
What about?
Yeah, I think I would agree with that take. I mean, at the end of the day, it's the take I think most of us have had the full year. S&P now getting some green candles, only down 5%, which is that it could turn really ugly, and it is already very ugly. But at some point, the ugliness ends, and you would be happy that you bought the dip through that ugliness. So Josh is also right. We haven't had enough of the factors to easily prove that we're in a recession. Now, could we get there? Sure. But look, everyone felt the sky was falling yesterday. Trump announces a pivot. It feels like the sky's falling again. What happens if he announces a China pivot? Like, I would tend to say stocks go up immediately. Now, then the market has to figure out, okay, what exactly did he announce? And what does it mean for Apple and Amazon and Walmart and all this stuff? But if we announce a really good deal and tariff inflation is not as strong because of whatever tariff rate they agree on, hopefully not 150%, then that CPI number starts to look more attractive at 2.4, and then we probably get rate cuts in June and July, and you could and then earnings growth is strong. You could piece together the bull narrative and easily see the S&P 500 much higher than it is right now. But obviously, until you get that announcement or that pivot, then we're going to be experiencing this volatility. S&P 500 right there down 4.5%. So it was down 6.2, very close to that 7% circuit breaker. We got some green candles right here, getting us closer to only down 4%, which is better than being down 7%. NVIDIA right here down 7.2, but still an absolutely incredible market that we are living through right now. Yeah, I know I'm saying only 5% calmly, but we got 10% yesterday. If we can hold on to 50% of it, I wouldn't be the angriest person right now.
Okay, so Trump is going to be having a cabinet meeting today. Oh boy. We're going to hear a lot more from Trump later today. When does this cabinet meeting start? It starts. When does this thing start, dude? Dude, this guy goes live more than me. I don't remember Biden ever live streaming a cabinet meeting. It's like every day he's doing like 4 or 5 live streams. Literally every day. And he's probably going to say some more shit in that live in the cabinet meeting, and then people are going to react to it. And it's like there's more and more comments every single day. Trump turned the market into a shit coin. That the S&P 500 is trading like a meme coin. Like, this is insane. But yes, he has turned the market into almost a meme coin. Like, indices should not be moving more than 1 or 2% a day. And even that, a 1 or 2% day to the upside or the downside is a massive move for an index. So 5% being normalized, which is kind of starting to be normalized above that 2.5% range, is scary. Because I don't know if we want the markets to trade like that. It's 2022. Yeah, it feels very much like 2022. I miss Sleepy Joe. Dude, that's the one thing about Biden, bro. He didn't say anything. Like, no one knew what he was thinking. No one cared what he was thinking. With Trump, it's like every freaking syllable gets digested. VIX at 52. My goodness. Yeah, VIX right here. Wow, 57%. Last time we checked, it was up 45%. Now it's up 60% on the day. Goodness gracious, bro. It feels more crazy than 2022. Yeah, I mean, well, 2022, I think everyone knew how bad it would be because of the rate hikes, even though people felt it, like Jay Powell wouldn't raise it as much as he did. And that was the surprise. This one is not about rate hikes. It's about just not knowing what's going to come out of the guy's mouth and what impact that would have on the markets. And I think that's the difference here. But it also feels like, hey, there was this one funny meme I saw this morning. I forgot the meme, but the caption was S&P 500 was down 20% in 3 days and you didn't buy, with a question mark, right? So it's one of those things where it's like, in hindsight, it looks like, oh, how could I not have taken a nibble here? And maybe today's the same. S&P giving up 50% of what it got yesterday off of what? China headlines, whatever it may be. Like, maybe that's the same feeling you're going to have going into next week, but maybe it's not. And I think that right there, that like lack of knowing is what's creating the paradox. And you're not supposed to know everything in the market, but you're supposed to have some level of certainty. The fact that everything is uncertain, which is kind of what Trump wants. He wants to keep everyone on their toes. The NASDAQ's still down 5.65%. That is what has created the type of market that we're in right now. It's a tweet market. Yeah, exactly. It is a tweet market. All right, well, at least we have some green candles. At least we have some green candles right now. Am I muted? Hold on, am I muted? Hold on, was I muted or not? Oh, no, that was you guys trolling, bro. That was you guys trolling. That was definitely you guys trolling, dude. Okay, good. We're good. We're good. Dude, after like 2 muteds, I'm like, oh my God. At this point, one day one day, and you're going to have no one to blame but yourself. One day I'm really going to be muted. And I'm going to see all the muteds, and I'm not going to check. I'm not going to give into it. And then I will be talking and doing these hand gestures for like an hour, and I'm not going to be checking the muted, and you guys are going to have to sit through that. So if that happens one day, it's only you guys to blame. Is Trump actually live right now? Is the cabinet meeting started? We can stream it if it goes live, but usually I don't think it happens this early. Yeah, the meetings tend to happen more close to the end of the day, so I don't think it's going to happen right now. But they're going to be talking about the tariffs. They're going to have to be talking about the tariffs. I mean, like, that's going to be the big thing they talk about. So we're going to get a bunch more headlines from that as well. The chat that cried muted, exactly. Yeah, can I get a refund on the manicure, dude? Oh my gosh.
Oh my gosh. VIX 61% up on the day. All right, I'm buying some stocks, dude. Screw this. VIX above 60, I'm buying some stocks. I don't care. I'm buying some stocks. Let's buy some stocks, bro. This is dumb. VIX above 60, we're going to DCA. We're going to do some DCA. All right, hoodie. Hoodie, we're going in with a solid 20 shares. Nothing crazy, 20 shares on hoodie. We're doing 20 on hoodie. All right. There you go. 20 on hoodie. We got some more hood. 39.05. NVIDIA, 910 shares. We got to finish this bad boy to 1,000. I think we do 10. We do 10 on NVIDIA. We do 10. Add 10 more to the stack. All right. 105.94. 920 shares. Average cost 120.41. And then we're going to do 50 shares on Grabby Grab. Very simple. 50 shares on Grabby Grab. Nothing crazy. 391. 50 shares on Grabby Grab. Dude, Meta, look, I'm not going to lie, dude. I've been waiting to get into Meta for a minute now. It's down 7%. I've been waiting to get into this thing. And this is the hard part about DCing, because I would buy, but I saw this thing at 487 yesterday. So it's really a question of, do I think we're going to see 487 again? And it's like, maybe we do. And I feel like Meta's earnings should be fine, but I'm also like, well, Meta's earnings, if Zuck says anything about guidance, that's a little bit like, maybe I should get below 540 here. And I don't have to be greedy and try to get it right now. So I don't know. But Meta's on the list. I've been waiting to get back into Meta for a while right now. Where's the SPX? Still down 5%. Now, if we recover 5%, that would be nice to see, but or even recover another 2% from here. Where's the 10-year? The 10-year is slowly coming down. All right, good. Things are normalizing a little bit. 10 years coming down a little bit. Market's recovering slightly. Not aggressively, but slightly. NVIDIA still down 7.5% on the day. Isn't that what cash curve puts are for? Yeah, that's true. That is true. Cash curve puts are for trying to have a strike with a better entry, so that's fair. I just don't know if I want 100 shares of Meta right now, dude. Like, I think at this point I want to consolidate into the big tech positions I have. And I also want to see earnings now. Like, now I'm nitpicky. Like, now I want to really see the numbers, right? You buy a stock before earnings, you have a lot of faith that, like, NVIDIA before earnings, I think is okay. Even though earnings, yeah, it could be bearish somehow, but I think their growth is going to be so strong compared to where they've sold off to. I think it'll be okay. Meta, I just don't know enough about Meta to say, hey, the decline in the stock severely underestimates their earnings growth, which for NVIDIA, I can say that with a lot of confidence. But with Meta, I don't know if I can. And so that's why it's a little harder to not have the earnings picture. Dude, I haven't bought VG yet because I don't know enough about it. I know Chris loves it, but that's one of those where if I buy, you just hold it forever and never look at it, right? So yeah, I haven't taken a stab at VG, even though I think his thesis along with Matt's thesis is pretty strong when it comes to natural gas. United earnings is on April 15th. Okay. That'll be important. What about Hood earnings? Hood will put up at least 900 million in revenue, in my opinion. So Hood will grow 40%, but it matters about Q2 more than Q1 because the market already knows they're going to have a good one. But Hood should have a good quarter regardless. What else can we buy, bro? Oh, here's one. I think I'm going to buy this, and I haven't bought it. We're going to do it today. We're going to buy 100 shares of this officially. We're going to do the whole process together because I've been waiting to do this. Today, we're going to do it. We are going to buy 100 shares of... Does anyone want to guess? Anyone want to guess? Is Trump actually live? Is Trump officially live? Oh, no. Okay. All right. I guess we'll buy this after. Here we go.
Trump is live. Trump is live.
The markets. So we're very, very happy with the way the country's running. We're trying to get the world to treat us fairly. This is something that should have been done 25 years ago, and it wasn't. Should have been done 40 years ago, and it wasn't. But no president was willing to take it on, but you had to. It's not sustainable. It wasn't sustainable. And as you know, without a lot of money being added, which is a lot of money that we could add, the country is making approximately $2 billion a day. And when you think of it, we've never done that before, never come close to it. And the number is probably $3.5 billion a day. And that makes us a very strong country. But we have Scott here and Howard and some of the people that are working on deals. And the biggest problem they have is they don't have enough time in the day. Everybody wants to come and make a deal. And we're working with a lot of different countries. And it's all going to work out very well. I think it's going to work out really very well. But we're in good shape. There's no inflation. There's very little inflation. And I went 4 years without inflation, and I took in hundreds of billions of dollars from China and others, taxes in China. But we took in hundreds of billions of dollars a year from China, and we had no inflation, essentially. So we think we're in very good shape. We think we're doing very well. Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing. We're doing again what we should have done many years ago. We let it get out of control, and we allowed some countries to get very big and very rich at our expense, and can't let that happen. It's not a sustainable formula. So I wanted to just thank everybody at the table, and maybe I'll go around and ask some of you a little short couple of answers. Pete just got back from Panama, and he's been all over the place, and you want to give us a little report on that and whatever else you might have to say. Everyone at this table is doing an incredible job, by the way, I have to say, incredible. And the relationships it's like they're friends. They're really, the relationships are very strong, really good, really strong. And these meetings are very good. And I think, I don't believe there's any other president that allowed the press to come into a meeting such as this. These are very sacred meetings. These are very private meetings, but we have nothing to hide. And I think it's good. I think it's a good, we want to be, a word you like to use, Jeff, is transparent. So we want to be transparent, and we'll do that by starting with Pete. Go ahead, Pete.
Yes, Mr. President, we just got back from Panama last night. We were at the Panama Canal with their Southcom commander ships, F-18s, troops, and signed a couple of historic deals. One, which is with the Panama Canal Authority, a framework for U.S. vessels, first and free through the Panama Canal. Right. And then also a memorandum of understanding with their security minister for the presence of U.S. troops. Fort Sherman is an old U.S. base there, as well as a naval station and air station jointly with Panama to secure the Panama Canal from Chinese influence. That's something you said, we're taking back the canal. China's had too much influence. Obama and others let them creep in. We, along with Panama, are pushing them out, sir. And so we had a very successful trip there. President Molino sends his regards, very complimentary of the U.S. as he's a great ally. And I think they want the communist Chinese out. And with our troops there partnering with their forces, we've got a chance to push them all the way out, sir.
We've moved a lot of troops to Panama and filled up some areas that we used to have, and we didn't have any longer, but we have them now. And I think it's in very good control, right?
Yes, sir.
Okay. Thank you, Pete. Very good. Howard?
So, so we've have so many countries to talk to. It is, it's incredible. I think Scott and I, I'm not sure we could ever have enough time in the day to talk to all these countries because they want to talk and they want to talk now. And they've come with offers that they never, ever, ever would have come with, but for the moves that the president has made, demanding that people treat the United States with respect. We're getting the respect we deserve now. And I think you're going to see historic deals, one after the other. And then I'm very excited that within a week and a half, we're going to start with the gold card, and the Trump card is coming out. And we're very excited about that. And that's coming soon. So very excited.
Thank you very much. Good job. Linda?
Well, on a couple of fronts, we have been addressing the issue of anti-Semitism on campuses. There's been some grant funding and contract funding that we've reviewed, and some canceled and some we've put on hold, waiting for that while we do an investigation. On the other side of what my responsibilities are in having education go back to the states, we're meeting and talking with governors. I was with this week all 50 commissioners of education around the country, and because we also want to provide them with tools and best practices as education does move back to the states. Making great progress, great response from the states, and very positive.
And what about colleges? You're holding back $400 million from Columbia,
From Columbia.
$8 billion from Harvard. Can you imagine the money we pay Harvard? They have a $60 billion fund, and we're giving them $8 billion. And we're trying to figure that out. And then
That I agree with. Why the hell are we giving Harvard $8 billion? Like, they have a $60 billion endowment that's invested in a lot of good assets. I don't get why they get federal aid from the United States.
they hire de Blasio, the worst mayor in the history of New York, and they hire the woman from Chicago who was a disaster, total disaster, and they pay them massive salaries, and they're supposed to be teaching you government. That's not Harvard. That's not Harvard the way it used to be. So do you have anything to say about that? The dollars you're holding back from quite a few universities that were not behaving.
Yeah, and the other, there's some Princeton, Cornell, others that are coming in, and actually getting calls now from the presidents of the universities who really do want to come in and sit down and have discussions. And so we're investigating them, but in the meantime, we're holding back the grant and fund money.
Great job. Thank you.
Very thankful for the House voting for the president's budget resolution along with the Senate bill. Made a ton of progress this week in working with members to ensure that a desire for flexibility in the Senate was not misconstrued as a desire not to slow and do spending reforms. And so we're very thankful for that. And now we can get after writing that bill, getting the president as big a package of his agenda to his desk. So very good week.
Good. And so we just got the House vote, and now we're well on our way to getting, as we call it, the great big beautiful bill. It's a beauty. There's never been a bill like this one. We're trying to get it all into one beautiful bill. It's tax cuts, regulation.
We got a headline. China and the EU have begun negotiations to eliminate EU tariffs on Chinese electric vehicles. So this whole tariff debacle has got China and the EU talking to get rid of EU tariffs on Chinese EVs. Most notably, BYD would be meaningfully benefited from that. But it looks like we are getting some more negotiations that are taking place.
Inflation cuts and many other things. And we're happy to get the vote. So I think we're going to be in very good shape. Okay, please.
Mr. President, last year, the Chinese received 1,700 orders for new ships. American shipyards received 5. Under your leadership, like so many other industries, we are going to revitalize and make shipbuilding and maritime great again with these blue-collar jobs. These are the cranes, the ports, opportunity zones, and drive that investment back in. We have, under that executive order, and also one to streamline foreign military sales for people that want to buy our equipment, and of course, acquisition reform, all just this week under your leadership, Mr. President.
So we're going to be rebuilding our shipbuilding business. We may order, would have to go to Congress for this, but we may buy some ships from other countries that we're close to and that do great jobs with ships, but we're going to start the process of rebuilding. We don't really essentially build ships anymore, which is ridiculous. It's going to be a very big business for us in the not too distant future. But in the meantime, we have countries that do very well at building ships, and we'll be dealing with those countries, and we may be ordering top of the line ships from those countries. and within a fairly short period of time, we'll be building our own chips. So we'll probably have to go to Congress for that, but we're not going to have a problem. Susie, thank you very much for the job you've done. Go ahead, please.
I just want to make sure you know that this cabinet, I think, pretty uniquely collaborates and cooperates and works together to accomplish all that you've asked them to do, and I think they deserve a lot of credit for that.
True. You're doing a great job. The chief of staff, doing a great job. Lee, go ahead.
Mr. President, the Biden EPA was strangulating the economy. The Trump EPA understands it's not a binary choice. We can protect the environment and grow the economy. Working with Doge and Elon Musk, we've now canceled $22 billion worth of grants. And we have launched what is the largest deregulatory action in the history of the country, just in one agency. That's how much of a mess the Biden EPA left us. It is going to end up reducing the cost of living. It's going to create jobs. It's going to make it easier to purchase a car. It will be easier to heat your home. We're proud of this effort. The effort that we have is fulfilling the mandate that you earned from the American public. Clean air, land, and water for all Americans, unleashing energy dominance, permitting reform, advancing cooperative federalism, making America the AI capital of the world, and bringing back American auto jobs. When you called me that day asking for me to take this position, I was honored. And you were very specific and clear in what you wanted us to accomplish. We understand our mission, and at the Trump EPA, we're going to make you proud.
Yeah, if you guys haven't figured out, this is definitely an ass-kissing session, but this is why they're allowing cameras into their cabinet meeting. Tho, thank you for the 20 gifted, brother. Appreciate you for the 20 gifted. Thank you for everyone who's still live with me. I think this is one of the longest market opens ever. We're probably going to come up on 5 hours here. At this point, I feel like it should go until market close, but I think I'm going to need like a little bit of a break before market close. We'll see. We have 3 hours until the close. Like this might just be an 8-hour show every day. I don't know. But yeah, thank you for the 20 gifted. Really appreciate you. It seems like all these officials are just announcing what the Trump administration wants them to announce. Again, that's kind of the point of this public cabinet meeting, but you should probably get used to them basically saying, President Trump, you are amazing, and everything is going perfectly.
You're doing a great job. And you have a lot of applications for approvals for power plants, which are going to really power the regular plants, and they're going to be right next to each other because we can't rely on our grid. It's old and it's tired, and it's, very, very subject to being attacked, whether by rain or by bombs or by anything else. And we're letting them build their as part of your regular plant. You're going to build electric producing plants, and it's very exciting. And they're able to do it very quickly and very well. And you made it possible. Thank you. You have a lot of applications for some of the biggest plants that have ever been built in the world. These are serious plants, aren't they? Huh?
Approved. We are open for business. Working with Secretary Burgum, Secretary Wright, we are going to make it proud.
Sean?
First off, Mr. President, it's Brooke's birthday today, so she keeps getting younger. So happy birthday to Brooke. Thank you. I want to thank you as well for the shipbuilding EO. Again, to build ships, you also need mariners to sail those ships. I was just up at Kings Point for the Merchant Marine Academy, who are learning DOT to get these grant agreements done and build the projects. Most of them are good. And they also put in all of this green and social justice requirements on roads and bridges. We're pulling all that out and putting the money toward the infrastructure, not the social movement from the last administration.
Good steel, right? As opposed to green paper mache. Okay, thanks. Great job.
Sir, first, we are, I would say, more than friends. We've all become family. And I think that what you have assembled in your vision is a turning point and an inflection point in American history. And so just being a part of that is the greatest honor. So thank you for that. And again, just the relationships here and the honor and respect we have for each other is a reflection of you and your leadership. So I just wanted to say that first. The second thing I want to say is that on behalf of the farmers and ranchers, food security is national security. We have to be able to feed ourselves. And your idea of using tariffs along with deregulation and tax cuts But your idea of using tariffs to ensure that we are putting forward and putting America first, no one understands that better than our farmers and our ranchers. But having said that, emerging from 4 years of Biden with a 30% increase in inputs for our farmers and ranchers, with an almost $50 billion trade deficit. When we left the first time, it was zero, meaning that they are hurting. So the period of uncertainty we're in, they know that your vision will move us into an age of prosperity for all Americans, but for my people, for the farmers and the ranchers.
If I was at this meeting, I would order some Krispy Kreme donuts because the glaze is unbelievable right now.
And ranchers unlike any they have seen before. And I think they are really, really excited and so grateful for your leadership. But also, you have never failed to say that you have the backs of our farmers and our ranchers. It was the first phone call that I had after I was voted with the Senate. And that message just resonates with an almost 85% support of you in the last election. They're with you. Interestingly, the biggest budget driver at the United States Department of Agriculture is not farming and ranching or agriculture, it's food stamps. And so as we emerge and embark, Secretary Kennedy and I, on your vision of making America healthy again, a massive part of that is realigning and reworking our food stamp program so that it better serves those who need it. And yeah, to the point of getting the transgender, DEI, Green New Deal out of the USDA and realigning is really important. So
Takes out of the
thank you.
military, right? Is it 100% out, would you say?
99.9, sir. I'm going to get that last point.
Get the rest of it.
But thank you, sir.
We've got a much different military, I will tell you. Thanks very much. Good job. And eggs are down
Eggs are
big,
down.
right?
Yes,
Big.
yes, sir. Wholesale prices. Retail will come. Easter is the Super Bowl for eggs. So, you know, there may be a little fluctuation, but no, we feel really good about it. Thank you.
That's what I hear. Thank you.
Thank you.
Good. I'd echo what Howard said on the trades queue, that we've got over 75 countries that want to come in. So it'll be Treasury, Commerce, Jameson at USTR, and we're putting a process in place. And as you said, you're going to be part of the negotiations too, because you know, I've had these countries call me up and the Secretary Bessem, we're happy you're going to be negotiating. Well, President Trump's going to be involved too.
Every
So
detail.
bring your best deal on the budget. On the budget, it's moving quickly in the House and the Senate thanks to your leadership. We're also going to have debt ceiling in there, so we're going to get an increase in the debt ceiling. So, and that will be the done and dusted for
Part of the bill that we just got to vote on today.
part of the bill. It'll be done and dusted for 2 years. We won't have to worry about that. And then I gave a speech yesterday to 1,400 small and community bankers, and they were so happy to hear from your administration. And I told them Wall Street's done great for the past 4 years, 10 years, 20 years. It can continue doing great, but it's Main Street's turn now. And it's those small bankers through deregulation, through emphasis on Main Street, your Main Street agenda, bringing back jobs, that is going to power the smaller communities. And then finally, the bond auction went very well yesterday. We had a lot of foreigners show up as the support, showing that the U.S. is still the best place to invest. The inflation report, as you said, was quite good. And energy prices are down more than 20% since January 20th.
Amazing.
Great. Very good. Good numbers.
Great number.
Thank you.
President, we've had some great wins in the last few days that, you know, you were overwhelmingly elected by the biggest majority. The U.S. Americans want you to be president because of your agenda. And the courts are ruling that you have the authority to determine how the money of this country will be spent. That's what the American citizens wanted, and that's what they're getting. An example of that Friday was the Department of Education, that you can determine how the money will be spent. No more DEI. And that impacts every agency across the board. On the civil side, again, NLRB, we had a big win in the Supreme Court there. OPM, a big win there. But also 16,000 workers there. But also on the criminal side, the Alien Enemies Act, we are winning there. And, you know, your directive to me was to keep America safe. And that's what we're doing, whether it's the alien enemies, all of these gangs, and they are enemies of our country. They are terrorists. They are organized crime. They have come here. They are extremely organized. They are spread throughout our country, and they are creating terror, and no more under your directive. And that has stopped. Yesterday in South Florida, we charged the 11 defendants with $500 million of pure cocaine coming into our country to kill our kids. They were caught. They will be prosecuted to the fullest extent of the law. These gang members are going back to where they came, or they're going to an El Salvador prison at your directive. And, you know, you also gave us a directive to prosecute the people who are going after Tesla to the fullest extent of the law. Some of the greatest police work I've seen. We've made 4 arrests. There will be no negotiations at your directive. They're all looking at 20 years in prison. And within the next 24 hours, you're going to be seeing another huge arrest on a Tesla dealership, President. And that person will be looking at least 20 years in prison with no negotiations.
That's great. That will stop it. Cold. Thanks. Doing a great job, too. Thank you very much. All right.
All right. I think that is it for today. Those were pretty much the main people we wanted to hear from. Besant, Lutnick. I mean, those were the only 2 people. Bondi as well, but Besant and Lutnick and Hegseth on defense, tariffs, rates. Besant said, hey, we still got 75 countries we're negotiating with. He says that Trump will be personally involved in the negotiations, so it's not just going to be him and his team. And he also said that their priority is to make sure Main Street wins as much as Wall Street. So I guess we're going to see how that ends up playing out. S&P is still down about 6% on the day on SPY. SPX down about 5%. Grab right here down 8%. Apple down 6%. NVIDIA down 7%. The NASDAQ still down almost 6%. And then Nike down 11%. The Qs again down 6%. Apple down 7%. Getting a slight recovery from the absolute lows of the day, which I believe were put in, around 12:30. That's when Apple was at 183, but still meaningfully down for the day. All right. I think that's it for me today. This was a 5-hour stream. Eventually we will do a full day stream, but I don't think we're going to do it today. The market's down, in my opinion, even off the yesterday 90-day news, because I actually put up this tweet. I'll just share it right here. There's like 5 things that are still creating a decent chunk of volatility. Number 1, the China 145% tariffs. Number 2, the 10% tariffs across the world, flat rate. Number 3, the budget plan increasing the deficit. Number 4, the lack of clarity on these 75 countries that are being negotiated with. And then 5th, earnings guidance that will still be affected because of all the tariff noise. I think it won't be affected as much anymore because of the 90-day pause, but it still will be affected. And so those 5 things are why the market, and then the general just giving back some of the gains. Market is not just going to pump forever. So I didn't think it would give back 60% of the gains, but you put those reasons together, that gets you some volatility here. Dude, what the hell are you still doing on? I thought it was a joke when I clicked on your video and you're still live. Dude, the market was falling. It was tanking when it was time to go. And so we just stayed. Okay, let me buy 100 shares of that stock I told you guys I was going to buy. I don't think anyone got it in the chat. Cheeky, thank you for the 10 Singaporean dollar super chat. Appreciate it. Thank you for the super chat. And Tho, again, thank you for the 20 gifted memberships. Okay, it is IBIT, Bitcoin, doing a little DCA into Bitcoin. 44.73, down 5% on the day. The reason I'm buying this is because I want to sell calls against this that are highly volatile and get some premium. Now, I'm not going to sell the calls today because if I try to sell calls, all of them are down 30% because the market's red. So I'm going to wait until we have a green day to sell some calls. But yeah, good old Bitcoin. I've been saying since the beginning of the year I wanted to start DCing into IBIT. Look, Bitcoin at 78. Could Bitcoin go to 50 or 30? Who knows? But it is substantially down from 109,000. So if there was any time to start the DCA and sell calls against it, then we are doing it now. And we're already down $7. So there you go. We're already down $7 on the purchase. All right, cool. Yeah, not MicroStrategy, dude. Like I mean, I'm a fan of MSTR. I'm a fan of Sailor. I'm not a fan of how volatile it can get. IBIT's a little bit less volatile, which is easy to deal with. And also, IBIT's just Bitcoin, right? MicroStrategy, they have a whole host of shit they got to deal with. But at the end of the day, IBIT is just Bitcoin, so it's not that bad. All right, cool. I think that's it. Thank you, everybody, for being here. Fun day, 5-hour stream. We gave back a decent chunk of the gains that we got yesterday, unfortunately. We still have 3 hours left in the market. Maybe we can recover some of those gains. S&P 500 right here down 5.46% on the day. Bottom was 511. Right now we're at 515. Hopefully we can hold it. And if we do, then maybe we get to walk away without too much pain. NVIDIA right here still down 7% on the day. Again, it's still a nasty day, but a little bit better than an hour ago. Word of the day. Yeah, we should do that. I forgot. Word of the day. All right. Word of the day. This is a weird one. Word of the day. Yeah, I'm going to end it after this. I'll be back on the market close in like 2.5 hours, but I will end it after this. Everyone can get a little bit of a break. Word of the day is riparian.
Riparian.
Of or pertaining to the bank of a river. Scientists conducted a study on the biodiversity of the riparian ecosystem. The riparian rights grant homeowners access to a private stretch of the river. Interesting. You know, this is what my girl calls me, because she feels like a river whenever I talk to her about the bond market. So there you go. Thank you, everybody, for joining. I'll be back at 3:45 p.m. with the market close. That was good. You can't say that wasn't good, bro. You can't say that wasn't good. That was a good one. That was not a bad one, dude. You can't say that was bad. That was decent. That was decent. You can't wet river, get it joke. Okay, whatever. Anyway, I'll see you guys at 3:45. Thank you all for being here. Money market inflows. That's going to be very important. Money market inflows. So we're going to see if those money market inflows are green or potentially red based on the outflows that we get. And then we'll go from there. All right. Thank you, everybody. See you guys on the market close. Bye, everyone.